Okay, great. Well, good morning, good morning, good morning, everybody. Today is the big event. A lot of us have been looking forward to this, and what we're going to do today, we're going to take our time. Okay, we're going to go ahead. I don't want to, in any way, shape, or form, rush through this. What I want to do is, of course, we have special guest speaker today. Which is Lance. Every once in a while, you may hear him breathe into the microphone there. and Lance is with us, hailing from Texas. He's been a student of mine for just under 10 months now. Yes, Thule, absolutely. And so what we're going to do is it's going to be an interactive presentation both with me and Lance and then yourselves today as well. So we're going to take our time. I don't want to go ahead and rush this. It's important. We've got a lot of things that we want to cover. We're going to be talking about different topics, which I'm going to show you in just a few minutes. Basically, this presentation is the culmination of hundreds of different questions that were then narrowed down. We got rid of all the duplicates, merged the questions, and came down to approximately 47 questions. I'm sure there'll be, of course, new ones that will pop up during the presentation and that. We even did a little bit of last-minute merging there as well. So we're going to go through those questions in different categories, and then we'll kind of see where it all takes us from there. Okay, and like I said, I expect that this could be several hours long. We're going to go ahead and yes, there is a microphone open. Both Lance and I should be able to go ahead and speak simultaneously here. Actually, you can have up to 10 microphones open, Steve, and there's only going to be 2. You're probably just hearing a little bit of Lance's breathing. He's still getting used to the microphone. Of course, he's not a commentator here. He's, a student just like you, and so he's getting used to that. Is anybody else hearing my voice garbled, or is my voice coming across okay for you? Let's just do a little sound check there. Testing 1, 2, 3, 4, 5. Okay, I'm hearing all fine, crystal clear, perfect, great, clear, sound check, fine, 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 fine. Okay, looks like it's just you then, Steve M there. So, thanks, Nick. Yeah, you guys are funny. All right, good. Well, so you will hear, of course, another person in the background, and basically we're going to go ahead and try to have some fun with this. Again, Lance hails from Texas. He's been with me since January of this year. He is a small contract trader. We're going to talk a little bit about his journey. Well, we're going to talk obviously a lot about his journey, and basically, but in a nutshell, before we even start today, he came to me after a lot of failed attempts elsewhere. And he's a small contract trader, but throughout this year, he's been growing his ability to trade size. So we're going to talk a little bit about that, the kind of trades he focuses on. I'm going to be interjecting my commentary throughout this presentation. And we're also going to try to fit in what's important too, because a lot of you have been with me since, before power charting was power charting. Some of you have been here now for years. And so I think this is really good too, because more and more people are coming of age where they're finally growing their accounts. They're having their ability to trade more size. And I want to put out a couple of warnings, because even though this is the small lot trading course, eventually you start to get to the point where you can trade more contracts. So there's just a couple of little caveats I'd like to put out there, along the way as well when the timing is right. So with that said, what we're going to do first here is start off with moving here. I want to go ahead today because we have people that are brand new with our family, and then of course, many of you have been here for a very long time. But well, this is all really important. And you guys know I'm a real stickler for this, because a lot of people say, Rob, you make it look so easy. As Mel says, everything I touch turns to money. Our friend Paul V here, very graciously calls me Mr. ATM, because it's like ringing the cash register when I trade. People see days like Friday, for instance, where I take 6 one-contract trades, boom, $550, et cetera, et cetera. But the reality is that we're going to talk about a lot of things today. There's still not specific recommendations for any of you to just blindly take. There is, of course, large potential for rewards, but there's also a large potential risk. And I have to focus on that game because those of you that have been with me for a long time know. People start getting lulled into just taking trade after trade. Eventually, they just stop taking conservative trades and all of a sudden start going after my very aggressive trades, and then they realize they're not prepared to do that yet. So I like to go ahead and remind people of that. Of course, don't trade money with you can't afford to lose. Websites need a solicitation or to buy or sell equities, futures, options, etc. I know many of you have seen this hundreds and hundreds of times, but I still think it's important because we do have new people to our family. Okay, you should carefully consider whether a trade is suitable for you in light of your circumstances, knowledge, and financial resources. Absolutely consult your registered financial advisor and your risk trading plan before ever investing in a financial instrument. So I want to go ahead with that, just leave it up there for just a second more, move on and talk about what we're going to discuss today. Okay, we're going to talk about some of Lance's general background, information, and perspectives. And again, these were your questions, gang. Now, for those of you that are brand new in the last couple of weeks, you did not actually get to contribute to this question process. But the good news is we already had just under a couple hundred people, as was, who were able to contribute. We narrowed it down from hundreds and hundreds of questions down to, we got rid of all the duplicates and merged some questions. So we were able to get it down to about approximately 47 questions there. So many of your questions will be in there, and if the timing is right when you're asking a question during our presentation, we'll go ahead and we'll stop and just answer questions on the fly. Do just please keep in mind that there is, a lot of things we're going to be going through. Some of your questions may get answered, at some point during this. So do note here, I'm going to talk a little bit about general background and Lance's perspectives, instruments to trade, trading times, account setup and management, discipline, trader growth, some setups, entries, exit points, stops, some scaling, general Q&A. Okay, so we've got a couple, lots of different topics here that we've kind of broken this down into. Okay, so with that said, let's go ahead and move on to the next page. Keep in mind, we are going to go ahead and have breaks here today. We're going to go, like I said, the last presentation I did ended up being 5.5 hours of recorded time. Okay. Yes, Colette, for you I will. We had 5.5 hours of recorded time, and so about 6-hour presentation. This time, we're probably just going to take more frequent breaks and see where the day takes us. Okay, which is one of the reasons I wanted to kind of do it the way we did it today. So, Lance, we're going to start with question number 1 here. It says, what is Lance's total trading background, length of style, variations, etc.? Now, Lance, we've got the written version here, but I'd still kind of like for you to read it and talk about it a little bit, if you could for us, please.
Sure. I started trading stocks about 13 years ago, and it was just mainly, for me, just somewhere, well, just put some money somewhere and see what happens. I mean, that's kind of the way I started. Of course, once I had no luck with that, I moved on to options and using trying to use a system, mainly using Elliott Wave and fundamentals. And then I moved on to VSA and did a little better, but I never really consistently ever made a profit trading. I mean, it was just up and down, up and down, up and down. Once I finally got into Rob's room and saw his use of the multi-time frame analysis and the VSA, which I had previously learned already, and using those things together, things really made a lot more sense to me at that point.
Okay, and Lance, and we're actually going to talk about, I think, a little bit on the VSA on another page. So we won't get too much into VSA. VSA, though, stands for volume spread analysis. And by the way, several people are saying good morning to you, Lance. I know this is your first time kind of being up there on stage. I appreciate you going ahead and being here with us, as a student who's actually giving back. Lance has also given back in other ways. If you guys recall, he's alerted me to possible trades in the past in the overnight session, which have resulted in me going ahead and making some trades and making some money for those of you that were there in overnight session. So Lance has really been growing with me, and he was willing to go ahead and step up to the plate because he's had some great successes here and share this information. So So Elliott Wave and fundamentals for you basically didn't work out. I have a feeling that more than a few people that have tried to trade with Elliott Wave and fundamentals are in the same boat, actually. And from a VSA perspective, we're going to talk about how I use VSA a little bit differently, and that actually helped you out with the VSA perspective as well. So by the way, these answers were Lance's answers. I did not type those answers, just in the interest of disclosure there. So Lance, as far as your trading plan, let's talk about what's in your trading plan there a little bit. Question number 2.
Okay. Yeah. First, I'll go ahead and say good morning to everyone out there. I didn't really get a chance to say good morning to everyone, but good morning. As far as my trading plan, I mainly look for the retracements back to support and resistance. Those are the ones that really work the best for me. The thrusts, pullback thrusts are great trades. And just here, not in too recently, I've been using the trend continuation trades using the MTF indicators. And I really try to stay away from the counter trend trading and very aggressive trades altogether. It's just those are the ones that if I have lost any money, those are the ones I lose money on.
And did you have, Lance, basically an inkling? Did it fit your style? Was it like Albert, for instance, one of our other students here, who's always very gracious with sharing his stories? He really likes to counter trend trade. I mean, that's his thing. I've got another student here, Brian, who really that's his thing, counter trend trading. Was that your thing before meeting me, or did you like to stay with the trend beforehand, and did that change for you as you were here, or did you just see the pearls of wisdom as far as counter trend trading, how it can really zing you, through the journey with being here? What kind of was your background on that, and where did that lead you to as far as being with me?
Well, I tried to trade with the trend, but I didn't really open my eyes far enough out to see what the trend really was. And when I thought I was trading with the trend, it was really counter trend. But also learning the VSA analysis the way you're usually taught. A lot of this, when the signals come up for VSA and they break, I mean those are the ones that you're looking to counteract that signal in the opposite direction, and in reality it's really a sign of strength.
Right. So what he's referring to there is one of the methodologies that Lance came from, which several of you have heard me talk about here, in the VSA methodology. A lot of times it will give signs of weakness in an uptrend repeatedly, and so Lance would find himself taking a trade against that, and actually, of course, for those of you that are familiar with my work, I actually say, no, gang, but look, my indicators are saying, we need to actually be buying this. VSA stands for Volume Spread Analysis, okay, and it's another methodology used by a colleague of mine. What I've done is gone ahead and tried to demonstrate how it could actually be more applicable to day-to-day trading, because many of you have come to me and said, Rob, I used to use this system. I can't consistently make any money. In fact, that's what Lance was actually saying here. So what I've tried to do is show this. In fact, for those of you that are familiar with Tom Williams, you know that he has actually officially endorsed me. The founder of VSA has gone ahead and actually endorsed me as the only person who he recommends. In fact, they have now integrated my work fully into the TradeGuider product, because they've realized, wow, this was the missing link. This is what we needed to make our stuff work better, is Rob's work. And so now you've seen that. For many of you have gone ahead and seen that now. So it's fully endorsed. There's a video out there with Tom endorsing it. First and only person he's ever endorsed in 20 plus years. So the point being is, what Lance is saying is that's the methodology he came from. He couldn't consistently make money with it. I've shown him how to look at it differently, and that's really helped him out. And of course, a lot of that focuses on trend trading and such. Okay. Lance, we'll go ahead and move to the next question then. Unless whenever you want to add anything more to any of these things, Lance, you feel free to jump in, because this is about you. as much as anything. What this is designed to do today is help people understand where a real trader who is struggling before they came to me has started to turn that corner, and in a situation like yours, where then you actually started making profitable trades, and then got to the point where you can grow your size and take more of my types of trades. So it's important to see some of these different things as we go through them. Let's see here, Nick. Oh, okay. Nick, I'm sorry, Lance. Nick is asking, do you do scaling in from the? Oh, wait a minute. Okay, Nick, it's way too early for that question. This is general background perspectives. We're going to talk about scaling in the future here. Remember, gang, we've got different sections coming up here. We've got general background and perspectives, instruments to trade, trading times, account setup and management, discipline, trader growth, setups, entry stops, scaling. Okay, so um, just keep that in mind there. Now, one thing I do want to ask, though, in the interest of trading, since we did talk about trading plan here, one question that we could ask, though, is do you have scaling in or stop losses as part of your trading plan? Have you factored that into your trading plan? So in other words, really, is your trading plan written? Do you define the types of entries and exits and stops and scaling strategies into your trading plan? Is that in your trading plan there, Lance?
I do have, I mean, as far as all my entries are pretty much going to be the type of trades that I take. As far as my stops and exits, and they're not really defined out. I mean, it depends on what kind of trade I'm taking and what the situation is where I'm going to have a stop set. But I do have stop. I mean, I do have a stop in mind to where I'm going to be looking to get out of a trade.
Sure, and we're going to talk about that more as we get into later in the sections over there. So yeah, just keep in mind, for those of you that didn't see that earlier, we do have kind of a methodology we're going through here today, starting with some background and working our way through. Okay, so yes, Michael P, absolutely. And so let's go ahead and go to, I'm sorry, number 3 there. Did we answer that one? I don't think we did yet. I could be wrong. Did you use any other methods besides mine, or are you currently using any methods besides mine? We know what you used to use, and it looks like what you're saying is you're only using mine at this point. They're the only ones that work for you consistently. Is that correct?
Yes, that's right. I don't use any other ones other than yours.
But you've gone ahead and used other things. We talked about VSA, we talked about Elliott Wave, we talked about fundamentals. Is there any other, perhaps even without naming names of companies or groups or whatever, any other methodologies or anything? Did you try several before coming to me, or was it just Elliott Wave, fundamental trading, and VSA?
That was pretty much it. I mean, there was other things that I kind of looked at and
Oh, sure. There's other things you flirted with, but they didn't help you make money, is what you're saying.
right.
Okay, okay. These were the big ones where you spent the most time overtime on, but you did work with other things. Okay.
Exactly.
All right, great. And what mistakes did you learn from? What mistakes have you learned the most from in the background? This is going to be an important one, so I like this question that somebody asked. And again, all these questions, some of you will probably recognize. These are either verbatim your questions, if they were original, or words from your questions are in there, because these were your actual questions, that we went ahead and uh, talked about, so, or that were that you guys sent in. So, what mistakes did you learn most from then? Let's talk about that. Yeah, I see your written answer, but let's read it and then talk a little bit more about that.
Sure. I always, I mean, I'd always want to take the trades that you took all the time. I mean, and even when you would take the aggressive trades, I mean, I'd want to take those too. I mean, and those are the ones that, I mean, as far as with my knowledge level and my account size, it would really get me in trouble really quick. And at that point, I'd be looking to say, okay, what do I do? Do I get out? Do I just take a loss? Or, I mean, it just puts you in a bad situation.
Absolutely, and this is the thing that I try to impart, and those of you that have been with me for a long time have heard me say it over and over. And now you kind of laugh and chuckle because it seems to be a rite of passage. Because what happens is, in fact, let me go ahead and actually pull up a little, because this is an important topic. All right, you're hearing from Lance the same thing that it seems like a lot of people have to go through as far as a learning curve. And what that is I have, of course, conservative entries, conservative aggressive, and then basically very aggressive. Okay? And what happens is I go ahead and I certainly, yeah, absolutely, JJ, no problem. And then we'll have you go through it and, kind of index it. And the basically, of course, I also do these kind of trades, okay? Because this is how I make my full-time income, right? So I'm going to go ahead and do these kind of trades too. But as a small lot trader who's just jumping into the fray, it's people need to learn to walk before they can run, and crawl before they can walk. Well, what happens is this. Usually, most people, most people will come in here, they'll back off at first and even do the other kind of category here, which is no trade. They'll just sit in there and can everybody hear me okay still? Okay, yeah, it looks like it might just be one person then. Bruce, it might just be you then. If you lost volume, everybody else can hear me okay. Okay. So what happens is that people come in here initially and kind of sit and observe for a day. The problem is that's usually because they've come from a background where they lost money so much in other simulator-based trading rooms, or just their own strategies. They're so jaded. They're not used to seeing somebody like me who actually, uh, has, well, here, I mean, look, it's almost in a couple more days. Today is the 18th, right? In another, what is it, 3 more days, 4 more days, 4 more days, January 22nd, 2010, I haven't had a losing trade in this live trading room since January 22nd of 2010. So in 4 more days, it's going to be 9 months since you guys have watched me take a losing trade in this room. 9 months. Well, so the problem is with that, okay, is that then very quickly people want to go then from, and they realize, oh wow, this guy is real. He actually does trade real money, and wow, he makes money. That's great. Rather than wanting to learn and understand the difference between conservative, conservative aggressive, and very aggressive, they just immediately want to do what, gang? What do you think? Just start taking every trade, okay? It's human nature because a lot of you have come from a background, and I'm seeing, yep, trade, 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 yeps, do what Rob does, exactly. So the problem is when you do that, you're being reckless because you're not giving any appreciation to the right that I've earned over time to be able to trade. And you just heard from Lance. Okay, and you're going to hear more as we talk about this later. Lance should have been here. He was there, but he also then did these, and he quickly learned that basically, okay, if you're a smaller contract trader, you have to be very judicious in how you execute trades in these areas. Certainly, especially, very aggressive, okay? And so the reality is that but people don't. They just come in. I see it all the time. I try to warn people repeatedly not to do that. They shouldn't be doing that. I want people to sit down, listen, and learn. But they want to go right after it. I can't emphasize this enough because they just don't listen. So I figured if I say it, enough times, eventually at some point, enough people will have aha moments. So the point being is Lance, even now, by current standards, even though he's grown his account, and even though he could trade a lot more contracts, I believe it is, than he could trade when he first met me. That's right, Lance, correct? You were able to trade
Yes.
more. Yeah. And so you've grown the right and the ability. You still sit there, and that's probably why you've gotten to the point now where your account has grown and you can trade more contracts because you finally learned, and I think that's what you're saying right here. What mistakes did you learn most from? Taking very aggressive trades and conservative aggressive trades that you weren't ready for. Now, I know that your current plan, and we're going to talk more about that later, your current plan does allow you to go ahead and take conservative aggressive trades, but the very aggressive are still basically, and heavy counter trend are off the table, correct?
Right. I mean, on a very aggressive trade, for me to actually take one of those, it's going to have to be in an extreme limit. I mean,
Yeah.
it's
Like even
um,
the max range extension where it's like really way overdone and it's just all but quote unquote guaranteed to retrace or something like that.
right. I mean, there'll be times when you're taking a very aggressive trade, and I mean, you can, you're putting contracts in, and basically, I'm thinking, okay, I'm going to wait till this thing really gets extended out. I mean, if it happens, it happens. If it doesn't, it doesn't. I mean, it's just
See, and that's the difference right there. If it happens, it happens. If it doesn't, it doesn't. Okay? That right there is the difference between a successful professional trader and a junior trader. Okay, I see a couple people saying, uh-huh, I agree. Okay, that right there is a huge difference. Okay, whereas the average junior trader comes in and says, "Oh man, I'm gonna watch Rob go and make money on this, and I'm not gonna make money. I'm gonna chase into it. I know it's a very aggressive trade, but I want to, make money on this trade just like Rob does." They don't sit there and say, "If it happens, it happens. If it doesn't, it doesn't." How many times, gang, how many times have you heard me sit there and say to you, it's going to have to be my way or the highway. It either needs to come to me or the trade is not there. I've said that hundreds, exactly, countless, many, yes. Okay, I say that all the time. Okay, now, and Evelyn says almost every day, and that's probably true because throughout the session, there's at least one time where I'm not willing to take a trade until it goes ahead and really gets to my area. So exactly, the point is, you hear me say that quite frequently. Okay, and I have the ability to put in lots and lots and lots of contracts, but you always also hear me say this: just because I can doesn't mean I should. Okay, so Lance has started to finally learn the art here and understand this concept. All right, and this is a huge point from my perspective, and that's why you need to hear it, gang. Okay, he understood, he learned, he finally learned that taking aggressive trades, okay, and at the time, conservative aggressive trades, when he wasn't ready, okay, for his knowledge level or account size. This is something I try to go ahead and get through some thick skulls here, okay? Not everybody, most people got it. I'm just talking to a small handful here, okay? But this is something that we'll go ahead and uh, uh, Paul, that's pretty personal there. But basically just understand that what you have to understand here is that he understood eventually his limits there, um, where he went ahead and came to that point where he said, "Oh wow, okay, I keep making money consistently on this, this conservative trade. So, but then every time I take in either these or particularly, which he identified, these, bad things started happening to him." Now, of course, the problem is that on a lot of the very aggressive trades, and I'll bet you, Lance, you experienced this as well, um, that you went ahead and realized that some of those very aggressive trades you also made money on. It wasn't just the conservative or the conservative aggressive trades. You were probably making some money on some of those very aggressive trades as well. It's just that one or two of them ended up zinging you. Is that right?
Oh yeah, I made lots of money on
Yeah.
those very aggressive trades.
Yeah. See, and that's the problem, gang. That's the problem. Okay. People, what they do is they go from taking conservative trades to going up to want to play in these areas. Now, I saw Trish went ahead and said something that was very smart. She said, "Well, I've been taking it, but I've been only doing it on the simulator," and I'm going to talk about that later in the presentation here. But I do want you to understand the big issue here is, first of all, even learning what these things are. And I'm saying this because for those of you that have been with me for years, this is old hat to you. But we also have numerous people that have joined in the last month, 2 months, 3 months. You know, our family has grown very fast here with a lot of great people, and a lot of people's referring their friends. So we've gone ahead and, we have new people that need to still understand this, or maybe they're in the process of going through this right now, and I hope that I can jumpstart their education by getting them to understand that conservative aggressive and even more so very, very aggressive trades should be things you should learn about, understand, but maybe you should sit down with your registered financial representative and or your broker and realize and discuss, are they really right for you being brand new? And let me on this point right now, let me say one other thing, because I've often heard people say in the past, really unintelligent people or uninformed people at a minimum, say, well, if I had a big account, I could go ahead and make money consistently too. Now, we all go ahead um, and sit there and have to reflect. We need to look no further than the book that I referred all of you to last week, which was Victor Niederhoffer's book, The Education of a Speculator. Okay, and as we heard, Victor had $100 million plus accounts. All right, and basically went ahead and blew them up overnight because of bad trading decisions. Okay, and so again, the book is by Victor Niederhoffer, and it's called The Education of a Speculator. So the bottom line is, you can go ahead and have lots and lots of money, and all that means is if you make stupid mistakes or junior trader mistakes, you're just going to lose lots more money. Okay, many of you recall, last year we had about 3 students that joined in, each of which had lost over 6-digit figures apiece last year. You remember that? They lost 6-digit figures apiece, going ahead and doing what? Counter trend trading the rally to the upside. Okay, these guys had big accounts, lots of money, and what did they do? They kept counter-trend trading the rally, counter-trend trading the rally, counter-trend trading the rally. They started shorting stocks, ETFs, futures contracts, anything that they could afford, and throwing money in, and it ended up badly for all 3 of them. Okay, the point is their 6-digit losses are bigger than a lot of your accounts. And so a lot of people sit there and say, well, if I had a big account, I could have gone ahead and made money. Well, I'm here to tell you firsthand that is a very unintelligent, uninformed statement. Because, as I said, go read Victor Niederhoffer's book and find out how fast you can lose $100 million. Yes, hindsight is a wonderful thing, Mel. Exactly. And so that's really important for people to understand. Like I said, at least there's a book about it that at least some of you can go ahead and pull out. You don't even have to read the book. If you just go to Wikipedia, you can read Victor's bio. Okay. Well, and Tim, we're going to talk about that because that happened to Lance. Lance says, I think when traders have larger accounts, they get sloppy with their trades. That happened actually to Lance a little bit here, and we'll talk about that at one point. And so the point is that just because you have a big account doesn't mean you're going to make big money all the time. Okay, I still have to, with my account, go ahead and say it's my way or the highway. You still hear me say that. just because I can put, a lot of contracts on doesn't mean I should. That's one of those learning curves that each of you will go through as you try to migrate from conservative trades to conservative aggressive trades. You'll want to, you taste that blood for the first time. How many of you here have reported to me, because I've seen it just in the last 4 weeks, that either you've had your best week ever in the last month, or you've never experienced like you have since being here with me, where you've had so many wins in a row? How many of you here have gone ahead and said that to me? Because I see it like every week. Somebody's saying, I've had my best day ever, I've had my best week ever, my best month ever, the maximum number of trades in a winning in a streak. Yep, the names are flying in there. So well, thank you. And by the way, Tony K, good morning. Did get to see you earlier there as well. And Scott, I think you joined in a little bit later, so good morning to you as well. And Carrie, JJ. So the bottom line is lots of names in there saying the same thing. Okay. And that's right, Ed. Exactly. You too. So I know you were really excited. So the point being, and that's just in the last month, and of course in the last several months, I hear it all the time. I've never seen so many wins in a row, and they weren't talking about me. They were talking about their own accounts. Okay, the point being there is what happens then is you run the risk of getting so many. Your confidence grows ahead of your skill level and account size, and then people want to jump to this. Okay. Am I clear about that? Does everybody understand that? That is the risk that every one of you is going to challenge, is going to face in your growth with me, because what's going to happen is you're going to go ahead and get that Superman or Wonder Woman complex where it's like, wow, this is it. I finally get it. Wow, look at this. I used to win one, lose one, win one, lose one, win one, lose five. And now I'm consistently going to make you money. That's it. I've cracked it. Rob's helped me see the light. It's done. It's over. Right, Lance? I mean, you get that point. You get that euphoria where, okay, nothing can stop me. I'm bulletproof. And then you want to jump in there and make money on all these things. And so then all of a sudden you eventually have to have the reality check that your skill level or your account size. And you eloquently went ahead and said that here. And this, by the way, again, I want to emphasize, these were Lance's answers, not what I told him to put. And he says, taking very aggressive trades and even conservative aggressive trades that he was not ready for with his knowledge level or account size. Every one of you will likely go through. I'd be really shocked. Only the most conservative amongst you won't necessarily go through this phase, and then you'll have other learning phases and challenges, I'm sure. So did this make sense to everybody? The risk is having too much success too quickly and going ahead and not taking the time to understand those trades better before, because after having the success in the conservative trades, that you'll go ahead and want to immediately start jumping up to the next level to make more and more profits. Okay, because obviously there's less conservative trades than there is conservative, aggressive, and very aggressive trades. When you add in the conservative, aggressive, and very aggressive trades, basically, bottom line is, there's going to be that learning curve. So I really wanted to spend a lot of time on this particular comment. Okay, because during the trading day we can't focus so much on it, but that's what today's about. Today's not, we had great trading again on Friday. I've had a great day, week, month, year, throughout this past year here. So, hey, today we're going to focus on the things that we need to think about to drive us to a new success level. These are also things as you're trying to develop a risk trading plan, then that you should be keeping in mind. Okay, so.
Hey Rob, also I'd like to add,
Yeah.
it's, I mean, when you're trading in any of the trades you take, conservative, aggressive, and very aggressive trades, I mean, you make it look so easy because, it's like you just have, you know exactly where to place your entries. But the one time that doesn't work in a conservative, aggressive, or aggressive trade, I mean, it gets ugly really quick. And
Exactly. And
most of the
so
time your trades work so fast, and it's like you want to do them because it's like they're going to work. But the one time it doesn't go, and when you start add contracts in, 10 contracts or whatever. I mean, at that point, it takes a lot of contracts to get that cost basis to where you need it to be to get out of that trade, and then it doesn't work
exactly.
out.
And so the lure is most of them work so fast. But
Right.
as everybody here, and including yourself, as you know, Lance, always hears me say, look, gang, I'm not trying to win the battle. I'm trying to win the war, and I don't want to lose even one big battle. So I'm much more conservative on those trades. I always make sure, Lance, I have that backup plan because inherently, the more minutes, the more hours you're in the market, the more of the likelihood of a big event happening. Kind of like back in May, of course, the flash crash, for instance, or of course, how many times have we seen in the last couple months currency announcements, devaluations in currencies? We've seen the news announcements about the bond ratings, the debt ratings going down in different countries, and we've had these wonderful spikes that gave us great trading opportunities. But the point being is, what happens if you're in before that news announcement comes out, and then it starts moving against you? So it's so important to have the backup plans if you're going to stay in the trade, or a real tight stop management protocol if you can't. And now the good news is today, gang, one thing we're going to be doing, we're going to be going through a scaling calculator today and just giving you some ideas and some examples of things to help you understand scaling. Because, Lance, I think you'd agree, one thing people don't go ahead and understand is scaling. They don't go ahead and um, uh, they don't understand. They don't even know how to put scaling in. And so I've tried to show some examples where people go ahead, and I see people, if they've got 10 contracts, they'll put like 6 in to start their trade, and then it goes down. They'll put in like another 3 here, and then all of a sudden it goes down to here. They got 1. Well, guess what? That's completely the opposite of how it should be, isn't it?
Yeah.
Because really, I mean, from my perspective, from Rob Hoffman's perspective, because if you put all your bullets in early, hoping for the big win, you've got no backup down below. We're going to take a look at this, gang, at this whole scaling concept, some ideas for you as we get into this a little later in the presentation. I'm actually going to pull up a scaling calculator, and we're going to go through it. And Lance, when you first started with me, you only traded a handful of contracts. Is that right? You were basically a very small contract trader. Is that right?
Yeah, I started with a very minimum account to where it was, and just
Yeah,
started with one contract to trade.
that's right. And now you've gone ahead and worked your way up to the ability to trade 30, 40 plus contracts over the course of the last 9 months. Is that correct?
Yes. Uh-huh.
Okay, so to give you some perspective there, Paul, to answer your question. Okay, so and yes, I agree very much. Uh, so you were trading what, 2 contracts, 3 contracts, 4 contract type trades early on there back in January. You remember approximately where you were at there?
Oh yeah, I mean it was, one to, I think the max I could trade was, I'm wanting to say it was like 5 or 6 contracts.
Yeah. Okay. So there you go. All right, and so now being up there nicely to 40 plus there is great stuff, and nice work. And so the so let's go ahead and keep going here. I hope that I spent a lot. We're going to talk more about scaling, of course, later, as you saw. But I hope that this goes ahead and really resonates with people, because this here, what mistakes did you learn most from? I can't emphasize that enough. I try. I always try. But as you know, Lance, you said it's like a drug. You see me making money, and I make it look easy, but that's because I've been doing this for many years. I'm very good at what I do, which is why everybody should be here. They shouldn't be here to be like a trained monkey. As you know, Lance, I'm very against that. They shouldn't be here like trained monkeys just taking trades I take. They should be learning from me. What an opportunity each and every one of you has here to go ahead and learn from one of the few people that can actually do it. One of the few people who can trade live, makes money, and is willing to teach. Not these traders who can't trade their way out of a box, so they open up these simulator trader education rooms and have their little hypothetical result statements buried deep within their websites so that they've met government requirements but can't trade their way out of a box. And so you end up going and seeing loss after loss, or they'll win one, lose one, and they tell you all these things about, oh yeah, 50% losses is okay, etc. Okay, I'm one of the few people who can actually do it and has done it here right there live on the screen. You guys have a huge opportunity to learn. But if you're going to sit here like a trained monkey, and this is to the new people, obviously, those of you that have been with me, I'm preaching to the choir because you guys know this. But for those of you that are brand new, I don't like trained monkeys. I want people to grow with me here because we've had a lot of students who just in the last couple months, like with the Japanese yen, messaging me, calling me at night, like when the Japanese yen was dropping and giving me as one of my setups. I came back to the room, and between the two different nights over the course of that week where the Japanese yen had those trades, I made about $3,800, $3,900 there between those two nights right there in front of you guys because you guys called me back to the screen and said, Rob, I got one of your setups here. Okay. Yeah, exactly, Chris. It was great. So for the people that were logged in, but that was because you guys were learning and growing and then contributing back. That's what I want everybody to do. So, and part of that, not going and just jumping after, chasing after conservative, aggressive, and very aggressive trades. And frankly, not jumping after conservative. Make sure you understand what you're trading and why you're trading it, and does it meet your knowledge level and account size. And we're going to be able to show some examples of account size here a little bit later as we show scaling stuff. Okay? And so, Phil, I'm not sure what the last part of that a question means. What was his accountant? I don't know if you mean account at, but like I said, we're going to go ahead and be very. I mean, it's a little bit personal to say, okay, my account was whatever 2,000, 3,000, 4,000, but he was basically the maximum number of contracts he was able to trade was 5 contracts. I believe it was 5 or 4, whatever he said. Now he's able to trade many times that, about 8 times that plus. So he's really earned the right over the last 9 months to grow. I mean, he has grown. He's learned a lot here, and he's made some pretty silly mistakes during that growth, and we're going to talk about those because he and I both laugh at them now. Not so funny, though, as he was growing his account and starting to make a new level of mistakes because there initially you have the small contract mistakes, then you're going to have the big contract mistakes. Okay, and Lance is finding his growth. Let me just give a quick example. Lance had a small account there where he could only trade a handful of contracts. He started growing and growing and growing. And he went ahead then, and eventually he forgot that he had set a manual stop loss in, because with Infinity it's automatically 60% of your account. Lance actually said, nope, that's too much. I want to go ahead and have a finite level. Here's the level that I want. Well, the problem was, as he kept growing and growing and growing in his contract size, he went ahead and found himself forgetting, because it's very easy if you think about it, gang. There's no daily announcement. There's no daily announcement that says, hey, here's your daily stop loss limit. And so what happened was he forgot about that. So he did a large trade one time, okay, a larger trade. So it moved a few ticks against him, and ended up stopping him out with that small stop loss that he had because he forgot he had that. He raised his contract size up nicely, but he forgot about going ahead and raising the manual stop loss. So a few ticks against him, it blew him right out of the trade. Guess what? One tick later, it turned right back around and went right back down. Isn't that right, Lance? That's what that you talked to me about. So the key was that you forgot about your manual stop as you were growing this bigger and bigger account to trade with. You forgot that at one point in the future, you had gone ahead and made this agreement with the broker for a smaller risk loss and never upped that risk loss as your account size grew, and that it was a sore learning lesson for you as it turned right back around one tick after you got blown out. And then one of those situations that happened to you?
Yeah, it was just immediately after I got blown out. I mean, it was a guaranteed trade to work, and you don't really realize when you have a larger number of contracts what little dollar amount $4,000 or $5,000 is. I mean, it's just not very much as far as any ticks that go against you. It's really quick.
Exactly. And so basically, what I'm saying here is, gang, that okay, we have the small contract learning curves that are going to have to be gone through, and then as you grow your account, there's going to be a new set of things that you're going to have to worry about. That is one of them. Like I said, forgetting about agreements you've made with your broker to keep your stop losses really small. But if you're trading a bigger account, how quickly you can then go ahead and be blown out in a situation like that. So point being is that there will be new learning curves along that journey. If anybody thinks they're going to be super trader from start to finish in one day, in my opinion, you're sorely mistaken. However, give me a second here. Sorry, had to get a little sneeze in there. However, though, if you go ahead and we can see from Lance that he went ahead and was able to grow. Yeah, there you go. Exactly, Steve. Maybe 2 days. Maybe in 2 days you can be a super trader. Okay, bottom line is I didn't have a Rob Hoffman to help me, so it took me years. Now Lance has seen the growth. He's seen the development himself. He's seen his account go ahead and really grow. I think we're going to get to that a little bit on some of the slides, or another slide. But he's watched his account grow, and that's because he's been learning. He's been working through. He understood quickly before he did something too silly about the aggressive trades and the conservative trades. He quickly fell in line and understood, okay, you know what? I need to learn more about these things before I trade in them. And I think that's a key to success. Okay? Now, with that said, let's go ahead and move on to the next set of questions here. Okay. Um, let's see. The next set of questions here. Do you have a business license and tax benefits from it? Lance, if you just want to address you operate under sole proprietorship, but you will be looking to other tax advantages in the future. You just want to explain that just briefly?
Yeah, I mean, I've always owned my own business. I mean, I've always operated under sole proprietor license, and I'm real familiar with that type of situation. So that's just what I've continued to work under. But now that I'm consistently profitable now as far as in trading, I'll be looking at different things at this point.
Okay, and by the way, there was a question. I apologize. Again, the questions are kind of flying by there. I'm trying to catch a couple of the questions. Like I said, we've got this kind of format. We haven't even got through general background. We got a lot more to go, and that's why I said I knew this was going to kind of happen. That we were going to have a lot to talk about today. But I did want to go ahead and ask one question. Lance, did you have a strong technical analysis background when you started? Did you read books, understand technical analysis? I understand you really started out 13 years ago with Elliott Wave, which is pretty technical, and fundamental analysis, which is, of course, not technical. But how would you rate your technical analysis ability before you started putting money to work? Like, for instance, in my case, of course, I was, a teenager. And I actually started hand drawing charts and everything for years before I ever put my first dime into the actual stock market because I didn't have the money and I was a teenager. So I had kind of developed a technical aptitude at a entry level perspective before I went ahead and actually started in the market. How was your technical analysis background? When did your technical analysis background really kind of jump in knowledge level? And so how would you rate yourself as far as where you started and where you're at today?
Well, I mean, I always did a lot of reading as far as on technical analysis. I mean, I'm real familiar with the MACD, RSI, stochastics, volume. I mean, it's but really, I always looked at it in the general tenths of what everybody used it for. And once I've seen, the ways that you use it, it's just opposite. As far as my knowledge level now, you just use things completely different than what you were trained to think of it to start with.
Okay. Colette, does that help answer your question a little bit? If you have any other follow-up, let me know on that one. Um, and the so as far as, let's go to the next one here then, as far as questions. What is kind of your daily pre-trading routine? You want to talk about that for a few minutes?
Sure. I usually get up about 6 in the morning, and look at the markets and see what's kind of setting up. And then I'll look at it, and then I usually eat breakfast and get kind of ready and kind of get back in here about 6:30, 6:45, and then just I'll usually sit down and usually stop about 11 a.m. Then a lot of times I'll come back, if I'm around 1 p.m. and kind of look at the markets and see what's going on. And then also, in the evening when I'm kind of here at the house, I'll always kind of pay attention if there's news events that are kind of coming out in the evening, and kind of look at what's going on, and just see what's happening. But usually, for now, the mornings have all, at this point, or seem to always work the best. As far as just trading the mornings only now.
Yeah, and of course, from my perspective as well, occasionally in the afternoons, you probably see the same thing. You may find a trade here or there, but for the few times that you do, compared to all the times you run the risk of trading out of boredom, you go ahead and you found that the mornings really work best. And these are central times. Lance is in Texas, gang, um, and so just to keep those times for central time. So basically, Lance, he really focuses his primary trading, um, between 6 o'clock and 11 o'clock, and then he'll come back if he's around to just kind of see what's happening at the 1 o'clock. And I do the same thing, but what I find is very seldom do I end up getting those trades in the afternoon. I'll take some here or there, but the risk is, of course, trading out of boredom. If you actually sit there religiously and sit there each day for those last couple hours, at least for me personally, I go batty. And Lance, I don't know if you find the same thing, because sometimes, especially like in the currencies, watching paint dry, and then the S&P with the high frequency trading, the afternoons, the 1 or 2 times a month you get those raging moves compared to the other 17, 18 days a month where it's like watching paint dry or higher risk. I imagine you don't find a whole lot in that afternoon versus the mornings.
No, and that's for the main part. I hardly ever even, it's most of the time I usually am out of the house at 12 and doing something else by that time. So it's not something I pay much attention to in the afternoon.
Okay, and you now during your growth journey though, um, did you go ahead? Did you focus on that time frame, the 1 o'clock to 3 o'clock, and then you came to realize that that time wasn't for you, or did you always just focus on the mornings?
Oh no, I sat in front of my computer 24 hours a day when I first started. It was, you're just sitting there just waiting for something to happen, and that'll get you in trouble too because you want to trade.
Yep. Oh, exactly. Exactly. Okay. Very good. Yeah. Again, this question keeps coming up. I apologize. Lance is in Texas. This is Central Time Zone. Okay. So basically the same as what I'm using here, except that I don't. I said I'll look at the market after, if I'm here between 1 o'clock and 3 o'clock. I'll look at it at a very cursory view. But I will not go ahead and actually sit there and wait. Okay. Um, and Pete, yes, Lance is a great guy, and so that's why I figure it'd be great for you guys to hear it. And he's doing what a lot of people want to do. They want to go ahead and work on growing their accounts. They want to figure out, the problem is, okay, here's the problem. I've been doing this for many, many years, and people draw the assumption, well, Rob, you're at this super level. You've lost touch with like what it's like to be a small contract trader. Nothing could be further from the truth. I work with small, contract traders all the time. Okay, small lot traders, if for the stock gang, and I have never lost touch with that because I've always, all these years, dealt with somebody. So I've never lost that perspective. Make no mistake about it. And as I said, we need look no further than Victor Niederhofer. I could rattle off a lot of names, but we need look no further than Victor Niederhofer. You can blow up $100 million literally overnight. Okay? So just because you have built your account up doesn't mean you ever get the opportunity to just sit and let your guard down. And that's why you get to watch me over and over and over again uh, talk about these things and focus on them because they're so important. Everything I say, I'm saying this and we're doing this presentation for a reason. There's a lot to learn and grow from. Lance, can you tell me when you were a one contract trader or one and two contract trader, something along those lines, which setup did you find to be your most favorite? Because obviously I know you're trading now more of my setups, but before, what setup was it that you think maybe attributed to going ahead and because it's going to kind of tie into this, and maybe this will be your answer. I'm not sure, but and so maybe what we should do is actually take this question first, and then see if you can expound on that. So, what concept has contributed most to your trading turnaround? Let's take that first and talk about your answer a little bit more here, and then we'll go ahead and I want to give you that second part of that question.
Sure. As far as the big turnaround for me was, I understood VSA very well because I'd studied it for so long. But, until I saw it used in an opposite way of what I actually was taught, that's when it really, it really shows, what's really going on in the market, I guess you could say.
Okay. And just as an example of what we're talking about there, gang, let me just pop this up for you. Basically, what I'm looking at for VSA is, okay, see right here, these red signals? Does everybody see these little red triangles pointing down? Okay, those are generated by a software called TradeGuider, aka volume spread analysis. Okay, and what happens though is traders will often go ahead and use these as signs to go ahead and just, basically what happens is if it's red, you're looking for your areas to short. If it's green, you're looking for opportunities to go long. Well, guess what? The problem with that is in a downtrend, you're going to get lots of green arrows, right? Okay? And in an uptrend, you're going to get lots of red arrows. Okay, so the problem is this is very conducive to traders who want to trade counter trend, which, as you know, is a no-no. What I go ahead for me, what I like to do is use VSA in the opposite fashion, which is when it gives red signals and my indicators give green signals, basically, in other words, the green light to go long, and we trade above the previous arrows that were generating signals here. So you see, this is a sign of distribution. This is a sign of distribution. People will be looking for shorting opportunities, and that's what happened. Okay. Yeah. Okay. Stephen F. here from the UK is saying the same thing. He's saying I'm 100% right. That was his downfall. So. Stephen, completely understandable. This is why Gavin and Tom and everybody are out there now integrating my work into their software. They realized, that they needed to do that for the future because too many people, that's exactly what happened. Green go long, red go short. Well, the problem is as soon as you get into a trend, bad things happen. But when we are in a trend and my signals are giving tone and lock and fire, and their signals are saying, this is an opportunity to go long, that's actually an opportunity to go short. So in other words, when their signal effectively, when the sell doesn't, or excuse me, in this case, the buy doesn't buy, I look for an opportunity to sell. Okay, same thing in an uptrend right here. When the sell doesn't sell on their indications, my indications say buy, that's an opportunity for a long. And I've taken those trades here. So the point is that I'm bringing something different to the table. See how in a downtrend you're going to keep getting greens in a red because there may be some short-term distribution taking place there. Okay, um, and uh, but what will happen is you're going to get the sign of distribution, sign of distribution, sign of distribution, and the problem is the average trader will come in short, 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 get blown out, and then it finally rolls over. Well, in my case, I look for those failed signals, if you will, those signs of weakness in my indicators, though. So basically, I'm going with my indicators and waiting for theirs to fail. In summary, and we're not going to go too much into that, in today's session here. I've certainly got, the other ways to teach about that, but today we're not going to go into that too much. But that's what Lance is talking about there, gang, is this opportunity to see things completely the opposite. And once he realized that, and Stephen's saying the same thing in his case, Stephen F., it can change the way you think about things. And so that's what we're talking about. Now, let's get back to part 2 of that question then. And maybe this will answer the question, was this then the trade that you like to take with 1 or 2 contracts, or what was your favorite trade that, what single trade would you say most goes ahead and has contributed to your growth in your account, in your opinion?
Well, it's definitely the retracements, the wide range retracements. And those retracements, and if you're looking at VSA, I mean, it's always, with the volume and the wide range movement, it's always going to be usually on a sign of strength or weakness that you're entering those trades on. I mean, so that's, when you get those wide range back to the support or resistance areas, I mean, those are the ones that work best and the quickest.
Okay, and so an example of that, for instance, let me just flip forward just for a moment to some of the later slides. You're talking about something along the lines of these, where you get the wide range bars back to here. You have a downtrend. You got my indicators going ahead, and the sell side. And so you're saying you get the wide range bars back to here. It wastes its energy, blows it off, and then looking for a short. That's kind of thing you're talking about.
Exactly.
Or that or that it rises here, or sorry, that it's been rising, has a nice quick blow off back to here. Okay, so I hope everybody heard that. Okay, that those where they're exhausting their energy, into my trades is one of Lance's favorites. Okay, all right. Now, with that being said, let's go ahead and go back then and answer 2 more questions, and then we'll take a brief break. So, general background here. How many times have you reviewed my videos? And so let's talk about that. Which ones maybe are your favorites? And just I guess I'll let you answer this question since these are your words, and then talk about it a little bit more.
Yeah, I've been through, when I first started, I mean, I went through all the videos, at least twice. But the ones that I really favor for myself are, the more advanced, the trading videos, and I usually just kind of go back through them and just to keep it fresh in my mind, what trades to take, when to take them, just to kind of keep that in my mind all the time.
Okay, and which, so you've watched some of them at least 3 or 4 times, most of them twice. The ones you watch it 3 or 4 times, which are your favorites?
Well, Advanced Trading Strategies is my favorite. I mean, it's that one for me is the best one for me.
That's the wrong answer. You should be saying this one since you're in it. Just kidding. Yeah, no, I've had a lot of people tell me that the Advanced Trading Strategies one was a favorite. What's the second most favorite?
It would be the trend, the trend trade. I mean, that would be the second. I mean, just as far as looking at,
Well, because you're actually looking for the setups and that, not so much just the discipline and the mental aspect. Because if you were struggling still with the discipline side of what even makes a trend in that, where would Rob's Trading Rules for Survival rank in there for you?
Yeah, it'd be on the top. I mean, because that's, you got to master that first.
Right. See, because and that's what I've been sharing with new people is trying to get them to get their nose into that one early on because, like you said, you're at a different level. You've been with me for 9 months, and so you're at a different level where you just want to recap, refresh on some of the setup related stuff, whereas they need to focus on, hey, what is even a trend? Should I even be looking at this as a trend? Is this even really a setup, and so on and so forth? So. So you're at a different place in your journey, but that's interesting to note. So you hear, gang, that now that Lance has reached a different plateau in his trading, now he is sitting there going ahead and saying now what's important to him is the trend trading video and the MTF, the Advanced Trading Strategies one is also known as the MTF Price Action Indicator video. That was the one that was up until today, the most recent video, the 5.5 hour video, gang, for those of you that have that video. Okay, so very good. Appreciate you sharing your thoughts on that, Lance. Now, how about this last one? How much time do you spend, or have you spent daily, weekly studying PC power charting material? I'll let you talk a little bit about that.
Yeah, at first, when I first, joined the room, I mean, it was so much to take in. I mean, so I spent, every waking minute in front of my computer just learning and absorbing the methods that Rob used. I mean, it was, it, it's just it's a whole lot to take in. I mean, and there's a lot of things that are just completely opposite that what you've been used to, and, until you realize that it works and until you see it in action and just really learn it, it's hard at first. But now, I mean, it's really pretty fairly quick for me to recognize what trade setups I want to trade and just wait for them to happen. I mean, it's I've built the discipline to where I can wait for that to happen now.
Okay, super. So it was like drinking out of a fire hose at first, but
Yeah.
now after time, repetition, watching the videos at night because that reinforces the learning from the day session and stuff like that. It now a lot of it's become second nature. So now it's much quicker for you, and I think that's the key. Will it always be such a struggle? I mean, the problem is, that drinking out of the fire hydrant. People walk in here, and well, eh, this is the real world of trading. So this is real trading. So it's not all these theoretical bells and whistles trading magic bullets that, of course, in the end don't work properly. And that's why these people are showing all these great trading strategies on trading simulators. Have any of you ever asked yourself why, if you're going and learning from some guru, why, if their stuff is so great, you have to even go ahead and watch it on a simulator? Why can't they just do it live in front of you like I do? Okay, ask yourself that sometime. So yeah, it may be easy to learn, but will it work? So with that being said, let's go ahead and do this, gang. Let's take a quick 2-minute break. And come right back here. Yeah, listen, right about 2 minutes. I'll put the clock up here. So right about 11:20 Eastern Time, and we'll come right back to it. Hope you guys are having fun with this, and we'll be right back with you in about 2 minutes. Thanks. Okay, gang. Um, we're going to go ahead and kick it right back off there. I know that was just a short break to get a little bit of water and such, but we'll get the breaks a little bit longer as we go ahead and uh, oh, sure, Eddie. I don't know exactly when, but yeah, we'll take good care of that for you, Eddie. Um, and so, welcome back here. Like I said, that was just a quickie break, basically, to give Lance's vocal cords and mine just a quick moment. That was section number one. And basically, we've got several more sections, but that's okay. You know, an hour and 15 minutes on the first section. Frankly, I don't care, you know, how late we go from my perspective. This is important. And Lance, your microphone's unmuted again there.
Okay.
And so we're going to go ahead and you know, pick it right back up from here. But I saw a lot of comments about how this is really helping. I was managed to pull one question out of the mix there from Farah. She asks, which is the best video to start with? In my opinion, just my opinion, I think the Rob's Trading Rules for Survival is uh, the first one to start with. That's just kind of my personal preference. You know, the setups, entries, and stops one is great, but the you know I'm more and more I see so many traders coming to me in such an undisciplined fashion, which is why they finally ultimately wind up to me. You know, they finally say, okay, I need, you know, some professional help. To look at things differently. So, you know, from that discipline perspective, I think that Rob's Trading Rules for Survival is great. Lance, what would you say, you know, from your opinion, just to reaffirm which one you think would be best if somebody's coming brand new and needs discipline right out of the box?
Yeah, I would say that one too because I mean it's just so detrimental to understand when to trade. You know, I mean, to know where to find the news events and what's going on in the markets, just to eliminate any times when you don't want to be in the markets. I mean, and to get that down first.
Okay, great. And Jack, you're very welcome. Yep, it's a lot of people saying they were having a lot of fun with it, so I'm glad you are too. And Daniel says, I agree, watch the survival one first, so good. So hopefully that helps you, Farrar. All right, let's go ahead and get on to the next section here. Instruments to trade. Okay. So Lance, let's talk a little bit more about what you trade. This sounds very much like me, but you can attest you wrote these answers without my help in any way, shape, or form. I gave you the questions and let you, in an unbiased fashion, come up with the answers, and then I'll put my opinions in where you know it's important to. So why don't you go and talk a little bit more about these instruments that you trade? Which because even there where you say the main ones, you know, which ones are your favorite in order, and so on and so forth. So I'll turn that over to you.
Okay, yeah, mainly, I put these in pretty much order. The 6E, the 6J, and the 6V are the three main ones that I trade. Sometimes the oil and gold, but I mean, usually it's just too volatile for me. I mean, for my taste. I mean, I'm not really prepared for something to go 50 ticks against me so fast. The ES is always the last on my trading instruments for me. I mean, I just don't like it too much and never have.
Okay, now a couple of key points there, gang. This is really pretty similar to my order at this point. Frankly, I'll actually reaffirm this because this sounds very much like what you hear me say on a daily basis, but I want to emphasize a couple things. 6E is my favorite. You have some supporters there who agree with you about the S&P. Of course, my background, gang, is of course the equity markets, and then I went to the Dow futures back in the late 90s when they first came out, the big Dow, that is, Pitt. And but of course, even then, that was too thinly traded for me. So then I went to the S&P. Now, make a long story short, the S&P was my primary trading vehicle for the last several years. Okay, make no mistake about that. That being said, I have been very upfront with you, very informative to remind you that, from my perspective, the S&P the last 24 months, whether you want to blame it on high-frequency trading, more and more index arbitrage, whatever you want to blame it on, pick your flavor. Either way, it's just not the trading vehicle that it used to be, in my opinion. And so, from my perspective, the better instruments to trade for my trading are hands down, and you've seen me make probably, this is a complete guesstimate, but let's see how close you think I am to this. I think I've made at least probably 95% of those wonderful 6-digit net profits you guys have watched me make this year in this room. For those of you that have been with me all year, would you agree that 95+% approximately of my money has been made at those 6 digits in the 6E, 6J, 6B? Okay, I'm getting a lot of agreements. Mark says 94%. He's laughing. Yeah. So, yeah. Yep. Most people, and then a lot of people are saying 95% of that is the euro, which I'd have to agree with. Most of the trades I do have been in the euro this year. So, the point being is that adaptability, flexibility, okay, are key and critical. My work, for those of you that have been with me since, before power trading was power trading, I have a lot of tools in my toolbox. There's lots of tools we haven't even used yet here in the last few months. And then if you guys remember back somewhere around May or June, I think it was approximately, there was all of a sudden a 3-week stint where it seemed like all I was doing was trading the S&P. Remember that? Where all of a sudden out of the blue, a whole bunch of S&P trades came back to life. Okay. That's true, Mel. A lot of the junior traders don't even realize how tough the S&P was in 2009. Except for they can see it in their accounts if they traded it. So the point being is that flexibility and adaptability. So you know what, gang? It's possible that next year, and this is not a prognostication, I'm just saying that next year I might be trading gold most of the year. Okay, I'll trade what moves, what works best with not just my setups, but with the market flow. Okay, and flexibility and adaptability. I watched more than a handful of traders die a horrible trading death here late last year, and I've recently shared the story, so I won't spend too much time on it. But to make a long story short, these were traders who refused to trade anything but the S&P. They just refused, and they're no longer trading. And it's a truth. It's a fact. And it's unfortunate. So the death by 1,000 cuts, and flexibility. And as I said, so here I am, a person who's traded the S&P for years, and I said, hey, there's more to life. And this is Lance's, and now you'll notice how close this really mirrors my strategies at this time. Now, again, flash forward 6 months, we may be having a chuckle together because I might be saying, wow, look at how much we've been trading the S&P, or which I don't see, to be quite honest, but if it was, or wow, look at all the Russell 2000 trading we're doing, or wow, look how many times a day I'm taking gold trades, whatever. Okay? The point being is I will adapt with the market because that is part of that professional process. Okay? You have to have your setups, you have to have your abilities and your competencies, but then you have to be able to apply them, on the various markets. Okay? And as we grow together, as you guys are here with me and you grow with me, you'll see those transitions if and when as they happen. But the currencies are definitely a favorite of mine, and just in general, with currencies are becoming more and more of a flavor of the day. We'll go ahead and look forward to continuing to work with those currencies as we go forward. Jeff, actually, I'm one of those people who says that a chart is a chart. The chart is a chart, but the instrument is not an instrument. See what I'm saying? Understand my methodologies on the different instruments is definitely appropriate, but also understanding what kind of market action, market participation. For instance, Okay, a chart is a chart. Grains are fantastic technical trading instruments. Will I touch grains at all? No. Why? Because I don't want to wake up, lock limit up, lock limit down one day, and then be stuck in a trade for 2, 3, 4 days until the market, and have a trade going against me for 2 or 3 or 4 days. Like everything else, grains are great if you're on the right side of the trade. If you get trapped in a lock limit up or a lock limit down situation where literally for 2, 3, 4 days it could stay locked, and then by the time you come out of it, you could be broke. It's not worth it. So a chart is a chart, but an instrument is not an instrument. Everybody understand that? So, Lance, thanks for sharing your thoughts on that one. How about best and worst instruments? You kind of touched on it to a degree. I mean, it looks like the euro is your favorite, and the S&P is not. But let's just maybe talk a little bit more, maybe about what you like about the yen or the pound, and those thoughts. The euro, So if you just want to go through your answer, maybe expound a little bit, especially when it gets to the yen and the pound.
Yeah, of course the euro, it's always my favorite. I mean, especially on taking the conservative aggressive trades and retracement trades. I mean, it seems to work out the best. The yen, I mean, usually the yen, the only thing I'm going to take on that is going to be the retracements or the thrust pullback thrusts. I usually don't ever take the trend continuations in the yen because it just seems, I mean, the yen it moves and then stops. I mean, it just sits there for a while. And the pound's third. I mean, it's I look at it on more so on retracements. I mean, of course, it's only 625 a tick, so I mean, it's hard for it to add up. And you can also, I mean, every time when I was trading the yen or the pound with smaller contracts, I mean, that's one that would always slip through. I mean, 10, 15 ticks. I mean, it was always a little harder to judge the pound as far as trading with small contracts.
And I want to just jump right in there. I wholeheartedly agree with what Lance said on both accounts. The yen will sit there and sit, all of a sudden have a big move, especially in overnight trade. I'm sure you probably see that even more in the yen in the overnight trading hours. It can be a real beast. And then the pound, I've seen and pointed out that same type of slippage to you, gang, here in the past. And now, of course, each tick is worth $6.25, but nonetheless, if you're just looking at the ticks, all of a sudden you're down 10 ticks. Oh my gosh! Well, that's only $62.50, but you psychologically you see 10 ticks beyond your position, and you're sitting there freaking out, and which shouldn't be happening, but that's what people do. They don't have control, and so you really want to make sure, in my opinion, you have a backup plan for the British pound, because there is a lot of slippage in there. It doesn't just magically work to the tick, so to speak. Not that anything always does, but more so the euro is a little bit more respective, of course, of its support resistance levels. And Stephen, let me just answer this general question. No, actually, Stephen, you need technically less money to trade futures contracts technically than you do equities because they're more highly leveraged. You need to consult your broker about that, Stephen, to understand more about how leverage works. But the futures contracts are more highly leveraged, so technically, theoretically, it takes less money. And then you have, of course, the traders who have absolutely no money to their name, then who like to trade the spot Forex, because then you can trade those even more fractional lots on top of that. And yeah, consult your broker about that so you understand more about how leverage works. And Steve, basically, let's just take a couple of real general questions for a moment, then we need to get back on task because we got plenty to cover here. Is lock limit up or lock limit down is when a market hits a threshold where the trips kick in, where the market is no longer tradable. Okay, so and basically, so let's say if it locks limit up, nobody wants to sell, but guess what, Steve? If you're short, it could be like that for 2 or 3 days. The market could open up tomorrow, lock limit up. It could open up the next day, lock limit up. Okay, and you could all of a sudden finally, if people are willing to sell after 2, 3, 4 days of it opening up at these lock limit up levels, and you're just out of a whole bunch of money. Okay, people don't even realize that. They'll jump in and trade these grains. I can't tell you how many people have approached me as new traders. How that's right, Jack. Or next week, they just don't even understand what they're trading. So an instrument like that, you've probably heard like program trading curves, and things like that. Take a look at look up on Google lock limit up, lock limit down, in grains if you want to learn more about that. I don't trade grains. We're not going to talk about that here. But that's what lock limit up, lock limit down is. It can be a very dangerous thing when you're on the wrong side of the trade. Yeah, totally understand, Walt. You bet, buddy. So the spot forex, and you say you have traded spot forex, Lance. So why don't you talk about that for a minute, if you can?
Yeah, I've traded the spot. It's the spreads make it really hard to it seems really hard to make a profit very quickly. I mean, so it seems like it's best for like swing trading. And I don't do that at all. So I mean, it's not something I do. But it's I mean, and the spreads vary so much. I mean, depending on what currency you're trading or what combination you're trading. And I mean, it just doesn't appeal to me. So the futures work great for me.
Yeah, I agree. In fact, we have a couple of new people in here that went ahead and told me that, and we've seen that, haven't you? Several of you have, over the course of the last couple of years, told me that you've left the spot forex. It seems like a lot of our colleagues overseas, they actually start with the currency markets in spot forex, but then they realize, wow, with the spreads and everything, it's a lot harder to correlate to the futures, where I can get, in my opinion, much better fills in the uh, to date, nobody's been telling me I get much better fills than you do, Rob, on my spot forex account. I see, and I know that Russ and Andy over at Infinity, my brokers that work at the Infinity office, have opened up, accounts from people that left spot forex, because once they tried to actually make money trading the spot with the spreads and everything else, you're competing completely. Against the banks, at that point too. So if they want to lock you out, they can lock you out a lot easier in the spot forex, where they make the market, than the futures, where it's a little bit more of a free market there. And so the let's see here. So yes, I do know that there's tax advantages and such like that that get people interested. Yep, and a couple people are saying that they're in the UK. In the UK, that there may be some tax benefits to spot. But in the end, if you can't make any money unless you're swing trading it, you know, it's great to have tax advantages on what? Your losses? So that's, what you have to kind of look at. What I find is, though, as Lance said, with the spot, the biggest advantage of is that you have these fractional lots, so you can actually hold on to a position, longer. But so as far as like swing trading, so you won't really make much money, or you won't lose much money on the trade, and so basically that's why people do it then. So they'll lose over the course of 3, 4, 5 days, and then if they ultimately just have to take the loss on the trade, they're like, oh well, only lost $100. Well, but then when they go to make money, they only make $100 too. So it hasn't worked out too well for most of the spot forex traders that I've seen. Most of the ones that have told me they were spot or are spot have ultimately migrated to futures. That's just been my personal experience with that. As far as the other thing to keep in mind is, as Tom appropriately mentioned, with trading equities, Stephen F., you have that day trader pattern rule. When you trade more than 3 times in 5 days, I believe it is, that what happens is you're required to have at least $25,000 US dollars in your account in order to be able to do that. Okay. Whereas with futures, there is no day trading pattern rule. So it allows you then, with less money, to have more flexibility under U.S. regulations. Okay? All right, great. Lance, thank you very much. Let's go ahead and move on to the next one here, which is trading times. What times do you trade overnight at all? And yeah, you've talked about this a little bit before, but let's go ahead, and this is important because we have people, of course, all over the world here, Lance, as you know, from different types of careers. They can, well, like you still have like a little side business with insurance claims that you do kind of on the sides, mostly for a few months a year, but you still have that, and then you have flexibility around that. You're here in the U.S., whereas most people, or many people, are from all over the world. So I think they're interested in what time you find to be the most advantageous there. You want to talk about that a little bit?
Sure. I found for me, trading the U.S. morning sessions is the best for me. I used to try to chase the market moves at first. I'd always try something different, looking at the 12 a.m., 3 a.m., 4 a.m. time frames. And just over time, I found that the morning offers up the trades, offers up trades most of the time that is available. So it's for me, the mornings just work best.
Now, the when you're talking about morning, so you're talking again that 6 a.m. to 11 a.m. And even more so possibly like when I'm trading 7:15 to 11. When you say morning, what about the European session? You talk about it a little bit here. You say at 12 a.m., 3 a.m., 4 a.m. What about those? Because that's morning too. How do you feel about that time of the morning compared to like the 7:15 to 11 a.m.? What would it doesn't sound like you really trade that 12 a.m., 3 a.m., 4 a.m. So um, how do you feel about that?
Really as far as the best moves are. I think the best moves come in the U.S. markets. There is. The second choice I would have would be that 3 a.m. time frame after the European Open. Because it's got some good moves too. But overall, it's the U.S. seems to offer up more opportunities for me.
Okay, and these times, by the way, gang, Lance's answers are in Central Time, but some of you asked questions in Black in Eastern Time. The responses that Lance is giving you are in Central Time. I keep getting that question, so let me just give the answer again. Central Time are Lance's answers. Some of the questions, though, may be in Eastern Time. Okay, but Lance's answers are, because Lance is in the same time zone as I am. I'm in Illinois. Lance is in Texas, and so his responses are all in Central Time. I always try to denote things in Eastern Time for you, but Lance is just giving it to you, straight in Central Time. Okay. Um, basically, let's talk a little bit about the evening hours because I notice a lot of people here that have second careers during the daytime, like in the U.S., for instance. They're there pushing, trying to force their way into trades, which again, I've taken some great trades in the last several weeks in those times under very specific circumstances. But as a rule, why don't you talk about your feelings about those, evening hours at U.S. session time?
Yeah, in the evenings, like you said, there is circumstances where, you get some really good moves. But for the most part, the volume is really low compared to the U.S. session, and the moves that you get are a lot narrower. They're not as wide as, moves. So once you get into a trade, you could be sitting there for a while, hoping that it works. Whereas in the U.S., you get those wider range moves where, the trades are, usually in and out of them very quickly compared to the evening hours.
Give me 1 second here, gang. Great. Still got the sneezes a little bit, so wanted to do that offline. The Lance, with the Japanese yen hours there, then do you find that it goes ahead and spits and sputters where you'll have a lot of movement for a very finite amount of time, and then all of a sudden, like what would normally happen during the U.S. session, where you get like a thrust pullback thrust where it spikes up, then it comes back nicely, and then re-energizes back in the direction. Do you find out, or do you find that a lot of times they'll just move one direction, and then it won't have the energy for like thrust pullback thrust? It'll just thrust, and then it won't pull back, or it will thrust and pull back, but then won't get the energy to go back up. Do you find those spits and sputters a lack of ebb and flow in those hours?
Oh yeah, most definitely. And that's one of the main reasons that I'm just if I'm looking at the evenings, I'm really cautious because I mean, it's very easy to get stuck in a trade because I mean, it usually just moves for a short period of time, then it's just done and it just sits there. So if you're in the wrong point, if you enter that trade wrong, you're going to be stuck hoping that it goes back, you know, to your favor if it didn't go your way.
And like I said, I've got to say, gang, only under very, very, very specific circumstances do I go ahead and take trades in those times. Usually seems to happen once or twice a month. Um, and like I said, at this point, I'm pretty much relying on students to call me. In fact, we had a situation just a couple weeks ago. I can't remember which instrument it was in now. I want to say it was the Aussie dollar. In fact, I'm pretty sure it was the Aussie dollar. One of our students contacted me because we had a huge spike up, and we're like, oh, this could be a gorgeous thrust pullback thrust. And well, what ended up happening, Lance, was it thrusted really nice, and then guess what it did? Just like that. Just like that. It didn't pull back. It didn't pull back and stay. It just went up and then stayed sideways. Okay, and so there was no trade. But the good news is the group was trying to alert me to that. So and yeah, for you that's right. Nick, you're in the UK, so you're sleeping during that time anyways. I think it's a great time personally to sleep. For me, I'm watching TV, spending time with my family, that kind of thing. But the point being is that the energy levels are just not there usually like they are in the regular U.S. session, or even more the European session. I mean, the European session has a little bit more ebb and flow to it than that Japanese session. So that's my personal opinion. That's based on my years of experience. There's definitely the exception to the rule. I've made some very good money on the exception to the rule within the last month or so on the Japanese yen, where we went ahead and had those uh, great trades with the euro. Or the yen. Excuse me. Let me just pull it up. And if I'd stop hitting the E and hit the J, we might be in business. Okay, so right here and right here, for those of you that recall, did some fantastic trading this night. Okay, that was around 8 o'clock or so Central Time, 8 o'clock, 8:30 Central Time, so 9:30 Eastern Time, and then same thing here, same situation this night as well. Between those two nights alone, and that was directly because of you as students, I would not have taken those trades had students not alerted me to the fact that my setups were taking place. And so between those 2 days, I went ahead and I grossed about $3,800 approximately between those two trading sessions alone in the evenings, just from the evening sessions, because of your understanding what I'm looking for setups, which is why it's so important for you guys not to be trained monkeys, but for you to learn and understand and grow. And one of the reasons why even for you as new traders or small contract traders, we're going ahead and focusing on some of this so you can see how a guy like Lance picked up on some of these things and what his experiences are. Not that his experiences will be your direct experiences identically, but now you're not just hearing it from Rob, who did this many years ago, went through the small contract trader phase, but now somebody who's been going through it and continues to grow his account and grow his account, has worked through a lot of the same trials and tribulations, you know, and so hopefully that this is going to be of a lot of benefit for you as we go through this today. So Lance, did you have anything else you want to add, or are you pretty well good? It says you usually don't hold a position too long, and that's even in the U.S. session, and so that's one of the reasons why you don't like the European, especially the Asian session, correct?
Yeah, I don't want to be stuck in a position sitting there hoping it goes your way.
Yeah, there's nothing worse than a sinking feeling there. And here's an interesting comment by our friend from Japan, who I think last I checked, he's in California currently right now, visiting with his sweetheart. But correct me if I'm wrong on that, Nick. But oh, he's back in Japan now. Okay. Nick says, I've talked to some Japanese institutional traders. A good amount of them don't even trade during the Asian session. They're having meetings talking about what they're expecting to happen in the euro during the U.S. session. Okay, so the little dog that's barking in the background, that's where Lance is in. That's he's our mascot today. So the but yes, the so with the Japanese session, think about that. He meant the euro into the U.S. sessions. So they're talking about the euro and the U.S. session. So a lot of the Japanese aren't even trading their own session. Something to think about. Okay, and yeah, Pete's asking. A couple people are asking here if you can send a picture of your dog to me, the mascot, so that we can see who's chirping in the background there. We'll see if he can send one of those in a little bit. So the let's go ahead but this is real world. This is not filmed in a studio. This is being filmed live in real time here with Lance and me. Lance is of course in Texas right now, and appreciate him taking the time to be here, and his pet Pooch. So let's go ahead and move to the next thing. Well, and most people do, Pete. They really do like this format because I don't want it to be scripted so much. I mean, this part here is scripted, but I still want to be able to have a dialogue with people, talk through these different things with each other, and basically, rather than just be all straight teaching and not be able to have an interactive dialogue, I'd like to be able to have some of that dialogue. Okay. Account setup and management. All right. What are some reasonable goals for a less than 10K account? Now, before I go ahead and allow Lance to even answer this, I think that, okay, Lance is not a registered financial representative. He is a private trader just like me. Okay, so his opinions are just that, his opinions. Okay, so I know some people ask these questions very innocently. They're not trying to get anybody in trouble, but the reality is we need to always go ahead and make sure that people understand we are not registered financial representatives and brokers. You want to talk to your registered financial representative and brokers about this. Now, I understand that some representatives and brokers don't have a clue about trading. Okay, I totally understand that. But then you need to find a different registered financial representative and broker. Admittedly, I've got registered financial representatives in this room. We have professionals in this room that follow me. So, but that being said, I don't hand out their names, and they're here to learn, and that's great. Okay, so which is one of the reasons why we don't have people's names up there in the interest of protecting their privacy. But that being said, with all that background being aforementioned here, I'm going to let Lance answer this question from his perspective. Okay, and so Lance, with that, I'm going to let you take it from there.
Okay. Yeah, I mean, I think it's really hard to set a specific goal in relation to a dollar amount. Because the trading environments are always changing, and there's just not always good setups. So I mean, one month you might have great setups, and next month you might not have that many. And having a dollar-based goal has made me be too aggressive. So I mean, if I focus on, okay, I need to make this much money every day, and it makes you want to take trades too often. So I focus on just being in the green every day and being happy with that, and just taking each day at a time.
I cannot emphasize this part enough. I say it all the time. I'm going to go ahead and highlight it because people just don't listen to me until they get to the point where they've lost enough money and then figure this out. See, and maybe part of it's marketing, because junior traders, people that are new to trading, want to go ahead and they want to understand how much money can I make day to day. Well, so what these simulator trader educational rooms do is they say, oh man, it's easy. Make $500 before, 9 o'clock, 10 o'clock in the morning. You can do it. You betcha. Every day. This is, that's what you can do. Well, guess what? I did make like $550 on 6-1 contract trades by around 9:30 Friday morning. But that's not every day, is it? Okay? To go ahead and have a dollar-based goal is probably going to, hurt you terribly. It'll probably hurt you terribly, because what's going to happen is you're going to go ahead and find those days, all right, where you sit there, you say $500 a day, just arbitrarily making up a number. Can't tell you how many people call me and just say, I want to make $500 a day. Okay? Well, if you average out my wins, okay, $100,000, or sorry, $500 a day is what? Just approximately $10,000 a month. Okay, right? And so it's $120,000 a year. All right, well, guess what? I've certainly gone ahead and netted more than that for the year, but how many days had no money for the day? Goose egg. How many of them had $100 that I made in the day? Okay. Now, and then it goes on. Now, Friday was, 550. I had a lot. It seemed like I had multiple $500, $400 type days or something like that last week. Paul L., I know you track all that stuff. You can agree or correct me on that. But the point is that, 0, 100, 550, and of course, I've had an $18,000 day. Okay? So the point is, if I sat there, though, and I said to myself, I'm going to make $500 a day, man, oh man, oh man, am I going ahead and really set myself up for failure. Because what am I going to do on these days? What am I going to do here, gang? That's right. I'm going to start taking iffy trades because, oh gosh, it's 11 o'clock in the morning. I got no money on the books. Oh man, I got to go take this trade. Yeah, that's what I got to do right now. That's it. I'm going to go take a trade right now. Here it is. Okay, I see that we've got 3 tick ranges on the yen right now, gang. 4 tick ranges, 3 and 4 ticks. But you know what? I've got to make money right now. I've got to do it. There you go. I'm going long. That's it. Okay? You will force yourself into oblivion. I cannot emphasize that enough. You will go ahead and force yourself to do something you have no business doing. Okay? And so the reality is that instead of focusing on a dollar-based goal, most of you that are still junior traders in this room, okay, I'm not speaking to you that have been with me for a long time and now like a guy like Lance who's starting to see some consistency, as he said, some profitability. Okay, he can go to a different level. He can look at things a little bit differently. But from a junior trader perspective, the very first thing you have to do, gang, is get your head screwed on straight and go ahead and worry about doing what you see me doing here. Try to focus on slow, steady, consistent gains. Okay? Sitting there, winning 1, losing 2, winning 3, losing 8, okay? This is just going to do this to your account. But for those of you that have been here all year with me, okay, you know that, like I said, I've got a gorgeous 6-digit net profit year going on. And in many cases, I've got no dollar days, $100 days, 500. Okay, then lots of $1,000 days, 2,000, 8,000, etc. The point being that in the end, okay, here we go. Paul says last week was very slow, but I made money. He says that I had nothing on Monday, 100 on Tuesday, 660 on, wait a minute, that can't be right. One, two, three, four. Oh, yeah, it is. Okay, sorry, I miscounted the days. $0 on Monday, 100 on Tuesday, 660 on Wednesday, 500 on Thursday, 550 on Friday. So basically, $1,760. Okay, so my slowest week on record from the last several weeks. Um, and oh, that's right, Monday I didn't trade. That's right, it was a holiday. It was only a 4-day week, so I made $1,700. 1,700 plus bucks for the 4-day week. That's a good point, Steve. I forgot about that. Oh, Paul's saying it was $1,810 for the 4-day week. All right, and so you know what? Most traders wish they could have an $1,800 profitable month these days. And I'm not saying that that's right or whatever, but the point is that slow, steady, consistent. Did anybody here see me freak out? Did anybody see me freak out on the $100 day? Did any of you see me freak out when I went ahead and I made 6 one-contract trades on Friday and I made $550 in the first couple of hours of trade? No. I said, okay, I'll take what the market gives me. So the point is, because it works out for it. Because, like I said, as we've seen, then the really good days come. The $1,000, the $2,000, the $8,000, $5,000, et cetera, et cetera. The bigger days come. But to sit there as a junior trader and try to put yourself into a box and go ahead and, as a small contract trader, have these unrealistic goals can be absolutely detrimental to your financial success, because what's going to happen is you're going to get that in your head, and here's the worst case scenario. All right, even more so than having a zero green day, is a $0 day, and then you try to go for the big win, okay, to bring you up to, let's say, $500. What about a day where you've made $425? You've taken several trades and you're feeling high as a kite. You're feeling the power of the trade, baby. Okay? Nothing can stop you. You've taken 5 trades. You're up $425, but your goal says $500. Okay. What do you got to do, right? What do you got to do? Exactly. The dog says it. What do you got to do? Trade, right? You have to trade. The dog got it right there. You have to trade because you must get to your $500, except for the fact that, guess what? On that 6th trade, you were taking it because you were going ahead and, basically feeling the big S, the big Superman, or the big W, the big Wonder Woman, saga, and you weren't taking that trade at the right time for the right reasons. You were taking it because you were greedy. Well, how many of you in the past have turned a winning day into a losing day, not listening to my thoughts on bears make money, bulls make money, pigs get slaughtered? And I see Robert K. is already, yeah, sure, Thule. It should be pretty much all of us here. Anybody who's been trading for more than a week or two has probably experienced that. So we're all guilty of it, Nick. Anybody who's being honest with themselves has gone for that extra couple ticks, that extra trade. We've all been there. Robert K., though, actually articulated his. He says, that's me. Just eke out a bit more, then I'll stop. Trade goes against me, and bam, I've lost half the profits. So that's what I'm saying, gang. That's what I'm trying to warn you about. That's what you know, Lance is trying to go ahead and warn you about here. This is really important. Having a dollar-based goal will do bad things to you. Okay? So with that being said, sure, Eddie, thanks. The reality is, I'm going to turn this back over to Lance, because the comment that I just made looks like he actually posted on his thing. You guys hear me say this. I always try to take the right trades at the right times. And so I guess just focus on this, because your money, Lance, is very important to you too. While trading is not your only source of income, certainly number one, you're trying to make it, and you only work approximately 3 months a year for this other business thing. So clearly there's a need and desire for you to build your trading account as you've been doing. So talk about this a little bit, why you're not setting these dollar goals, even though the money is important to you. Um, I mentioned this. I guess it's important to you, to focus on the bigger picture. Have you learned that the hard way? Did you used to set the dollar goals? Is that what you were saying before? And have you realized now, by not having the dollar goals, just focus on the good trading, that you've looked back on your account and seen the growth? Is that what's kind of happened there? Could you talk about that for a minute?
Yeah, I mean, I've had dollar goals that I've looked at, that I've wanted to make each day, and it does. It just it forces you to try to trade when you shouldn't be trading. So I've just come to the reality is just, I mean, I just got to wait, take the right trades at the right times, and just be patient. And those are my main objectives each and every day. I mean, and the trades will come. You just got to be patient.
And I want to focus on that last part again. The trades will come. You just have to focus on being patient. Okay? Markets ebbs and flow. Okay? The markets ebb and flow. And this is the hardest part for trading for some people. They go ahead, they get used to day after day after day after day, trade, trade, trade. There was like a 3-week period of time recently where we were just, cranking, 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 cranking. Then all of a sudden, well, actually, it was a lot longer than 3 weeks. But what happened was then it became a 2 or 3 week period of time, which we're kind of still coming out the other end of, where there was at least, I mean, it was like trades every day, lots of trades, in several days. And then all of a sudden it went to like, there was like one day, I think there was like two days in a row, I think, if I recall correctly. At one point there was no trades at all, if my memory serves me well. And then, of course, Monday there was no trade last week because it was a holiday, but I think there was one other no trade day in the middle of there somewhere, if I recall correctly. The point being is that market conditions will ebb and flow. And what happens is traders, again, they get that big S on their chest or that W on their chest, or other pressures such as a struggling trader who has a husband or wife that says, look, dear, I love you. I'm not sure about this whole trading thing, but what I am sure about is we have bills at the end of the month. Okay, so your bills are going one way or another, whether you take it out of your trading account as a profit or you take it out of your trading account as a loss, or you just made a little money, lost a little money, and you're going to take it out, which will basically effectively equate to a loss. Either way, that money is coming out at the end of the month to go ahead and pay our bills. Okay, if you're being responsible, you should pay your bills, and if you don't have the money to trade, then that's a whole issue in itself, as we always talk about. So you really need to consult your registered financial representative and broker. But the point being is, what happens then is people say, okay, this day here, I've got to take the money out for my husband or wife to pay the bills. On this day, they say, I've got to make this much money so that when I take that money out, it doesn't affect my primary trading account. Well, guess what happens? Murphy's Law, you're going to get those no trade days in the middle of that. And what are you going to do? I'll tell you the answer. If you're a professional, you're going to say, I would rather live to fight another day and keep my money in a pocket. If you're a junior trader, you're going to feel that sense of desperation, and you're going to go for the big win. You're going to go for the lottery, and you're going to try to turn this account that's sitting at this level into an account that's sitting way up here. And of course, in many cases, that trade won't be at the right time for the right reasons. It'll be out of desperation, and then you'll find your account down here. And guess what? Your husband or wife is still sitting there asking for that money, and now you just turned an account that was here, that would have been to here if you took that money out. Now you got an account that's already here, and it's going to go down to here when they take that money out for the pay the bills. Am I making sense here, gang? Does this make sense? Can anybody relate to this? Good. Good. So I want to make sure that I'm very clear on this, because this is a trader killer. And there, you know what? I commend your spouse, your husband or your wife, for getting on you and saying the bills need to be paid. Okay? Thank heavens, so you don't ruin your credit ratings and whatever else out there. Okay? And so the bottom line is that you should be trading with risk capital, and on top of that, you should go ahead and be taking trades at the right time for the right reasons. And you know what? If your bills are due over here and you're sitting over here and you got days in between, there's no trade days, suck it up, traders. Suck it up. That's the real world. You don't take a trade at the wrong time for the wrong reasons, trying to go for the big win to take your account that's here up to here when the trade doesn't exist, and you turn around and end up down here. That is a terrible, terrible junior trader mistake, and of course it's basically the trader, slow bleed of death. Okay? Death by 1,000 cuts as you take up several losses over and over and over again, hoping for the big win or trying to meet your husband or wife's expectations of money by a certain time. Okay? So I see a lot of people said that I'm very clear. It makes perfect sense. But if you go ahead and you try to force something that's not there, you're ultimately going to end up that much deeper in the basement. So I'd rather lose a little bit in a deficit to pay the bills if I were in that situation than losing a lot trying to take trades that aren't there, and then be around for the markets when the trades are all over the place. Boom, 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 boom. Okay, but to sit there and try to make something out of nothing during those 3-4 days, where there wasn't anything there, is madness. And I'm trying to shake, everybody, to understand that. Okay? So, hope that made a lot of sense to everybody, not just a few. Now, Lance, with that being said, let's go ahead and talk about your initial account size as far as how long did it take you to double it. I think the fact of how long did it take you to double it is far more important than the initial dollar amount. I think that's kind of personal to you. That's my opinion. If you want to share that dollar amount, that's up to you. But from my perspective, you certainly, I think, your focus is probably, how long did it take you to double it initially, and then obviously you've added exponentially from there as you were getting smarter and smarter with your trades. So you just want to talk about this a little bit?
Yeah, I started basically with the minimum account size that you can start with at Infinity Futures, and it took me about 3 months to nearly double it. Most of the profits came in in 1 month, where it's just ideal trading situations, and I mean it really added up really quickly. But I still want to stress, I mean, to focus on your profits is going to get you, trigger happy with your trading. I mean, you just have to be patient, and the profits will come. And you just gotta just learn from you and just be patient and wait.
But Lance, you weren't patient and waited. So you're speaking from experience, right? I mean, this isn't just you walked in day one, you were Mr. Patient. You actually, I think, you when you first joined me, you're like, wow, why isn't Rob taking more trades? And what's going on? I mean, it's like, and so you had to go through that process where you would take a trade, that I wouldn't take, and you had to feel the zing, you had to feel the drawdown associated with that pain enough times to get you to understand, which is why it took you months. Had you not had those losses um, in the middle of that process, as you had to go through the learning curve, you actually would have grown it, which is why I think you're growing your account more exponentially now. You've had your new trader mistakes along the way, like your stop loss, forgetting about increasing that as you had the ability to trade more trades, but your profits are coming more as you're staying out of more of the higher risk trades, lower profitability, and now you've retrained yourself to see and not take the drawdowns, the big zings when you see me. What I'm saying makes sense. Rather than you going and saying, "Oh, Rob doesn't know it all," I'm going to go ahead and get in there and take enough bites. That's part of that learning process for you, right? That's what got you to where you're at now. Once you finally calm down and realize, oh, I guess I realize why Rob's not taking as many trades as I would have liked to have seen him take. Is that right?
Yeah, there's nothing more that's going to stick in your mind when you take a big loss. I mean, that's you're definitely going to keep that in mind next time you take a trade.
Yeah, and so, like I said, but now here's the difference. That's how you changed your attitude. That's how you change your attitude. The problem is some people will take the big loss and then become the very junior trader mindset will take the big loss and then say, well, now tomorrow I've got to double up or triple up or whatever to make all that money back. You learned, okay, that was really stupid, and you called me a couple of times when you did stupid things, just to have a friendly voice to hear about, and to talk through it. And my only comments to you is to make sure you weren't going to do the silly, double up routine, and that, because like I said, I couldn't give you individual advice, but I went ahead and I listened to you talk, and you talked through your own issues basically. And would you say that was kind of a important inflection point um, for you? To go through that process and hit the zing, get the big loss, but and then realize if I double up tomorrow, I triple up tomorrow, I'm going to be out of this business. I'm going to be out of this game. I'm just going to have to sit back, chill out, relax, and focus on get right back in there the next day and make the right steps. Is that kind of how that happened for you, or was there something else that took place for you? Did the dog bark at you and you realized through an epiphany that that was the way to do it? What happened for you?
Yeah, I mean, it was. I mean, every time that I do something stupid, of course, I mean, it's something that you really got to focus and say, okay, what did I do wrong? I mean, and you got to learn from your mistakes, and and make sure you don't. Okay, I lost money, now I got to make it back, because if you think that way, it's you're not really going to fix the problem that was at hand and what you did wrong. So you'd really have to refocus yourself at that point. And for me, I mean, I would at that point I would be even more cautious than when I was to start with. So I mean, it kind of put me back down, take that Superman off your chest, and get back down to reality and say, okay, this is what I need to do again.
Even though Lance is a Texan, so he's got a big S on his chest because he's super cool. I've been to Texas a couple times, met some awesome people, and so he's got a big S, but not a trading big S. Okay, and as far as Matul asked an awesome question here, and so let me go ahead and I'm going to ask you this, and give it your response. Matul asked, when Lance doubled his account size, did this give him automatic permission to double his contract position size, or did he trade with the same number of contracts as when he started? Awesome question, Matul. And Lance, why don't you go ahead and answer that for us real quick?
Yeah, I never actually started entering more contracts in a trade until I got my account size even further up than that. And even at this point, I still don't enter trades unless they're conservative trades with more than one contract. So I don't know if that helps at all.
Oh, I think that's a great answer. And we're actually going to talk about that, Matul, a little bit more. I'm going to show you, for all of you, you've known, I think the biggest trade anybody has ever seen me do in the live trading rooms only been about 350, 370 contracts, if I recall correctly. Certainly, I can do way more than that. And yet, I usually enter an initial entry with 1 to 5 contracts. Let's go ahead and show you why, but not right now. I'm going to show that to you a little bit later in the presentation when we talk about scaling. Okay? Um, Thanks, Robert K. Appreciate it. So yeah, it's about 376 is what I'm hearing, which is great. Again, a fraction of what I can still, what I can trade. Okay, but so that's my experience on it, Matul. That's my comment. And then you heard also from Lance as well that just because he can doesn't mean he should, or that he does. So that's a huge learning lesson. In fact, um, just a reminder, like the $18,000 day I had back in, what was it, July 1st or whatever. Okay, what did I do the very next day, gang? The very next trading session, and really for the next couple of sessions? What did I do? I had like 13 trades that day, $18,000. What did I do the next day? Became way more cautious. I pulled back. That's right. I spent the whole morning coaching all of you about the Superman complex. Do you remember that? I spent the morning saying, look, gang, okay, this is the kind of situation where this is the most dangerous time for a guy like me who's got a lot of money and making good trades and everything. Because you get that 13 trades, boom, 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 nothing can stop me, roar. Okay, and then what happens is you become a Victor Niederhofer. So what I'm here to tell you, as friends in my trading family here, and many of you that I've gotten to really know personally, and you are good friends that I'll pick up the phone with and talk with on a regular basis. And I suspect after Vegas next month, we're going to go ahead and maybe be doing that more. Um, uh, so I'm looking forward to seeing a lot of you next month. But the point is that all that more money does is open you up to more problems. Okay, and you're funny, Nick. Um, so do understand that as you build your accounts, as the success comes, it doesn't give you an automatic license to go out there and be, Rambo or Wonder Woman. Okay? So please keep that in mind as you're starting to see successes, because many of you have reported a lot of successes. It does not give you the permission to automatically take conservative, aggressive trades. It does not give you the permission to take very aggressive trades. And it does not, as Matul so appropriately asked, give you the privilege of just doubling up, tripling up your size as your account doubles or triples. Okay? So, very good question. All right, let's go ahead and move on then to the next thing here. And Lance, your initial account was under $10,000, if I recall correctly, right? I don't want to get into specifics, but your initial account when you came to me, I assume it must have been based on the contract size you were allowed to trade. So just yes or no, under 10,000, over 10,000 when you first came
Yes,
to me.
it was under 10,000.
I figured as much. Based on the number of contracts, I figured it had to be significantly under that. So, okay, very good. Now, let's go ahead and talk about this. It actually, it turns out, sorry, I forgot about this question being the next one in line here, but Matul asked, and so at what point do you increase your initial scaling or size? Let's just talk about then the conservative retracement trades. You said that's the one where you have increased your size. So let's talk about what about that trade In fact, let me fast forward to a slide in case you need to reference it. Okay. What about these conservative retracement trades? Is it that makes you feel more comfortable with them than, say, a thrust pullback thrust trade or you know, fish hooks, crooked fingers, speed line continuation trades, etc. What is it about these that you like? I know my answer to it, but I'm curious what your answer is.
Well, I mean, it's just the fact that the price is exhausting itself back to these areas. I mean, and it's you know, it's almost inevitable for them to come off of that point at some point.
Okay, perfect. Yeah, that because that's my exact answer. Is the fact that I'm looking for the price to exhaust itself. So I'm looking for range, distance into major support. These are all different charts. These aren't like a 5, a 15, 30, an hourly gain. These were just a handful. Lance gave me, I don't know, like 75 different charts. I just put a handful of them up here, and so I just wanted to be able to reflect on that for a minute. So basically, you like the exhaustion into this area. That will be key as we talk about that a little bit later as well as it relates to scaling and everything else. So you feel that when it exhausts, it has a smaller risk of then just blowing through than if it's like trickling, 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 or in this case, you know, trickling down, trickling down, trickling down. So the exhaustion and that rapid price action, that feverish activity, lends to a higher probability trade that allows you to put in more than one contract, correct?
Yes.
Okay. All right, very good. Let's go ahead and we'll go back up then to the that section here then. Okay. As far as contract sizes, again, this is your opinion. Okay. And that, but as far as discussing contract lot sizes for the 6E with less than a $10,000 account, um, you give an answer here, so I'm going to let you go ahead and share your thoughts a little bit more about that.
Yeah, I mean, as far as an account that size, I mean, I would personally never start with more than one contract, because you know when that price starts moving, you know, against you in a situation, you really need to save your bullets when you really need them. I mean, and
Because
it doesn't
technically,
take long.
with a $10,000 account, technically, if you have a good broker like I do, technically you could trade like 10 contracts on that, couldn't you?
Yeah, actually, if you probably get more than that, actually.
Oh, okay. So I don't know. I don't worry about all that,
Yeah.
that stuff because I'm not, at that level. But so for you, you would say if you had a $10,000 account, you wouldn't be doing more than one contract because you've only got a handful more bullets beyond there. So that's how you would go ahead and start your scaling or entry process.
Yes, I mean, and at that point, even if I would only start with one contract, and that's down into the major support areas or resistance areas, and then if it does go through that, then to add more.
Okay. And that's how you perceive it for your trading. And the tool, yes. Michael P saying 1,000 or $500 per contract at Infinity. Yeah, no, these are full contracts for our. We're talking about the CME currency futures. So we're talking one contract, full size, euro contract, S&P E-mini contract, but we're talking about the full size. And not the S&P. There's a big contract and a mini. When we're talking about the S&Ps, we're talking about the minis. But when we're talking about currencies, we're focusing on these six, J and stuff. So see, I'm seeing different people here giving different quotes for their and see that's all dependent on your broker and your relationship with your broker and your account size. In your trading experience. So that's why I'm here. I'm having different people here posting different commission levels, even though they're all with Infinity, because if you got different brokers, they're going to give you different margin levels. Okay, they have control over that to a degree, and so I have my brokers there. which people want my broker's user, name and telephone number. I can provide that offline here. So but the point is then that to Batul, to clean up your question there, he means more than one contract at once. He was talking about an initial entry. So in other words, on a conservative retracement trade, he will look at putting 2 or more contracts in on an initial entry, not trade in total.
Two
Okay?
only for me.
2 only for him.
Yeah.
Yes. Okay. So thank you very much. Now let's go ahead and go on to the next question down here. How much weight should a small trader put into commission costs and broker selection? Since we're talking about brokers, why don't you go ahead and take a stab at that one?
Yeah, I mean, I just really like the Infinity Dome to trade with. I mean, it seems to be very user-friendly compared to other things that I've tried to use, and the commissions are good. And I mean, I will always ask to get a better deal. Every few months, depending on if my trading's increased or what's going on, I'll ask to see if I can get better commission rates. But they're really competitive, it seems like.
Yeah, they are definitely not the lowest in the business. My broker does go and give better rates than even several of the other brokers in the office there, but to power charting students. But in the end, they are not the lowest out there, and they don't claim to be. But they've got a heck of an execution platform, and they are far more competitive than many. And of course, like in my cases, you're using somebody else, Lance. I know in the office, I know who you use. But like in my case with Russ and Andy, you have the same thing. You have the same 2 guys all the time on your end. The brokers work in teams, and so you always get one of the same 2 guys, so they know who you are, and that's a good feeling. So from that perspective, broker selection is very important. And you're saying that's far more important than that and the execution platform itself than the commission side of things.
Yeah, because every time I pick up the phone and call them, it's always the same person I'm talking to, and they know who I am. So I mean, it's it's a good feeling to have that more personal relationship.
Yeah, nothing worse than calling a 1-800 number and they say, okay, now what's your name? What was that, Lance? Was that Lentz or
Yeah.
Lance? How do you spell that? And okay, what's your account number? 6 times over. Nothing worse than that. Absolutely. Especially if you're sitting in a trade locked out of your computer and you need somebody to execute for you fast. Yeah, exactly. Rob who? Fortunately, as an institutional client, I also don't have to worry about that. So but going then to this, let me ask you this question, okay? Or let me make this statement. Now I'll ask the question to Lance. Lance, did you ever find a time in your trading that you felt that you used commissions as a crutch, as an excuse as far as poor trading? Did that ever happen to you where, oh, if only I had lower commissions, I'd be a more successful trader. It's the commission's fault. It's my broker's fault. It's everybody else's fault. Did you ever find yourself going through that process of blaming other things, other people, other situations as to why you're not as successful as you'd like to be?
Oh, of course. And then there's times when you're going to blame other things. I mean, as far as commissions, no, because I always consider that a cost of doing business. But I mean, there's always times where you say, if you had, a better trading platform, or if you had this, or more monitors that you could, you can do better.
Yeah, and I hear people all the time, gang, tell me they'd be better traders if they had $3 commissions instead of $5 commissions, or whatever. You pick the number, it doesn't matter. They'd be better traders, okay? And what you're basically saying there is that basically, because you very seldom ever make money, what little money you ever do make, you need to get low commissions to make it worthwhile because of your poor trading, okay? So it's my opinion that effectively you need to focus on good trading, okay? And plus, guess what? If you're a decent trader, Or even if you're a small account trader, because when you first come to a broker and you have an unproven history, well, look what Lance has said. Lance has been growing with me for the last 9 months, so guess what? He keeps going back to his broker and saying, hey, you know what? I've got this much account size now. I'm trading this much. What are you going to do for me for my commissions? Okay? Because he's earning more and more and more of a right to be able to do that as his account size is growing and his trading is successful. Brokers want to keep a guy like Lance. They want to keep a guy like Rob Hoffman, okay? They don't care too much about a person who comes in with their $2,000 account and then is going to trade 1 or 2 or 3 times a week, okay? So the person like that is going to go ahead and get higher commission rates. The point being is that a person who, like Lance, can demonstrate some consistency and some success in building an account size, they want to keep a guy like Lance happy. So as Lance is saying, every few months he's going right back to his broker there and saying, what can you do for me now? Okay. So I hope that that resonates with people. Something for you to go ahead and keep in mind. All right. Now, with that being said, let's do this. Let's go ahead and take another quickie break, and we'll go ahead and we'll pick right back up on this. Let me get my handy-dandy little timer out, and why don't we come back here at around 12:38 p.m., about 2.5 minutes or so. All right. So come back here in just a little more than 2 minutes. All right, gang? See you then. Okay, gang, welcome back. Well, I hope you're having a lot of fun with this, and that this is, helping you understand this from perspective of a trader like Lance, who's willing to go ahead and give something back to our community here. Again, of course, Lance is far from one of the oldest people here. Lance has been here since January of this year, and several of you have been here a lot longer. But he's willing to step up, share a little bit about his successes, his growth, his experiences, what's working for him, what he had to consider. Right now you hear him in the background doing the Darth Vader breathing. And so now I'm just waiting for the dog to kick in and we'll be all set. What we have to understand is that these are really invaluable learning experiences that will hopefully accelerate the growth of some of you to see if you're still stuck in some of the ruts that Lance successfully navigated through. maybe this will be an aha day for you as you go ahead and you've heard me say it, but sometimes, and even Lance did, Lance discounted it as well. He had to go through that process, but you heard the difference for Lance. The difference for Lance was he lost money, he took big stings, and he learned from it and changed his behaviors. See, some people, they go ahead and they don't change their behaviors. They keep doing the same thing that they were doing before and making the same junior trader mistakes. All of you have an incredible learning opportunity to learn from one of the few people, like I said, myself, that can do this publicly live and do it very successfully and give you guys one heck of a learning opportunity. Now you're also having a great other learning opportunity, which is hearing from Lance, who's been going through this journey these last 9 months, making these mistakes, growing from these mistakes, and is now seeing his trading and his account grow as well. Huge learning opportunity because many of you still need to go ahead and get that aha moment to get yourself out of the ruts. You hear me say things every day, and I get the, the head to chin, down to chest look from you as you lower your head saying, I know, Rob, I can't believe I did that. Well, eventually, you're going to lose enough money where you're either going to have that aha moment and rise like a phoenix out of the trading ashes, or you're going to be out of this business. And I've met a lot of great people in this business over the many years that I've been doing it, and I've met my fair share of idiots too that, like, realistically, it doesn't really matter what happens to them because they're not very nice people. But the ones that always get me are the nice people that just are struggling to get the aha moments. And that's why Lance is taking his precious time today, and I'm taking this extra time today to put together, this course to go ahead and, hopefully help more people have the aha moments. And Pete, that's very nice, and we are all going ahead and very grateful, and glad that we can do this special day together. We will go ahead and we'll take a probably 30-minute or so lunch, maybe within an hour or so. Matul, maybe this is what we'll do. We'll actually shut down the recordings and we'll take a break there because we've got a lot, still lots of material to cover, and we've already been doing this for 2.5 hours approximately. Okay, so I don't want you to wilt away on me. Okay, so we'll figure out a break here probably within the next hour for half an hour or so. All right. Okay. Lots of information to absorb, though. Lots of good stuff. So with that said, let's go ahead and move on to the next learning opportunity here. Lance, let's talk a little bit about the discipline here, since that's kind of what I was preluding into. And as far as an emotional state, you have kind of a routine that helps you out, and let's see what you and the dog think about that.
Sorry about the dog there. I'm trying. She just, it's a little 4-pound Maltese. You know how they think they're size of a Doberman, so they bark at everything.
Oh yes, no, yep. She's the power charting mascot. Like I said, you'll have to at lunch. You'll have to send me a picture of her so I can go ahead and show everybody. So no worries at all. Like I said, we appreciate your time today, and I think that if anybody was actually concerned about the little girl in the background, they're not really the kind of people we want as part of our family here. We're a pretty easygoing group, as you of all people know. So
Yeah.
not that way, but we're just going to have a little fun with her. What's her name, by the way?
Paris.
Paris. Ah,
Yeah,
excellent.
Paris.
Okay, well, very good. So you have a routine here that helps you focus a little bit. Why don't you talk about that?
Yeah, for me, I mean, just as far as my emotional state, I mean, it's this, personally, it's just, working out every day just helps keep my mind straight. I mean, and every day after trading, I go to the gym for a couple hours, and that's what works best for me, as far as just kind of releasing my mind and just getting rid of everything in my mind and just kind of starting fresh again.
Now let me ask you a question. How do you feel then on days after, let's say, 2 or 3 days in a row where you haven't been able to work out? Does it have any sort of negative bearing on your trading? Is it more a stamina thing where you don't feel as energetic and so that doesn't allow you to trade as much? Or is there any impact to your trading if you aren't able to work out for a handful of days?
Yeah, I mean, yeah, there is. I mean, it's hard for me if I can't get that part of my day done. I mean, once you kind of get in a routine, I guess, and you do that every day. I mean, when you throw it off, it really kind of upsets the whole rhythm of everything.
Okay. And as far as you probably get your cardiovascular in by going ahead and chasing Paris around?
Oh yeah.
That's great. As far as this next one, we actually spoke about this a little bit earlier. Um, and I think that this is so. Let's cover this a little bit more. Again, the best way to beat the beast of bad discipline. Talk about that journey when you were first here. You mentioned it, how you were going nuts, and we kind of alluded to that. We've talked about it up till now, but I just want to have a little focus segment then, since it was a question, and like I said, we did end up answering a little bit earlier. But talk about that journey, about the whole, okay, why isn't he taking trades? Well, I'm just going to go and take these trades anyways. Then you lost money. Then you eventually realized that I actually know what I'm talking about. Of course, having almost 9 months of without a losing trade probably helped that journey a little bit. But what really kind of were some of those aha moments? What were those things that helped you realize that I actually know what I'm talking about, in this process? Because there may be some people here, since we have brand new people in our family, who might be in this spot now that you were in 9 months ago.
Yeah, when I first started your room, I mean, it was, and at that point, really the only trades that you took most of the time were just the conservative retracement trades. I mean, so there was a lot of sitting. I mean, now you're taking more aggressive trades and conservative aggressive trades. So I mean, there's more trading now than there was even back then. So I'd always really, I mean, I'd sit there and say, man, why does he not take more trades? I mean, we just sit here and sit here and sit here. I mean, it's just, and then after you get yourself in a situation where you take wrong trades, you're doing it out of boredom, and after a period of time, you sit there and realize that you really know what you're talking about, and I mean, you just take each of those non-trading times as a great time just to learn from you and about your style, and just be patient with it, and the trades will come, the right ones will come. You just have to really focus on taking those right trades.
Well, you raised a couple of good issues there. Actually, one was about taking more trades now than I was back then, because remember back in you heard me talk about this when you joined. I believe you joined in January. In December of last year, we'd actually added. And between December and January, we actually added many, many new students. In fact, some of our other famous students here, Nick and Mark, for instance, who are both featured on the front page of my website from the United Kingdom, they went ahead, both started, as I recall, in January as well. And there was many people that started in December and January. And so, of course, I was very concerned about showing the, oh, that's right, as Dwayne and Ed are saying, they did too. They joined in January. And there's probably many people who joined between last December and January. And so I was, of course, whenever I have a whole bunch of new people join, I was, at the time, getting very, oh boy, I better not show any of the aggressive stuff, because I know people just want to jump on my trades like monkeys. And so I would wind myself back up into this. I need to just focus on, conservative, conservative, conservative. And then, of course, finally, around here, we had kind of a, come to Jesus meeting, if you will, where we sat down as a large group, and I said, listen, gang, I love you all terribly, but this is how I make my money, and this is how I want to continue making my money, so that at that point down the road, when I shut down the live trading room and just go back to private life, that I continue to be as sharp, 10 years from now, 5 years from now, 6 months from now, as I am, in the current state. So, basically I finally had the meeting with everybody and said, look, I'm going to take not just the conservative trades, but the conservative aggressive and the very aggressive trades. And I had a stumbling block along that journey because I got a little freaked out back a couple months ago. You remember we had, what was it, like 40 or 60 people, I think it was about 60 people join over the course of 6 weeks or 8 weeks, I believe it was. You remember that back several months ago, and I got kind of freaked out there in the short term because all of a sudden some of those brand new people were like talking about how they just taken my conservative or sorry, my very aggressive trades, and they're like, "Oh, Rob, that was awesome, great job." And I'm thinking, you're brand new to my room, and you just took that trade. You don't even understand what you're doing. And so then I got really conservative. If you remember, for like 3 weeks, I like bottled up, and I got really conservative again, and then finally said, "Look, enough's enough. This is, I need to, for my livelihood, my family, and our future, do my trading." I'm one of the few people who can actually trade live and make money in front of people, not on a simulator. My work works for me and everything else. So I have something for people to offer, and that's what most of the people here actually said too, like yourself. In fact, I think you were one of the big, like, yes, 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 because for you, you're at that stage where conservative trades, and many of my other students are at that stage too, have been with me for the last couple of years, are at that stage where for them, they don't just want conservative trades. They want to see my conservative aggressive trades because that's where the level that they're at. They want to see my very aggressive trades because some of them are dabbling in there because they built their accounts up. So that's a good point that at this point we have that critical momentum where I don't care if I had 200 people in a month, I'm not going to go back to conservative only trades. I would rather have 5 or 10 people unsubscribe and ultimately work their way out of the business because they're a bunch of trading arcade people who are trading for a thrill, and have them leave, than have everybody who's been here with me and I've built up relationships and loyalties with these last couple of years, have to then suddenly settle for one facet of trading because that's not fair to them. So the new people, for those of you that have joined just over this weekend and the last couple of weeks, you've got a lot of learning and a lot of great opportunity to learn over these coming weeks, months, and hopefully years that you'll stay with me. Just understand though that there are it's incumbent upon you to learn what the different styles of conservative, aggressive, very aggressive trades are, so that you can learn them. But it doesn't mean you just run right out there and trade them. That being said, so in one part, Lance came in at a time where I was very conservative, but at the same time, in general, even my most aggressive days, well, I mean, I shouldn't say the most aggressive days, but like Friday was a great trading day. 6 trades within the first couple hours of trade. But then there's other days where there may not be more than 1 or 2 trades, or if a trade at all, if in the more extreme situations. So it's important for everybody to learn that as Lance has said here articulately, the trades will come. And even though we don't have to worry about the, back in January I'm only doing conservative trades, that I will never be in the situation where I'm taking lots of trades most of the time because of the fact that most of the time there aren't that many high probability trades in a day, as many of you, if not all of you, have already found out in your trading journey as you try to trade 10 times in a day and following your own methodologies, and you win some, you lose some, and at the end of the month you hope you're up. Or like Tom so appropriately said here, he said when we were talking about the commissions issue, he says, I was gross slightly positive last year, but obviously net negative, but it's not because of the commissions. He's not blaming the commissions, okay? And he's a guy, who could, he could say, oh well, gross, I was up for the year. Oh, but after all my commissions, I was down. Well, is it really because of his commissions, or if it was because he wasn't a good enough trader at the time to go ahead and be highly gross positive? You understand what I'm saying? And so, there's so blaming commissions, to wrap up on that, is not appropriate. and then going ahead and focusing on the trades. We're not here to make money on this one, lose on this one, make money on this one, lose on the next six, whatever the case may be. Bottom line is we're not here at the end of each month to look at our accounts and to either be neutral or slightly up or slightly down, and do this yo-yo effect. As you've watched my account be very consistently profitable as we've gone through this journey this year, you know hopefully that'll help you understand that the trades will come. Okay, and of course I've taken my own steps here, as we've said, to make sure people understand that we will not go ahead and only be focusing on those conservative only trades. So there's something for everybody to grow and learn from, but it is in part your own patience and discipline that will help you go ahead and become a better trader. Once you reach this threshold, that you have to realize I actually know what I'm talking about and can do something that virtually no one in this business can do consistently, and also that part of this is all you, based on you, your financial situation, where you're at, and you're not going to push me, as you can all see here, won't push me into making trades. I'm just going to take those trades because I'm very focused, very disciplined, because I know the trades will come. And like I said, just like Friday, for instance, we had 6 trades there, and the trades came, and the money came, and it'll all work itself out as we talked about the consistency. So, Lance, did you have anything else you wanted to add to that? That was really an important point. How you got to kind of have that revelation and wake up and take. And for some people, it's just going to be taking enough bad trades when I'm not taking a trade to help the people get that message. But I would just want to see if you had anything else you wanted to add.
Well, I would just mainly stress that people would listen and realize that you really do know what you're talking about, and there's a reason why you're not taking a lot of trades. And if they will just try to be patient, just wait and see. I mean, they will learn and grow with you and see the reasons what's behind the reasonings for not taking those trades.
Okay, and Nick went ahead and made a very interesting comment here as well. Nick says, I had the issue where my results were dependent on how aggressive your trades were, which was stupid. It was the best point for me to realize I need to be more judicious in which trades I take. So that's very interesting. Thanks for sharing, Nick. Basically, the more aggressive, I'm assuming is what he's trying to say, the more aggressive I was being with the trades and he tried to mimic, the less profitable that he was becoming on those, and so he realized that he just needed to be more judicious in general. And he's saying, and I don't mean, what he's saying is, I don't mean of your trades, he means judicious in general. So he realized, again, this whole selection, not just in my setups, but any other work that he was using, he needed to be more selective. In other words, getting away from the trading arcade. Back when we were kids, we all liked to go to the arcades and go ahead and put our quarter in the slot and then go boom, 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 shooting at things, okay? Action, 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 until we died, and then we put another quarter in the machine. Boom, 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 okay? And then that quarter's dead. Okay, now you got to put another one in. Boom, 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 boom. Well, guess what, gang? Guess what? Trading is not an arcade machine. Okay, wake up and smell the roses if there's anybody who thinks otherwise. This is a profession. We are professionals. This is not a game. This is not a thrill. You know what I'm saying? We're here to better our financial futures, not go boom, 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 boom at the arcade. Because guess what? Some of those tokens, some of those quarters are going to get real expensive. And just like when you went to the arcade, what always happens when you go to the arcade, you came home with less tokens, okay? So the bottom line is, this isn't an arcade game. It can't be treated as such. We're not in it for the thrill, okay? We're not in it for the adrenaline rush. We're in it to be profitable and increase the livelihoods for our families. Okay, that's my opinion, and I'm sticking to it. All right. So with that said, let's go ahead and move on here to the next session. Thank you, Lance. Trader growth. Oh, did I do something? I did something bad there. Uh-oh. I think I did something bad. Um, give me just 1 second there. I think I'll go back and look at that section at lunch, but let's go ahead and move on from there then and talk about setups, okay? Because actually and that's fine because trader growth will fit nicely towards the end as well. I think I merged a couple of those, so it ended up repeating. Not a big deal. We'll go back and see if there's anything else in there that needed to be fixed. That's the real world. That happens, and I'm glad you liked it, Daniel. Absolutely. So. As soon as possible, just don't know when, Daniel. And let's talk about setups. Okay. Actually, I'm going to check the time. Okay, yeah, we're just going to keep going through this section at this point. Setups. What setup styles have worked best for you? And I know you've talked about retracement trades, but let's re-emphasize that. Let's go ahead and talk through these areas a little bit more in depth and spend some time on it. Make sure people understand these things. I'm sure some people are just going to read ahead to the other answers, but hopefully they're going to focus on what you say here because that's really important. So why don't you talk about those retracement trades again, and then I'll flip to a chart for you.
Yeah, the retracements have always been, I mean, those are the trades that really work out well all the time usually. I mean, it's from the wide range moves on the 15, 30, and hourly charts. When you see that price action where the price is just dropping, I mean, just really rapidly. I can remember when I first saw those type of trades. I mean, the price is moving so fast it would literally scare me. I'm like, man, what are you doing entering the market at this point in time? But I mean, now I see it and I'm like going, yeah, I mean, it's a good thing at that point. But those are the ones that work best. I mean, that I've always seen.
Okay, so of the different trades like speedline continuation trades and things of that nature, for instance, fish hooks and all the different types of setups that are out there, the one that is your personal favorite on the 15-minute, 30-minute, and hourly charts in particular is my retracement trade, where it comes wide distance, ultimately has that feverish activity down to rising key support or falling key resistance. Is that correct?
Yes.
Okay, and then again, that's on the 15, 30, and hourly gang that he really gets the most excited about, not the 5-minute chart. Okay, is there anything about the 5-minute chart? Is there a reason why the 5-minute chart is not as favored in relation to the other ones?
The 5-minute just really doesn't hold as well. I mean, it's I will take them now because I mean I'm prepared to scale into it. But I mean, at the point then, I mean, if you're just using one contract, I mean, off a 5-minute chart, you're really going to have to be prepared to you're going to have to add in more back to your support or your resistance.
Did everybody hear that? Did you hear that? Okay, I want to make sure that that's sunk in good and deep with everybody. Okay, good. Looks like everybody's, got that there. Okay, I can always tell. Come on, guys, you gotta stay with us here. This is important stuff. A couple people asked me to repeat it once I made sure that I emphasized how important it was. So we have some repeats. So Lance, if you do me the privilege, please, and the honor of repeating that, I appreciate you taking the time to do it. It is worthwhile, as you know, to go ahead and repeat it. So let's go ahead and let's stay on that subject for a moment here. Um, the, the key is that, and then what you're going to focus on is the difference between the 5-minute chart and why on that one you trade, less, or if you do, you intentionally have a backup plan in mind. So why don't you walk through that again, and let's make sure you listen this time, gang. Okay, go ahead and repeat that for us, buddy.
Yeah, if I take a trade off of a 5-minute chart, I'm entering that trade expecting it to go to the 15 or 30-minute chart. I mean, I'm expecting to have to add into it. Um, the 5-minute charts don't hold as well as what the 15 or 30 or hourly charts are going to hold. I mean, you're not going to find as much resistance or support at that area.
But
Um,
Lance, a lot of people trade off of tick charts and 1-minute charts. What must they be going through?
I could only imagine.
Right. Which is why you always hear me, gang, say, if you're a trader, you're an intraday trader, just sit there and just focus on tick charts, 1-minute charts, or even just a 5-minute chart, um, you know, can be very hazardous to your financial health, in my opinion. Um, those of you that have known me for years know that really my focus for years has been this chart and this chart and excuse me, and higher, the 15 hourly and higher. In the last couple of years, 3 years or so, I've added the 5-minute in there more because of the um, uh, the volatility and the nature of the volatility and what I've referred to as hyper stupid volatility in the last particularly 24 months. And so, we've certainly been using the 5-minute more, but I'm always much more prepared for scale-ins off of these levels, and then always looking to put bigger armor and scaling into the higher time frames, and that's something that Lance has figured out. Okay, that's why I wanted to go ahead and have it, because I see so many traders get excited off of a 5-minute chart, but there's times where that 5-minute chart just won't cut it for me. And like I said, the higher the time frame you go, the more important and meaningful the resistance or support level. Okay, so and that's something that he's figuring. So just to clarify though, you will take 5-minute chart trades like I do, but you are mentally prepared to go ahead and scale in and only start with one contract, if I heard correctly, on the 5-minute chart type entries versus a higher time frame entry. Is that correct?
Oh yeah, I mean, if I've taken a trade off that 5-minute chart, I'm fully prepared to have to add in at lower levels or higher levels.
Okay. Let's see. Let's see if I can go back to a couple of these questions here. Um, okay. Do you put an entry at the line or wait for it to hit, retrace, and attempt again later? Describe the exact first entry. Okay, so in other words, basically, when it's coming down here, do you put it, above the 18, at the 18, right at the 20? Do you wait for it to trade through and pop back up? Kind of, how do you usually like to enter my trades when you see those?
Really, it kind of depends on the price action at hand. I mean, if the prices are really falling and it's coming down to that, I'll enter at market. I mean, but if it's something that's far up and I have a, say it's 20 ticks away and you're expecting it to come down to that support level. I mean, if it's far enough away, I'll go ahead and put an entry, at that rise in support.
Okay, so if it stops 2 ticks above, so if it stops at like the 18 period moving average, you may miss the trade then because you're waiting for it to come down to the 20, or if you see it just kind of hitting anywhere into that range, the 18 or the 20. And I know how I do these things, but I think people want to hear what's worked for you, so that's why I'm trying to pull out some of the specifics of that. You said though you will enter when it's feverish. You will enter at market. Um,
Yeah.
And again, is that just as it's coming down within a tick or two, or it's only when as soon as it has feverish activity and actually touches the moving average that you'll actually, or whatever it may be, pivot point, the support or resistance level, where generally speaking, is it is the feverish activity more important than the level itself, or do you wait for the feverish activity and then wait till the level? What's kind of the specifics there?
I mean, to me, the feverish activity is more important. I mean, if it gets down within a couple of ticks of the price you're looking at, and there's a lot of feverish activity, I mean, I'll go ahead and enter right there. I mean, but I'm also, if you're entering above those areas, I mean, you're pretty much going to have to expect it to come down to those areas, so you might have to scale in. I mean, from a one contract trader standpoint, personally, when I was doing that, I mean, I would only enter it if it came down to that 20 period rising entry right there.
I was so hoping you would go ahead and say that.
Yeah.
Because, gang, look, I always tell it like it is, because that's the only way for me to get through to you, is the things that I believe are important to go ahead and be successful, because everybody wants their cake and eat it too, and you know what? This is the real world of trading, and nobody likes to hear the real world, but you know what? You got to take your medicine. And this is what everybody wants. They want the market to come down, and whether they place their order here, they place their order here, they place their order here, here, they want to get it immediately filled and have it run right back up and make them millions of dollars. That's what everybody wants, okay? That, and so I'm not, I'm not oblivious to that. The reality is, though, as Lance is just saying, if that feverish activity happens up here, he may be willing to go ahead and take that entry. You've seen me be willing to take that entry. Okay, I agree wholeheartedly with that methodology. The problem is, if you're a one contract trader, whether that's because of your account size or whether you choose to, then don't complain to anybody if you choose to enter here and it goes down to here and you've got to take some heat on the trade. Because if you decide to go and enter up here with your one contract and then it goes down deeper and then it only bounces back up here a little bit, okay, so leaving you a small profit margin because it went through you before it did the bounce, then don't complain. At the same time, if you wait for it then to come down to here, okay, and it goes through, you have to be prepared as a one contract trader, but to take some heat. However, in my opinion, but the reality is, the more conservative of a level you actually wait for, you'll miss the trades that only come to here and go up, okay? But you're far less likely to take more heat. What kind of trade do I call that? A conservative trade. If I've got multiple support levels in near a certain area, and I'm a conservative trader, if I had to go back and start all over again tomorrow, okay, is what I've always, equated this to for you, I would go ahead and be waiting to get near those key levels. In other words, as we look here, okay, I wouldn't go ahead and be focused on speed line continuation trades here and here and here, okay? I wouldn't be focused on those types of trades. I'd be focusing on my conservative retracement trade, okay? Just like Lance is saying, that's still his favorite, and he still uses that to keep building his account. And so that's why I wanted you guys to hear right from someone who's in the process of doing that, which one he likes. Now, I think if I've understood correctly, Lance, you are taking more of my speed line continuation type trades as part of your mix now, because you've earned the right to do that. You have more contracts. But what you're saying is your favorite higher risk, lower probability trade still ends up being the retracement trade, although you are starting to take more of like my speed line continuation trades now because you've earned that right. Is that correct?
Yeah, I mean, it's I do take the trend continuation trades now, but I mean, it's still by far, I mean, the retracement trades are the ones that it's like you just, I mean, you pretty much know they're going to work. I mean, it's just that, I mean, they're just high probability. I mean, and it's they always usually get a rejection point at there.
Yep, and we're going to, and so that's good. And so then from there, and we're going to talk about your profit targets on one of the other upcoming slides. But so this is good. Appreciate you sharing, what you people, what ones that you're most interested in there. Because I talk with people, I get excited, and like you said, you remember back to your days when you used to watch me take this trade, you'd go ahead and freak out. I'd be like, whoa, what's this guy doing? I think everybody goes through that at first. Then they start to, like you've done. Now you said, and I heard you say it in the process, you now get kind of excited when you see those things starting to happen. When you see the junior traders amongst us getting shaken out of their trades that were long, and fresh shorts coming in thinking they're getting ready to sell this thing down to zero, you go ahead and, in a certain sense, the same sort of excitement that I have when I'm taking those trades. Is that correct?
Oh yeah, I mean it's definitely. I mean you see that happening, and you're just it's time to strike then.
Okay. Mitul, there is absolutely no guarantee in life. For me personally, I find that the more support or more resistance levels off of a 15, 30, or 60, the better. There's never a guarantee something's just going to stop every time. There's always the exception to the rule. However, the rule is, generally speaking, for me, I find when I've waited for distance to come in, and so some of those key elements, as we're looking at the retracement trades, without turning this whole thing into a retracement trade presentation, because under the setups, entries, and stops video, we talk about TC20 trades. But let's just go ahead and put this up there. Basically, what you're looking for, that's a horrible drawing. That's why I'm a trader, not a drawer. That's even worse because I'm trying to get a nice little angle going there. And so when the price goes up and up and up, what you're looking for is enough distance back to the support. And the problem is a lot of junior traders, they want to go in like 5, 10 ticks away. They want to go ahead and start, if a moving average is that close, they want to go and start going long right off of that, Matul. But when you've waited for a decent stretch, 30, 40, 50 ticks there, you've waited for a decent stretch, you've gotten that feverish activity, those are usually pretty high probability bounce areas. And that's what Lance has personally found for his trading. So, of course, I talk about it for my trading as well, obviously, and Lance has picked up on some of those things and now finds that to be a personal favorite. So for those of you that were wondering what's Lance's personal favorite trade, you've just gone ahead and gotten to hear it. Appreciate you talking about that, Lance. Now, as far as the next question now, what setup styles have not been good to you or worked the least? And we talked about this earlier, but now's a good time as we're talking about setups to refocus on this. So let's talk about those that have worked the least for you, your least favorite.
It's definitely the very aggressive counter trend trades. I mean, it's like I said, I've made lots of money on those trades, but I've lost more than I've made, and I mean, it's just it's just not a consistency that you're going to find on the more conservative trades. I mean, so I really just try to just focus on staying away from that type of trading.
Okay. Now, we've also had other traders join us in the not too distant past here. Guys like Albert, for instance. I like to focus on Albert because he's a guy who I met, approximately a month ago now, and that was Albert's favorite trade. And of course, Albert's had a rough go of it. He's made some money, took some really big hits doing that, and now he's completely looking at the market exactly the opposite. He is now forgoing those very aggressive counter trend trades. He's completely changed the way he's thinking. A lot of traders just love to do those. And it's good to see you're saying kind of the same thing. You've lost lots of money on just one too many of those trades, and you realize those trades aren't for you. So for those of you out there that are still aggressively counter trend trading and getting killed, too many times. Now here's another person. There you go, Albert. Look what Albert's saying. He's saying my old shorts are longs now. He's now completely rewired the way he's thinking as he's trading more with me, and understand what I'm doing than what he used to do. So, and now, Albert, I think every trade you've done since you've been with me, that you've learned has been profitable, if I recall correctly, or darn near it. I know you've talked about it. Hey there, thanks, AC. Yeah, that's what I thought. So Albert's very happy since rewiring himself. So I try to talk with you. Those of you that are counter trend and very aggressive counter trend traders, I have yet to see a person out there in this business, and I'm not talking about the trader educator wannabes trading on simulators. I'm talking about real traders making real money. I have yet to see anybody who can show me that they're consistently profitable with very aggressive counter trend trades. And every time I put the challenge out there to give me a name that I can go follow up on, in case there's somebody out there I haven't heard of, nobody can ultimately give me a name that can pass the muster. So, and I've been doing this for many years, long before most of you ever thought about being traders. And I have never ran across an aggressive counter trend trader whose their full-time strategy was to trade that. Well, thank you, Mel. I appreciate that. Mel says, tell you what, this has been an excellent presentation and bringing some odd and end stuff together for me, and I have been here forever. You have been here forever, Mel, which is great. You brought your friend now, Tom F., to our family as well, and he, he's been a perfect fit to the group, and so good. I'm glad you guys are liking this, and it's great to see our people that have been here for a long time getting a lot out of this, even though this is pulling bits and pieces together from different parts of the process to help our small contract traders. It helps though on a macro level with some of the things as well, so it's great. So with that being said, Lance, let's go ahead and move then from the very aggressive counter trend trades down to the indicators. How dependent are you on the multi-time frame indicators? For those of you that don't know, those are my little arrows at the top and the bottom, the power chart indicators. So it looks like somebody wanted to know about that. If you want to briefly talk about how you use my indicators, I guess that might be helpful, I suppose, and what your thoughts are there.
Yeah, I mean, I use the MTF indicators for conservative, aggressive trend continuation trades. Basically, when all the time frames align. I really don't use them on the retracements too much. I mean, I'll look and see if there's a lot of background, but usually by the time you get those good retracement trades, I mean, you pretty much know that where the indicators are. I mean, without him looking at it, really. So mainly, I'm more dependent on those for the trend continuation trades.
Okay, and that's a good point. On the retracement trades themselves, oftentimes you can actually see the 5 minutes start to back off where signals are no longer given in the direction of the, let's say, an uptrend, because what will happen is there'll be a short-term weakness as it's getting ready to pull back down to the rising support or falling resistance, whatever the case may be. And so what's more important there is really the background. You guys will watch me during the live trading session. What's happening is you'll see me go ahead and say, look, the hourly chart, the 30-minute chart, have got these great tone and lock signals. So when it pulls down to that 15-minute rising 20-period moving average, gang, I'm going to look to go ahead and take a long. Okay, so the background is very important. Now, where I use the indicators the most is, as Lance is saying here, and Lance, you wrote this, but it's nonetheless very, very appropriate for me, is the speed line continuation trades. Okay, and as I'm looking for short-term blips in the 5-minute charts, for instance, against the prevailing trend, and then a resurgence back in the direction of the trend, those are certainly areas where I go ahead and focus on them as well. The other area, it's also good. Certainly, the indicators from an intraday perspective are very useful. But don't forget, even though we're intraday traders here, the end of day traders, those indicators can be very useful for the longer term perspective on what's happening with charts. And we've shown that. I don't want this to become a big pitch for the indicators. I'm just answering the question. So we'll leave it at that for today. We can talk about the indicators, on an intraday basis, and end of day basis, on another, presentation, or, in the room, of course, as always. But the point being is that, so Lance is saying not so much for the retracement trades except for background information. Yes, the background information would basically be the next couple higher time frames. So if you're talking about the 5-minute chart, certainly the 15, 30, and hourly. If you're talking about the 15-minute chart being a retracement trade, then you're really talking about the 30 and the 60, and of course daily as well. By the way, can everybody hear me okay? I'm just doing a little sound check there. Okay, great, perfect. All right, looks like every once in a while people have like their volume kind of going in and out. So Simon, it looks like you got it back now. Yeah, chances are if I just wait for a second. Yeah, Brian, that's coming in the not too distant future. I've been waiting to do that for Mel too, but this was much more important. Small lot trading techniques was much more important to get done initially than the longer term stuff. I will be doing this, the swing trading and longer term presentation as well, but as you're saying, this is great. People need this, okay? My hope is that what I'll end up doing is in the future for the junior traders that join us for several months or a year, they'll end up getting this presentation as part of their entry package, and this one and the Rob's Trading Rules for Survival will go ahead and become like two of those staples that they must have when they first join me. You know what I'm saying? So I want this to be kind of a lasting legacy because this is important stuff, And so let's go ahead and move on then to what time frame do you take most of your trades from? Okay, and why don't you talk about that a little bit more? Because really, technically during the day I have more conservative aggressive trades off the 5-minute charts and that, but the best trades from my perspective and yours are those retracement trades. So there's different opportunities and different levels. So why don't you talk to us, expound on your answer that you have there, Lance.
Yeah, the 15, 30, and hourly charts, seem to be about the same as far as taking the trades off the charts. It just really depends on when you're getting that wide range of movement and where it's, what time frame it's coming up to. You definitely don't want to take a trade off of a 15-minute chart if you're, say, 10 ticks away from that rising or, the resistance or support level. You want it to be a wider range distance. But of course, the hourly chart, it's always going to get most of your attention in determining the trend to start with. So you really have a lot of focus on that, and then just working your way down each time frame as you go.
Let's try that again. Gang, can you hear me? Sorry, thank you very much. That's always good. I can see who's paying attention. I looked over and all of a sudden the screen was flying by, and I'm like, what's going on over there? And then all of a sudden I saw, about this. I couldn't believe how fast it flew by. So I knew something was going on. It caught my attention actually, off the peripheral of my eye. Thank you, gang. Let me go ahead and repeat that. And what I was saying here, gang, was that basically these are all 15-minute charts here, 15, 15, 15, 15. Lance put together several 15-minute, 30-minute, and hourly charts, but I can tell you they all basically look the same. Okay, the chart is a chart is a chart as far as the time frames and the setups that he shared. They're all basically showing the same exact thing. So as fate would have it, as I was collecting them all together, I just ended up pulling the 15 minutes up. But Lance, what my question was to you was then I'm assuming that what you're liking off these 15-minute and higher time frames is the reliability factor. Then, as you were talking about, 15-minute and higher, going ahead and being more reliable than like the 5-minute, where you'd have to run the risk more of the one contract entry, worrying about additional scale-ins. And so that's one of the reasons why, that's a key reason why you focus so heavily on the higher time frame. Was that correct?
Yes, I mean, you don't want to, I mean, if you, the price is really close to the support of the resistance areas, I mean, you're going to have to expect it to come through it. I mean, that's just the way it is.
Okay. And I think that, let's see if there was a question or two that I can, your entries, generally speaking, we talked about the feverish activity and possibly entering with a market order, but how often would you say you enter a market order versus a limit order?
I would say the limit orders are probably, 80 to 90% of the time.
Okay. And as far as the 15-minute, 30, and 60, are you saying that you feel that these are some questions I'm trying to answer? I had to scroll back a little bit, and then actually got some new ones coming up, trying to grab some of these as we're going through. Are you saying that the 15-minute, 30-minute, hourly all kind of have equal, I'll use Matul's word, bounceability in the grand scheme of things from your perspective? Are you willing to take a 15 and or a 60 equally, or do you look at a 15-minute and say, well, maybe I'll do one or two contracts off of this 15-minute chart, but I'll do four contracts off of the hourly chart? Is there any sort of degree of credibility that you give any one of those over the other, as we're talking about 15-minute or higher?
Well, of course, your hourly is always going to give you the best support. The 15-minute chart, I mean, and it all depends on the range that you're getting as far as when it's coming down to that moving average. I mean, sometimes if you're going to take a trade off a 15-minute chart, you don't have that much range. You're going to have to expect that you're going to have to be adding in down to the 30-minute chart. I mean, so it really depends on the range of each, the bar that's happening at hand, as far as what you're going to expect that bounce to happen.
Okay, that is a very appropriate response, because the more the market goes ahead and trades or pushes into a level from a higher level, in other words, the more range is associated with that bar, the better. For instance, a 10-tick, 20-tick, or even a 30-tick range on an hourly chart isn't so hot, is it, gang? But a 30-tick range on a 15-minute chart might do the trick. Does that make sense? A 30-minute, a 30-tick bar on a 5-minute chart might really do the trick. But on an hourly basis, looking at 30 ticks and below isn't so hot. So, and then in any of these charts, if we're talking a 5-10 tick pullback to the rising support, that's usually almost always something you see I will not trade on these 15-minute, 30-minute, hourly, quote-unquote, retracements. 5 or 10 ticks, that's not much more. That's not much of a retracement. Okay? Good, Matul. I'm glad that makes more sense for you. I have basic ranges there, Matul. Usually, ideally, 20 ticks or more, 25 ticks retracement into the 5-minute chart, 30 ticks or 30 ticks or more on a 15-minute, and 30 ticks or more on the 30-minute. Hourly is usually 40, 50 ticks or more. Minimum pullback, into the bar is kind of a general rule of guidance there. So a lot of that depends where that feverish activity kicks in, gang. That's part of the problem as well. Okay. Now, Paul asked a question, when taking a retracement trade off of the hourly, do you find it's generally more difficult to find a backup support, Lance? I know my answer, but I'm going to go ahead and let you go ahead and ask that.
Um, yeah, I mean, definitely it can be harder to find a backup. I mean, that's why you're wanting that, 40, 50, 60 tick range to get enough range out to where you're going to expect something out of it. To me, I mean, that's the way I look at it.
Okay, and I'm going to add to that by saying that yes, just in general, because if your trends are that strong in the background, your 5-minute, 15-minute, 30 minutes are going to be a little bit tougher. But I always still look because a 200 period moving average on a 5-minute or 15-minute or 30-minute chart might be prevalent where that 20 period moving average is on the hourly chart. So don't forget to be looking at those 5, 15, and 30-minute charts for the longer time frame support resistance levels. Don't forget to also be looking for pivot points, and don't forget to be looking at the daily speed lines. Okay, that's all very important. Where is that all taking place? Okay. So don't just look at the hourly 20-period moving average in a bubble. That would be a mistake. You still need to look at the 5, 15, 30, and daily charts for additional support resistance levels that may be prevalent. Okay. We go ahead. We have some more questions here. Give me just a second, gang. Let's go ahead and see some, because we're going to go to entries and exits in the next section. So I want to see if a lot of these might be entry and exit related there. I mean, setups, entries, and exits kind of all tie in together there, but what we may do is take ourselves a little lunch and come back, go into the entries and exits, and then answer a bunch of these questions that are there based on the fact of what I told Matul as far as trying to get him and other people a lunch. So we've been going for about 3 hours now already, and looks like you guys are having a lot of fun with it based on the participation. So why don't we do this? Why don't we go ahead and take ourselves a lunch here. Let's go ahead and go till about 2:15 Eastern time. 2:15 Eastern time. So that's about 40 minutes approximately there, looks like. Okay, so I guess we've been going for approximately 3.5 hours. Time's flying by when you're having fun, but we've got more to cover here. So I want to kind of keep on this road. For those of you that had questions about setups, entries, exits, feel free, go ahead and type this in. Type those in now, and we will go ahead and resume here at 2:15 Eastern. And we'll kick off then with those rounds of questions and the next ones that we have to answer that were already your questions up here. Okay, so with that said, have fun, gang. We'll see you in just a little bit. I'm going to turn off the recordings and see you at 2:15 Eastern. Glad you guys are having fun with it. Bye-bye, everybody. Thanks, Lance. We'll see you in just about 40 minutes there.
Okay.
Okay, gang. Well, welcome back to the festivities here. Hope you guys went ahead and had a great little break there for a few minutes. We've already been going 3.5 hours or so approximately strong in this presentation. Thank you very much for all the very nice comments that you've given to myself and Lance here during the break. Very nice of you. I'm glad that this is, exactly, what's helping some of you with those aha moments. Lance, are you back there?
Yep, I'm back.
Super. Well, let's go ahead and get a couple of housekeeping items out of the way first there. You're very welcome there, gang. Appreciate that. First of all, the most important afternoon topic here is really, what does Paris look like? So let's go ahead and show the world what Paris looks like. So that's been our power charting mascot this morning, who's been making sure she keeps Lance, on the right side of the trade, and goes ahead and, he behaves himself over there. So that is the cuddly and cute little Paris. Okay, so just had to get to the important stuff first. And now we'll go ahead and focus on, those secondary issues like trading. So let's go ahead and, we had actually different questions that had came in here. What I think I want to do to start off is actually revisit a topic that we ended up temporarily having a glance over earlier. It's actually right before the setup section, and that was on trader growth. Okay, so what I want to do is just start off with covering trader growth, then we'll go back to the setups and then kind of reconvene with those questions, and then pick it right on up through, of course, entries, exits, scaling, and so on and so forth. Okay, so Lance, with that being said, what metric do you use to know, so really what did you use to know that you were ready to go from conservative to conservative aggressive trades? I know that there are a lot of people who have been here for several months and or longer, of course, and are in that phase right now. They're asking themselves, how do I know? It's like, wow, okay, this is great. I'm taking these trades, but what do I do now? Do I start just taking those? Do I go to very aggressive? Can I do both? Why don't you talk a little bit more? I see your brief answer here, but if you could expound on these sections a little bit more deeply for this answer, that'd be great.
Well, for me, I use your indicators for the conservative aggressive trades. So I mean, understanding those thoroughly, and also the when it also breaks through those volume spread analysis areas, is one of the main things that I look at. And also it's being able to withstand the heat of a conservative aggressive trade when it goes against you, because I mean you're entering a conservative aggressive trade pretty much preparing to have to continue to enter contracts as the trade goes against you. So you have to be mentally ready for it. Also, your count has to be large enough to withstand the scale-ins that you're going to have to do as it does go against you. And it's surprising how much it really takes to actually scale in when it starts going against you.
Well, and we're going to talk about scaling. We're actually going to pull out the trading scaling calculator, and we're going to actually talk about those things in just a few minutes, because it is important for every person to understand their limitations as it relates to scaling. So that's going to be an exciting portion coming up here in just a little bit. But so now understanding the MTF indicators. Okay, so you went ahead and watched the 5.5-hour video and also pay attention to how I use them here, and I assume that you've gone ahead and done a lot of off-hours studying with them as well, kind of looking at them in off hours and seeing which patterns make the most sense to you. Is that correct?
Yeah, I have. I mean, and it's for me, I don't know if a lot of people use the more shorter time frames as far as down to 2 minutes, but I don't ever use those. I mean, I'm sticking with the higher time frames where everything's aligning through the hourly down through the 5-minute and making sure there's a trend there. So I mean, that's I am selective as far as that. I'm not going to be overly aggressive and try to jump on a 2-minute time frame.
Okay, so there you go. There's a little tidbit from Lance. Lance does not use that 2-minute chart to take those more scalping related trades, if you will, where he's going in for a couple of ticks on a more rapid chart. Maybe that's something for a couple of you to think about. See if that makes sense to you. Okay, and then basically another part I heard you talk about, you said like my VSA type setup, which is almost the anti-VSA type setup. Do you rate that as a conservative aggressive, or very aggressive trade? Just to make sure that I understand, and that the group understands where you're coming from as it relates to that particular trade.
Well, I mean, when I'm looking at it as far as entering on that type of trade, I mean, I'm looking at it as being a conservative, aggressive trade. I mean, it's
Okay, because really the retracement trade is the one that you consider to be your most favorite conservative trade.
right.
Okay, okay, great. Um, so in your mind then, when do you graduate? Have you graduated? When do you consider a small contract trader, small lot trader if they're trading stocks? When do you consider that they've graduated? Is it dollars, cents? Is it all about how much heat you can take? Is it the specific number of dollars in your account, or how you act as a trader? Where does your head go?
I think it's more of how you act. I mean, it's the discipline that you can maintain and wait for that right trade to set up. I mean, of course, other factors do play into it a lot, but I mean, the discipline is really the key, I think. I mean, for me.
Okay, I'm going to go ahead and stop there for a moment and re-emphasize that comment, because I agree with that 1,000% and more. Every day almost, it seems like I use the analogy here, gang. If I had to start all over again tomorrow, okay, you guys have heard me say that it seems like almost every day. If I had to start all over again tomorrow, I'd focus on, the more conservative trades, right? So I'm seeing some yeses and you agrees. So the point is that I can have a small account and still act like a professional. And each and every one of you here better get that and this through your head. Any one of you could have millions and millions and millions of dollars here and still act like a small contract, aka junior trader, okay? Just because you got a big old portfolio doesn't mean you're a big man or big woman on campus. All it means is you have the risk of losing your money that much deeper, that much faster, okay? So I really want to go and emphasize that your professionalism, when does a trader graduate from a small contract trader? Well, if they have that professionalism, if they treat every trade like a professional market decision and not putting, the quarters in the coin slot, as I was sharing with you earlier, going bing, 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 and playing like a shoot 'em up arcade game, or any number of other types of arcade games out there. When you start treating every trade, regardless of contract size and how many points you plan to make on that trade, and et cetera, when you trade as a professional decision and not I'm taking this trade out of boredom, I'm going to go ahead and go for 10 ticks on this, and then 5 ticks into it starts to reverse, and you're sitting there saying, I don't care, I'm going for 10 ticks. Market's got to give me what I want. And all the other junior trader mistakes that many of you have made out there, okay, when you get past that, okay, then you're starting to graduate from the small contract trader level, both psychologically and likely financially, is my guess. And Lance, I think that's what happened with you. You started to get away from the petty decisions, the petty treatment of your trading, and you started to get more serious about it and getting more disciplined, getting more focused, and then you were able to go ahead and build your account, not just because you could trade more contracts, but the only way you were able to trade more contracts in part was by trading and doing well with your trading. That helped build your account up, and so I think the one kind of helps the other. I think that's what you saw as well, correct? That good trading decisions help build your account, which then gives you an opportunity to potentially go ahead and trade more size, and then it can feed upon itself from there. But it all starts with professional trading decisions. Is that correct from your opinion?
Yeah, it's definitely a stepping process. I mean, you have to really just master the discipline level first, because I mean, if you're sitting there antsy trying to take a trade all the time, I mean, you haven't got to that point yet. I mean,
And yet that's where Lance, I every once in a while I get the whiny baby syndrome. Oh, I've only got one or two contracts to trade. I can't do that. Newsflash, people, okay, that have that kind of mentality. All right, I see a couple of you laughing, but it's true. Sometimes people are like that. They can't, those are the people that just can't. They can't see the forest, beyond the trees, and or the trees in the forest, however you want to say it. Bottom line is they can't see, very far in front of them. Very short-sighted individuals. If they acted like a professional, traded like a professional, focused on the higher probability, lower risk trades, then they might have a chance at growing their account. But instead, they want to be big man or big woman on campus right out of the box, try to be like Rob, and then they get themselves into a jam because they're not Rob, and they go ahead then and give back all that hard work and effort. And so the reality is a lot of this is the discipline to wait for the right trades, because if you have a small account and you want to build it and you can't take a lot of heat because it is a small account, then more importantly, and Lance, if I recall correctly, this is what you did. You eventually start, after you realize, oh, I can't do those conservative, aggressive, and very aggressive trades. That's not Rob's fault. I just can't, because that's not where I'm at with my ability, both financially and emotionally. So you went ahead and you focused on like the conservative, like retracement trades, and that was like your quote unquote bread and butter, correct?
yeah, I mean, that's definitely, I mean,
So it was the discipline and the bread and butter type setup there that helped you build your account. Something I talk about here all the time is focusing on the one or two setups. But see, as you went through initially, Lance, remember you went through that phase that a lot of the junior traders go through, if not all, every junior trader is, well, gosh, I'm used to coming from trading rooms where they'll trade 5, 6, 7, 10 times a day. Hey, they may not make any money, but hey, I was entertained. Well, Rob is giving me all this great information, but that's boring. Great information is boring. That's not fun. I just want to see the next trade. I don't care until you lose enough money in your account, then you unsubscribe from that person, and then you go somewhere else. Well, me, I'm just going to focus on giving great information and doing really great with my trading. And, if a person's stuck in junior trader mode where they can't recognize the discipline, and what I'm saying is so important by what I'm saying. If I have the knowledge I have now, you give me a small account and I can go ahead and build it again. I just won't take nearly as many trades as I'm taking now. I'll focus more on those conservative trades to build my account and earn my way back up to conservative, aggressive, and very aggressive trades. So Fraser says, all of that you just said is exactly what I've gone through and agree entirely. So, also Evelyn asked, Lance, do you use the tone, lock, and fire indicators? And Evelyn, I'll answer that one on Lance's behalf, because the short answer is yes. That's what these tone, lock, and fire indicators are, is the MTF indicators. The power charting MTF indicators, multi-time frame indicators, which includes the tone, lock, fire, and thrust. Okay? So yes, Lance does it. And so what Lance said just a few minutes ago, Evelyn, was that he uses those to help with his conservative, aggressive entries. Okay, so I hope that second part that I tried to go ahead and get to everybody here, let me clear that other part off, is making a lot of sense, because it seems like it's going to be a rite of passage for every trader to get through. Some traders get through it fast. Some traders get through it fast and they quickly realize, okay, I get it. I understand, less trades is more, and they'll make that fast. Other people, they've got a semi or quasi gambling addiction, and they need that adrenaline rush. Like our friend Drosso, he openly, and his mom's in here right now, I think they may both be in here, they'll openly admit, Dross, feeds off that adrenaline. Yep, here he is. He says, yep. So, he openly admits it, and that's why he came to sit with me for 2 days up in Chicago here last week, because he understands that he knows he needs to fix the problem, and he learned a lot by just sitting there watching me, watching my physiology about how calm, cool, and collective I was in person, not just over the internet, so you guys aren't seeing me fidget around here and act all weird and do crazy things. At least nothing I'm willing to tell you guys about over the internet. No, seriously. I mean, but the point is that he saw live and firsthand, right in front of me here. And see, Dross is saying, even when I was bored, I'm not sitting there tapping and banging and screaming and freaking out. I'm just sitting there calm, cool as can be, waiting for that next professional decision to appear. In the meantime, the only professional decision is to sit on my hands. That's what separates me. And I say this all the time, and everybody always comes, not everybody, but a lot of people come up with the same silly response, which is, no, the fact that you got all that money separates you from the junior traders. No, it's it, it's the psychology, it's the perspective, it's the discipline I have. That's what got me to where I'm at. And that's why I say you take me back, you give me that small account, I'll just take less trades and I'll build my account slowly. If I had to start all over again, I say that, and I try to emphasize that to get people to understand. All having a big account does is mean you can make a lot bigger and more stupid mistakes. Lance found that out himself the hard way. It wasn't even really a stupid mistake, it was a silly mistake. He was able to grow his account, but he forgot to up his risk margins. He had had a fixed level before, and so after a couple of ticks against him, he got blown out of a trade that was a perfectly good trade. In fact, one tick beyond his trade, it went right back his way. It was only went a few ticks against him, but he went ahead and he got blown out of that trade because he forgot to up his margins, because he had set a much lower margin, which was fine when he had a much smaller account. But then when he grew his account, and so he calls me one day and says, Rob, you're never going to believe what I did. And so the point is, all having a big account does is allow you to make bigger mistakes. Okay, so it's amazing how many people envy my position, but I worked extremely hard, and that's why I said, to those of you, I brought Lance in because he's a real student, just like you guys are, and he's been going through these trials and tribulations and growing his account, and he's doing what a lot of people think I don't understand anymore, which is so untrue. I know because I work with you guys. I got hundreds of students now, and I've worked with many, many thousands of students over time, over the last several years, long before power trading was ever around. I've got 4,000 subscribers on YouTube alone. You can imagine all the emails I get from those junior traders. Hoy, 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 hoy. You guys are light years ahead of them. And so the point is that I understand the mentality. I've been there, I've done it, I've bought the postcard, and it shouldn't be called Hallmark cards, it should be called Hoffman cards, because I can write the card better than anybody else can. Okay? So that's a really huge learning opportunity. Those who choose to get that and understand, oh, okay, it's not my account size, it's what I do with my account size that's going to separate me from the pack. Lance figured it out. Many of you have figured it out, but I want all of you to figure it out. Okay, and so that's what I'm doing, trying to reach out today with this presentation and bringing in someone else besides me, one of my students, one of you, who's in that spot, who says, I got it, I figured it out, and hopefully that really helps give more than a few of you aha moments. And I know several of you commented earlier, you have been having aha moments today, and I hope that you get a lot more throughout this process. Lance, as we look at the last part of this trader growth segment here, it says, has Lance grown comfortable trading when Rob is not around and being successful on his own? Why don't you talk a little bit about that? Because how you like to stand on your own 2 feet, but at the same time you value my opinion, and how your perspective is when you're not with me in the room.
Yeah, I mean, it's I definitely take trades on my own. I mean, it's the retracement trades are I mean, after you learn what to look for on those, I mean, they're you'll always take those. I mean, the conservative aggressive trades, I mean, it's I'm feeling more and more comfortable all the time with those. I mean, it's still a learning process, and I always want to get Rob's opinion when it's I feel that it's still a learning process for me in those type of trades, and I always want to make sure that I get each and every day to get his input on the markets. I mean, it's just it helps you as far as just learning the markets and knowing what to look for. And I mean, it's just a continuing education each and every day.
Well, that's actually a good point, Lance. We've talked about it. We have a lot of my students that have been here since before power charting was ever power charting, so long before you were ever with me, Lance. But as you've seen, Lance, even just in the time you've been here, let alone those that have been with me, the last couple of years, if you think about it, look at the markets and the dynamics of the markets that have gone ahead and changed over the last few years. Yeah, we're going to talk Rob versus truck here in a moment that Lance put. I figured out what he meant, but I clarified it with him, so I'll ask him, or we'll talk about that. But the the market conditions change. Bear market, bull market, congestion markets, extraordinary news events, and there's lots of different tools to handle those different environments. For those of you that have been with me the last several years, you've watched us transition through and back to and away from and back to different tools, because you need to use the right tools at the right time for the right reasons. And so you trade at the right time in the right place for the right reasons. You use the right tools. Okay, do I want to use a bull market strategy in a bear market? No, and vice versa. So the Rob versus truck goes back to the analogy that I use here all the time, which is, what happens if I go out and get hit by a truck, gang, or a bus? I don't want a bunch of trained monkeys. What I want is guys like Lance here, for instance, who learn from me, and then they just stay. If you're making money, why don't you just, there's no reason to leave, I mean, and and Lance actually is on the annual plan, right, Lance? I mean, you earlier this year went to the annual plan, and so Lance is saying, look, I want the long-term counsel. It's not just about making a whole bunch of money, figuring out a couple of things, and then leaving. He's saying, I want to learn and I want to keep growing, not just have a couple of tools in my toolbox. I still want Rob's counsel, even though I'm perfectly willing and able to take trades on my own, and he is taking trades on his own that he's learned from me. So that's the first part of that. But at the same time, he always goes and likes to think, how would I handle it? And he also wants to go and learn even more to a higher level of knowledge, and that's what really impresses me about Lance. Unlike a lot of junior traders that come in here and just want to be trained monkey, I actually turned a guy away just the other day who called me up. Nice guy, okay, in all fairness, really nice guy, but he's like, Rob, I can only be in your room for like an hour a day, so I really just want to come in and mimic your trades. And totally nice guy. I've got the emails to back up the conversation because it started, in a contextual format. And the reality was, I went ahead and told him that my room wouldn't be right for him, because that's just not the kind of people that I want to go ahead and have in the room. I want people to actually learn and grow. Because what happens if I, as I always say, go out and get hit by a bus? And I'm sure that's what Lance meant by his analogy here, Rob versus truck. He wants to learn. In the end, Lance is giving back to our group here. It has given back, and I've specifically made money on trades that Lance has called out for me to look at, which is my work that he's identified. Okay, so that's the level of knowledge I want everybody to be able to get to, that they can support themselves, but that they choose to be here. And that's a win-win for everybody. And just like, here a few weeks ago with guys like Pete and Chris and a couple of you were messaging me and calling me that night with the Japanese yen trades, that was over $3,800 between those 2 nights of trades that I would not have gone ahead and gotten. I would not have made that $3,800 had it not been for students calling me and texting me, alerting me that those setups were happening. So I raced back to the computer. For all of you that were logged in that night, then you got to watch me go to action, okay? And so the point is, that's the level I want everybody to achieve. So the A, yeah, if I do get hit by a truck, or if you guys know I travel a lot, be traveling to Las Vegas next month. I was supposed to travel to Malaysia here in 2 weeks, but the 30-hour plane flights just didn't appeal to me, so I'm going to do the conference distance learning. I'm going to speak over the internet to the group of Malaysians. But you know, I fly a lot. Hey, you know, you never know what could happen. So I want everybody to reach that level, because what happens, gang, when I'm gone? How many traders are out there trading live in their live accounts, making money consistently, and share that knowledge with other people? Your options are extraordinarily limited. And so I want everybody to be able to do it on their own, and then choose to be here and give back, and just be here to, like Lance is saying, bounce ideas off of me, and you know, learn new tools and techniques. Okay, so from a trader growth perspective, that's you know, a couple of different you know, ideas here, and of course then that brings us back into the segment that we were talking about before we went to lunch earlier, and that is on the trading setups. Okay, so we went ahead, we talked through this, but there was a question again about the retracements as far as the distances. Again, on a 5-minute chart, Michael P., we really went ahead and I'm looking for a good 25, 30 plus ticks. It would be best. The more the merrier on any of these charts, but a 5-minute chart, because think in terms of my thrust pullback thrust. Well, now think of a reverse thrust pullback thrust. It's thrusting down into the support level. So certainly 25, 30 ticks are ideal for the 5-minute chart. 30 ticks or more. Okay, 30 ticks or more for the 15 and the 30-minute chart. Again, the more the merrier. I'm going to say that over and over again. The more, the better. If it's 80 ticks or 100 ticks, I'm going to be way more happy than if it's 30 ticks. But 30 ticks, 40 ticks, that's kind of a minimum threshold on the 15 and the 30. And then really 40, 50 ticks plus, you know, is for the hourly chart. And again, the higher the better, especially on something like that with the hourly chart. The more the market can move and retrace back into your key support or resistance level, the better. The more likely it is, the more probability there will be to go ahead and bounce initially off that support or resistance level. Okay, that was a question that I saw. Let's see, as we're talking about setups, trader growth, and a couple other topics we talked about earlier, the question was asked, Matul, not really. No, they're not the same for all instruments. It's going to be different levels for like the S&P, but for the currencies, those are basically the levels that I'm referring to. S&P is going to have different levels. Matul, what you need to do if you want to learn about the S&P, you can learn all about the S&P levels for that in the setups, entries, and stops video. Okay. Now, let's go ahead and you have that video, Matul, so you should you know, catch up on that. But this is definitely the levels for like the currencies, okay, that I use. All right, now the as far as how many, when you were growing your account, when you were doubling it during that one period, I know a lot of it happened within 1 month. You were, you know, out of the 3 months, I think it was like 82 or 83% you grew in 1 month, if I recall, Lance.
Yeah.
Yeah. Now, how many of those trades were scale-ins? And of those scale-ins, how many contracts on average then, if you were scaling, were there? So first of all, of the 82, 83% profit you made in that 1 month, how many of those trades you took for the month, approximately, of course, not, you know, pinning you down to exact science, that'd be kind of impossible to do, but just approximately, how many would you guesstimate were scale-in trades versus single entry trades?
Well, there was more that month where I had to, you know, actually add some more contracts in. where it would slip through a little bit of the support or resistance area. But for the most part, I never had any more than 4, 5, or 6 contracts in. Um, and there were times on the pound where I'd end up having more contracts than I wanted, and I would be looking to get. I mean, as soon as it went back, a couple ticks, I was getting out because I didn't even feel comfortable being in the trade.
There's
So,
nothing wrong with that, and that's even me, that we see the same thing. If I put a 50 or 100 lot on, it's one thing if I expected it or was looking to do that and anticipated doing that. It's a whole other thing if I'm putting it on because it slipped deeper than I was expecting to. I'll usually cut my profit target short. So there's nothing wrong with that. But now, is that part of the experience you had then as far as the British pound that led you to this conclusion that, hey, there's just a little bit too much slippage in there to make you comfortable?
oh, definitely. I mean, it was with a small account. I mean, it's really detrimental that you think about that slippage on a pound because it's there's going to be times when it slips through and you're not going to have near the ability to get your cost basis where it needs to be.
Okay, so there's something you can hear from Lance's perspective on how he feels about the British pound. Now, again, I second that. I second that about the British pound, more slippage, in my opinion. And also, as you guys know, the other reason I'm really not a big fan of the British pound is the $6.25 per tick, basis. Okay, I prefer the $12.50 per tick. Thing. I don't think Michael, he didn't give a specific number. He just said, yeah, there was definitely scalings. I mean, so would you say 20%, 30%? How many would you say were scalings? This seems to be an important question for Michael. So let's,
Um,
I mean, I'm trying just approximately. Don't sit there and go crazy trying to come up
yeah, I
with a,
mean, I would say probably 30% of them, I mean, require to scale in.
okay. All right. Very good. Thanks for taking the extra effort there. Um, And let's see here. The trying to go with, let's see. Oh, okay. Well, we're going into the what, Robert K. I'm going to hold your question to the next segment here because we're going to get right into that momentarily. So with that, I think we've concluded this initial section here. What we're going to do now is move over to some other topics here on entry and exit points and that. This is one of these things, Lance, we're going to have a lot of fun with this one because this is another junior trader mistake I see to the umph degree, which is trying to go for the big kill on any one trade. And so this should be interesting. And to talk through these things, and hopefully a section that people pay a lot of attention to, because this is more of these trader killer mistakes. Okay, and so with that being said, are you ever a jerk for a tick in conservative trades, and leeway in entry or exit? I'm not really sure what they meant by that one. I apologize. Again, this was a merged question from our students that were asking these questions. There were hundreds of questions that got narrowed down to a full. So I'm not sure what the leeway in entry or exit. But let's go with the are you ever a jerk in for a tick in conservative trades? Why don't you expound on your answer there if you could for us?
Sure. Yeah, there's definitely times I've been a jerk for a tick. I mean, and it's and it there's a lot of times that really will get you in trouble. I mean, you'd be looking for that one extra tick, and then you never get it. I mean, it's so, but for the most part, I mean, it really depends on how my entry is and what the price action looks like. As far as what I'm going to be looking for out of that trade, I mean, if I'm going to be looking for any more than the 4 or 5 tick move that I'm usually going to be looking for. Um, so, I mean, it's I definitely try not to be a jerk for a tick because it seems to get you in trouble more than it pays out.
Well, and therein lies the problem, because what happens with this, and I talk about this in the room all the time, We get these junior trader wannabes. They think they know it better than me, but I've been down that road. Like I said, I bought the postcard, and I see it all too well. And it's one thing to shout from the sidelines, "Go for more profit! Go for more profit!" As they're sitting there on their simulators, and or like I said, they're losing traders, so they're hoping to maximize what few trades they make right. It's a whole other thing to go ahead and actually be in a profitable trade, making that trade, because what happens is then what you see happening here, and this is always a stickler thing for me because I watch these junior traders, they come, they go, they blow themselves out doing just that kind of thing. They'll sit there, and here you've got 1 tick profit, 5 tick profit, 10 tick profit. So they'll get up here and they'll be like, okay, I'm at 5 ticks, but 10 ticks is my profit. It goes and gets up here, and I had a guy that specifically, I worked with him on the phone, listening to him as he was rationalizing all this. He is now out of the business and trying some swing trading, day trading, or sorry, swing trading, long-term position trading techniques because he couldn't make this work, and he's feeling about as miserably in his swing trading and day trading or long-term trading because he's once again doing the same thing. It doesn't really matter. It just doesn't matter whether you're trading intraday or end of day. If you're going to be a jerk for a tick, it's going to cost you either way. And so what was happening was he would go for a 10 tick move. It'd move up like 8 ticks or 9 ticks his direction. Guess what it did, gang? Yep. Went ahead. It would either do one of two things. It would either hit his profit, not fill him, and then roll back down, or it would roll back down, start to come back up, and he'd be like, oh yeah, here we go. Now I'm going to get my profit. Yeah. Then it'd come back down again, and he would start to lose money on this. How many of you has this happened to? So then he had a profit of 5 to 8 ticks. Okay, Michael's saying me. No, there's some more me's, and it's happened to me's coming in. And so what would happen then is, Matul says, Robert says, happens to me at least once a week. Moi, this is Matul. Yes, guilty like everyone here. Exactly, Nick. Most people, have to be honest with them. Well, so remember now, here's the break-even line. So guess what? Now what happens? Now they had a profit. Now they're at a loss, and now they're like, oh, darn it. Well, okay, so, it just comes back up to where it was earlier. I'll get out of it. Well, guess what? Comes up a little bit, rolls back over, and the sell-off begins, and a person turns a winner into a loser. You know what? I'm just not even going to have anything of it. I hear these junior traders talk to me like they know what they're talking about, and they don't. I was that junior trader a long time ago. I thought I knew it all. And what I came to realize over lots of years, okay, is that, and then, Pete, that's a whole other strategy in itself, trailing up the stop there. But they don't do that because they look at it, it goes up 5 ticks, they're not going to move it up 2 or 3 ticks. What they do is it goes up 6 or 8 plus ticks, and then they put it up like 2 ticks below positive, okay? Well, so when it gets back down to here, guess what they do? They pull their stops. They pull it away. So instead of, because they don't want to take a 2-tick loss, Pete, after they had 8 ticks of profit, a 10-point turnaround? No way. No, they're not going to go and do that. So then they're like, they pull the stop, and then they watch a winner turn into a loser. It's just flat out greed, and unfortunately I get challenged with that every once in a while by the junior traders. Why don't you just let it run? Hey, you guys just saw, in fact, my last YouTube video, I let it run for what, 58 ticks, right? 58 ticks. I just kept moving the stop up, moving the stop up, moving the stop up, right? Okay. So yeah, there's a time and a place where I'll just trail it up, okay? Okay, that when market momentum, market energy is there, then great. Okay, but if it's a short-term trade, it's a short-term trade. And interesting to note, Lance has been doubling and more his account by his statements here, and yet he's going usually for 4 to 5 ticks profit. Huh. Rob Hoffman has gone ahead and made gorgeous 6-digit net profits this year, and I usually get 4 to 5 ticks profit. What a concept. What a concept. So interesting to note that Lance is also sitting there going for similar profit targets to what I'm looking for, and yet his account seems to be going the right direction. Dale says works for me. So the bottom line is, the jerk for a tick syndrome, Lance is saying it's bit him. Several of you said it bit you in here. It certainly bit me, and anybody who's been trading for any length of time that's gone for those extra couple ticks has gone in and probably turned their trade into a much smaller winner, or even worse yet, a loser. Okay, so bears make money, bulls make money, pigs get slaughtered. Don't be a pig. Okay, that's something I always go ahead and say there. Lance, do you have anything else you want to add before we work on here?
No, that pretty much covers that.
Yep. I feel pretty strongly about that because every once in a while I get these junior traders. They can't trade their way out of a box, but they sure think that I ought to go ahead and be, trading the way they profess. So you've heard me talk about that guy in California before. What do you call it? The channel trader. Remember him who lost 75% of his account channel trading? But boy, in front of 200 people, he wanted to say, "Oh, why don't you channel trade that 4-tick range?" But by the time we were done, it turned out he had lost 75% of his account using that strategy. So, let's see. And let's go ahead, Dan. That's my profit target for a lot of those, Dan. Yes. So, and you see that works out very well for me. Yep. That's true too, Nick. Much easier to make 4 ticks than it is 40 ticks. But like I said, junior traders are always looking for the one that got away. They're always focused on the one that got away. Oh man, I could have made 120 ticks if I would have just sat and hold that thing. Yeah. Okay, now how often, gang, does it go 120 ticks in your favor with a setup? Okay, compared to how many times will it pull back, roll over, etc. Slow, steady, consistent is what Rob Hoffman is about, as we've talked about at length here. So yeah, exactly. I'm not focused on the one that got away. In fact, you hear me specifically say quite frequently, I talk about the one that got away. All right, I don't care about the one that gets away, because for the one that gets away, compared to all the rest of the times where I would have lost money trying to be a hero on the exact same kind of trade, it just basically it's just not worth it. Jeff says, Jeff, can I repeat this? Sorry. Okay, thanks, Jeff. Just want to be sure. Jeff says, in the last 5 years, only one winning week till I came to your room, almost doubled my account in last 2 months, all winning weeks. So, and Jeff, I'm just guessing here, but you weren't going for 20, 30, 40 tick wins on your trades. My guess is you were probably keeping your profit targets fairly tight like I am. Just a guess. You correct me if I'm wrong. Okay, Jeff says 3 to 5 ticks. And yet you've almost doubled your account in the last 2 months with all winning weeks, and yet before that, you can't. If we're coming here at 5 years, only one winning week. So, Jeff, first of all, thank you for your honesty and sharing. And here now you're hearing from Jeff. I've certainly heard that story many times over, and then we've gone ahead and we have Lance here talking about this live to you guys all. So you know what? If there is anybody here who thinks that I should be going for bigger profit targets, I do and have. Like I said, my last YouTube video, as you saw, 58 tick profit. Okay, but usually I'd rather just get more contracts into play and stick with the profit targets and make more money that way. That's just my personal preference. That's what works for me. For those of you that go for the big wins, ask yourself why you're not big rich people, why you're not a big fat cat. If that's what you do, you go for the big kills instead of small incremental gains. Rome wasn't built in a day, and neither was my trading account. Slow, steady, and consistent is far more important, because I don't want to be rich today on one big win and broke tomorrow with one big loss. Okay, so words to think about. Now, Lance, interesting question here, number 2 here. Do you ever reverse a trade? And your answer is pretty firm, and very similar to my feelings in the room. But why don't you talk about that for a minute? As far as reversing trades, why don't you reverse trades? Since it seems that you pretty clearly don't.
Well, I mean, if you're going to be reversing a trade, you're almost going to be putting yourself in a position of counter trend trading at that point. And I mean, it's I'm going to stay with the trading at hand and it's focused and not try to be trying to grab profits on the other direction too. I mean, I'm going to take, if I can get a profit, I'm going to take it on the first time and not try to get it on the second go around.
Yeah, the only time reversing a trade might actually potentially be feasible is if you were a counter trend trader initially. So you try taking the counter trend trade, the trend is strongly against you, then you might want to decide to join the trend. But if you've joined the trend in the first place, then taking a trade to the opposite side, you might just be catching yourself in a whipsaw. Let's go ahead and pull this up here. I don't reverse trades. Actually, this is funny. This almost looks like a little space lunar lander here with like a Martian with one eye in the middle here. Boy, you really got to appreciate my drawings. So again, we know why I'm a trader, right? So if the trend is up and you took a long side trade and it doesn't go your way, why in the world would I suddenly go short? If I'm against the trend, well then now I'm really against the trend in that situation. And if I was taking the trade initially against the trend and now trying to go with the trend, then I got to ask the question, what the heck was I doing thinking I should be short in the uptrend in the first place, right? Why should I have been in that short when the trend is up? So that just broke a whole lot of cardinal rules, okay? But then if I'm in an uptrend and I'm looking to go long, but the long isn't working, so I decide to go short, well, now I'm going against the trend. And also, what's to say all you're not doing is getting into a sideways, choppy consolidation? So now what are you going to do? You're going to go ahead and you're going to sit there and watch this thing. You're going to go ahead and go long. It's going to pull back against you, so you're going to go short. Then you're going to go short because it's pulling back, against you, and then it goes up. Okay, you get yourself chasing it back and forth and getting yourself chopped to pieces. Reversing a trade, the only feasible way I can see to go ahead and really have a reversal trade work properly is by going ahead and not being on the right side of the trade in the first place. So in other words, if I had a nice uptrend and I was short, betting against the uptrend, then I say, okay, never mind, I'm not going to fight the trend, I'm going to go up. But then why was I an idiot and went short against the trend in the first place? So no, since I do my trades, I focus on doing my trades right the first time, that's why you never see me go ahead and end up reversing the trade. That's my perspective. And as you just heard from Lance, he clearly doesn't go ahead and like the reverse as well. So, um, Lance, why don't you talk about this next question then? How do you select profit target ranges, for conservative setups? Why do you pick 5 ticks or 3 ticks? Or it looks like your answer is 4 to 5 ticks. Why? Why are you picking 4 to 5 ticks then? Why aren't you being a hero going for 10, 20, 30 ticks? Why don't you go for 1 or 2? And then what delineates how much you kind of go for?
Well, I mean, it's usually, I mean, always, I mean, I'm always having a 4 to 5 tick profit target in mind. Um, you know, if if the trade doesn't do what you think it's going to do, and I'll look to lower that profit target or even get out of that trade. But it's really depending on how wide a range of movement that you have on that bar you're actually trading with. I mean, to where if you have a small range bar, I mean, there's no way you're going to get more than 4 or 5 ticks out of that. I mean, you got to think about it. I mean, what you show every day when you have a 20 tick bar on a 5-minute bar, and you're trying to get say 10 or 15 ticks out of that. I mean, there's not enough movement in between there to even try to get a profit out of it.
When you're encompassing the bid, the offer, and the tighter range in between the spread is what you're referring to.
Right. I mean, and
Yep.
I'm looking to get my profits and just get out and take what I can get as quickly as I can, and that way it doesn't have a chance to go the other way on me.
Now, a question from Albert came in. Would you increase your profit target depending on if you are going in on a higher time frame? For example, 4 ticks on a 5-minute, but like maybe 12 ticks on a 60-minute chart. Will you look for a higher profit on a higher time frame chart?
No, I mean it's pretty much all the same. I mean, and it's and like I said, I mean it depends on that when I'm looking at entering a trade and off the hourly chart, and I'm looking on the 5-minute chart also as far as what that price action is doing on that hour, to come down to that point. That's going to really give me the basis of what I'm going to be looking for as far as if I'm going to be adding any more profit to it or not.
Now, let's talk about adding more profit to it. Basically, though, gang, if I heard Lance correctly, and this is certainly what I will look at doing, if I feel more comfortable, a 5-minute chart's not going to get the same value level, in my case, Albert, as far as the hourly chart. The hourly chart's going to have a lot more credibility for me. So those of you that have been around for a while have watched me take hourly trades where I'll put a lot more contracts in off of like a poke trade, for instance. I'll put in a lot more contracts, or I'll hold a little bit longer in a situation like that. Lance, will you look at adding more contracts initially, so even though your actual profit objective as far as ticks doesn't change, but it does change your ultimate profitability because you'll add in more contracts at that hourly chart to start with?
Yeah, I mean, for instance, on those poke trades, I mean, of course, I mean, if you're adding, if you're putting the contract in and the poke trades, you're looking, as it comes up further and further, and you're adding in more contracts. I mean, and the market's exhausting itself. I mean, that's the point where you can, if you have that many contracts in, take your 4 ticks and get what you get. I mean, because it's gonna add up.
Okay, Lance, the question came in, how does volume factor into your trading? How do you, utilize volume? Because John, I may not have been listening earlier when you talked about how you do look at VSA, volume spread analysis. You just look at it the way I look at it, the opposite of what it was originally intended. But in general, volume itself, do you focus on like what I do with like the high volume bars closing 50% off the lows, high volume bars closing 50% off the highs, or do you actually pay attention to like decreasing volume, increasing volume, that kind of thing? What about volume do you pay attention to, either my tools or your own tools and techniques that you utilize relating to volume?
Well, I mean, it's definitely, when the bars are closing 50% off the highs on higher volume is, you know, one of the main things that you're going to be looking at. Also I pay attention to when, say, a bar's 5-minute bar is closing and you have a lot of volume coming in at the very end of the bar. I mean, it's that's usually, I mean, to me, is a sign to where you should be expecting a pullback at that point.
Okay. Is there anything else when you're going ahead and taking an entry where diminishing volume, for instance, would have a factor? Yeah, we talked about the high volume, 50% retracement things. Of course, that's kind of a core one that I use. But as far as just diminishing volume, let's say you're in a long position and volume starts to dry up or it starts to get heavier. Does any of that factor into you at all?
Well, sure. I mean, taking the the trend continuation trades when you're looking at it, one of the main things a lot of times you're looking at in a trend is looking for no demands or no supply in the trends in the direction that you're looking to trade in. So yeah, when the volumes do dry up, I mean, and they're in the right positions, I mean, yeah, that does factor in if taking trades.
Okay, very good. Appreciate you sharing that. Now, John, does that answer your question? John W., that is. Okay, well, okay, great. Now, Lance, explain your thoughts on risk-reward calculations, how this, what this means to you. As far as the risk reward in relation to support and resistance levels, this is a comment about often we go for 5 ticks and the person saying we risk 12 to the nearest support level. How does that relate to you? Does that somehow disturb you, freak you out, or how do you utilize that to go ahead? And by the way, I'm not clear that it's risk is 12, but it doesn't really matter. I don't care if the risk is 20 if I've taken the right, trade for the right reasons with the right support levels. So how do you, if you see that the profit objective is going to be 3 to 5 ticks, and yet the next support level down is 12 ticks, what are some of the things that go through your head as far as scale, no scale, take the trade, don't take the trade? What are some things that go through your head when you are faced with that situation?
Well, if I'm taking the trade for the right reasons, I mean the areas that are support and resistance levels are where you're going to be looking to add more contracts in to get that cost basis down to that area. So at that point, when I get my cost basis down there, I'm still looking for the same profit target at that point. I mean the 3 to 5 ticks.
So if you've got the 60-minute chart in your in the backdrop in your favor, let's say the 30-minute, the daily, whatever the case may be, then how do you go ahead and so that for you, you look at the support and resistance level as an opportunity to add in. Now, how would you look at it, though, if you were back to where you were when we first met and you really couldn't do much scaling in or didn't have the desire to scale in? How would you look at it then? Because I know my answer to that. But what if you couldn't scale in? How would you look at that saying, well, boy, the next major support level is 12 ticks down? Would you even take the trade then at the initial entry area, or would you wait till it gets closer down to that next support level?
I would definitely wait till it gets down to the best support areas. I mean, that's having being a one contract trader, you got to make sure that you have multiple support or resistance levels to where you're going to at least get a good decent bounce off of it. To take it anywhere sooner than that is it's you're going to put yourself in a position where you're going to have to take a loss.
this is something I talk about with you guys all the time in the live trading room. Every single day we talk about that, gang. Okay? If you're sitting here I guess I'll just have to. We always have new people, so I'll always have to say it till I'm blue in the face. I think until the day I finally shut the room down. Um, I'll probably have to just keep saying it till I'm blue in the face because there'll always be somebody that needs to understand this. Okay, if you're a small contract trader and only you can make these determinations for yourself, but I always talk about this. Like here's a speed line continuation trade opportunity here at 118.30 on the Japanese yen. Now I look at that and then I say to myself, oh boy, it's 15 ticks down to the major support. Okay, for me, Rob Hoffman, I say, so what? 15 ticks. I got the 5-minute, the 30-minute. Now this was a 15-minute chart already. So if I got the 30-minute, the hourly, and the daily going up, I don't care. I'm perfectly okay with that because I don't get 15 ticks is nothing if I'm in a great uptrend and have opportunity. So a conservative aggressive trade at the speed line here is nothing. But, and this is not magic, gang. This is common sense as far as I'm concerned. But I know I need to say it for some people because, common sense to one may not be common sense to another, is if I can't scale in and I'm looking for 5 ticks here, but 15 ticks down to the support, I don't take the trade. I don't take the trade if I can't scale in back here, no trade. Okay? And how many times have you guys gone ahead and seen me in the room have a situation where this might be 40, 50 ticks away? I can cover 40 or 50 ticks. But just because I can doesn't mean I should. And so when I start getting to that nosebleed level, as I call it, 40, 50 ticks away from the support, usually you see me do what? Just back off, right? But so going back to this analogy here, if I'm a one contract trader, that's why conservative aggressive entries are, in my opinion, not small contract trader friendly. And very aggressive. And you've heard Lance say what I focused on, Rob, is I focused on trading these uh, retracement trades with my small account so that I was focusing on those where I didn't have to worry about scaling in. But if you take a trade up here, don't be shocked if it goes back to the rising support. See what I'm saying? So like Pete, in answer to your question, if I were a one contract trader going for 5 ticks, I wouldn't be taking this trade if it was 15 ticks down below to support because I can't get my contract basis down here. And we're going to look at a scaling calculator in just a little bit to understand what it would take. It doesn't take much to get you from here down to here. But the point being is that if you're in a situation where you can't scale, that's why conservative trades, in my opinion, if I had to start all over again tomorrow, I would go ahead and just focus on taking it closer to support. Because yes, price can even go through the 20 period moving average as well. Okay. Now here's a case where that actually happened. Okay, this was a news related event here, but that's okay either way. I'm okay with it. Went through. I actually, with the trend being up in the background, look at that as an opportunity to go ahead and add into that position. But so you always have a risk down below there. So if I'm a one contract trader, I need to go ahead and mitigate my risk and be as close to major support as possible, taking trades off of shorter term support there's a much higher probability of it pulling back to major support than taking a trade off of major support and just having it blindly break through without some sort of major, news event in place. Okay, so does that help? If you're a junior trader, ask yourself, if you're a small contract and or junior trader, why in the world would you take a trade up here if your support is down here? This is support, but it's smaller support. Fast and slow speed line support is smaller than, a 15-minute, 20-period moving average. See what I'm saying? So the point being is, here people are, that's junior traders trying to jump into trades they have no business being in because they watch Rob Hoffman make those kind of trades, and they usually work out very fast. And it's a junior trader trying to be like me until they eventually get zinged with the one that retraces against them. And then if they're in that one contract trader mindset, they've got no backup plan. And then they're toast. So rather than ever be toasted, slow, steady growth on retracement trades is what Lance is saying worked for him to help him grow his account to the point where he could start scaling. And I'm sitting there saying, if I had to go ahead and start back all over again, those are more of the focuses that I would have to go ahead and allow me to get to the point where I could start doing these kind of trades. But if you're already only in this spot where you can only do one contract, to sit there and get yourself into positions where 5-tick profit versus 15-tick risk, ask yourself, why in the world are you taking the risk in the first place? I sure don't. I just sit there and go ahead then and wait until it retraces. I'm seeing a lot of people saying, very good explanation. Yes, very much so. Yes. Is that making sense to everybody? Lance, from your perspective, I mean, did that make sense on your end?
Oh yes, definitely. I mean, that's being a one contract trader, if you take those trades, I mean, it's there's just you really can't take them. I mean,
no, but you did too. You wanted to be like me when you first came on. That's exactly what you were doing, and then you weren't prepared for this. But then you eventually figured out, oh, I need to wait for this, and that's how I'm going to grow my account. And now you're to the point where you can do these with me because you finally figured out you needed to wait. And that's what I'm trying to impress on other people. I can't tell them where to trade. I can't tell them what to do. Everybody has to make their own decisions. I'm giving them ideas for them to go and test on simulators, for them to go and consult their registered financial representative on. But this is my opinion for my trading, and it seems like you agree with that from your perspective. Michael's saying that's what I did. By the way, Morale, good afternoon to you there. Just seeing you for the first time for the day. Hello to everybody there. Let's see. Yes, that's true, Tom. One contract trader does have a backup plan. It's called going flat or for a loss. That's true. And that's always a risk for a one contract trader. But the problem is, though, Tom, in my perspective, as a person who wants to see it, the problem is, Tom, that doesn't go ahead and build confidence. That's my concern there. It doesn't build confidence. If they just wait for the higher probability trades, they'll be faced far less often with ever having to take the go flat or a loss, which will definitely, yeah, no, I know you were. Tom says, I know I was trying to be facetious. Yeah, but I'm trying to explain to them why we're, mentally, psychologically building confidence like Lance did. Like I said, Lance is taking these trades all day long, so to speak, without me now, these retracement trades, okay? And, he feels a sense of mastery over those, and now is sitting there moving on to like the conservative aggressive trades with me and learning how to be more involved with those. So that's okay. Morelli says, I've been here from the beginning, but sitting and taking it all in. By the way, I only take trades off the 20 MA speed lines, not for me just yet. Great. So we're hearing from different people how they're perceiving it. Lance, of course, has graduated to the point where he can look at conservative, aggressive trades. So that's a transitionary period. Several of you are in right now. So it's and others that are brand new are still looking at how do I get to that next level. So we're giving you some really good ideas from real traders and their perspectives. Um, all right, Nick says, okay, I'm not taking any more bets on this one. We are going to break the longest presentation record. Well, that's okay. Are you guys having fun? Is this making sense? Are you learning and growing from this? Is it worth going ahead and making this the biggest presentation we've ever done? Because yes, at this rate, we're going to definitely supersede 5.5 hours. All right, excellent. Yeah, no, Steve G, great question. What I was saying was Lance takes them without me. The question was, does Lance take trades I'm not taking? What that answer was, what I'm saying is, like, if I quit for the day or I'm sick for the day, Lance will take these retracement trades. He's mastered them. He's learned from them. He's grown from them. Let's see. We are at. Are we at 2:25 p.m.? Oof. Steve, yeah, we're going to have more than 30 minutes left here, I think, because I haven't even gotten to the scaling calculator yet. So, sorry, I told people to plan on being here all day. And don't worry, I may have you move your 5 o'clock one just to be facetious. No, I'm not going to rush. Trust me. I'm definitely not going to rush. There's too many good people here that have too many good things to learn. And thank you for all the nice comments, game. I just want to go ahead and keep this going. So the let's see here. Let's go ahead. I actually want to go back now to the presentation. Let's go to, so that's entry and exit parts 2. Okay, excellent. Let's go ahead now and flip this then. Now that we've talked about this and asking ourselves, why would a one contract trader expose themselves to that risk in the first place versus waiting for the higher probability trade? That's my thoughts on how I would trade if I had to start over. And Lance, well, that is how you got to where you are now. And if I took all your money away, or poor Paris got sick and needed $50,000 worth of surgeries, and you had to give up your money and start all over, my guess is you go right back to my retracement trades and build the account right back all over again. And then 6 months or 9 months from now, start taking conservative, aggressive trades just as you are now. Is that right?
And that's exactly what I do, because I mean, it's if you take those other ones, it's not it's not if you get. I mean, it's a matter of when you're going to get zinged by that, and then you're gonna learn at that point.
Yeah, well, you hope, and unfortunately, some people are so used to taking losses, they don't understand my perspective, which is losses are unacceptable. Yeah, losses in the real world may ultimately happen, but they don't need to happen like they happen for most traders. I have so many traders coming to me here saying, well, Rob, the last chat room I was in said 30, 40, 50% losses was acceptable. And I'm like, that's madness. That's just basically a bunch of traders who can't trade making up excuses for their poor trading. That's madness. Madness. And like I said, I'm a living example. As of next week here, well, actually four more days. So I guess what? At the end of this week here, by Friday of this week, I'll be at 9 months without a loss. Knock on wood, if I don't have a loss here in the room in the next couple of days. So, look, I don't think losses, and yet I've made these gorgeous 6-digit net profits. So, the bottom line is that I think just saying, oh yeah, we have to take all these losses because that's part of trading. No, I think we should strive for perfection on every trade, and then go from there. So with that said, let's go ahead and move on to the next part of entry exit points. Lance, do you hold overnight?
Never.
Okay. Lance, do you have any, we're not going to discuss what they are, but do you have any long-term core like equity holdings or anything like that? And nothing to do with like your futures, day-to-day trading, like, 401k stuff, any long-term holding stuff out there at all?
I really don't. I mean, it's I've mainly just put my concentration into this. I mean, it seems to work so much better than you know uh, putting my money into any kind of stocks or whatnot.
Okay. And for those of you that don't already know, um, basically I don't go ahead for I do have long-term core equity holdings in some pharmaceuticals, but overall I do not go ahead and have any of these positions that I take each day. I'm out of before the close of business. It's just that simple. Again, why is that? Well, you know why that is? Like I said, I just, I hate to be such a cheerleader for the book because the book is kind of neat. I just like the way it kind of ended. I think that's about the best part I like about the book, which is, Education of a Speculator, and by Victor Niederhofer. But really, you can read a story just, online. You can read a story in Wikipedia for free. Bottom line is, the guy went broke overnight. Period. Plain and simple. Okay? When you think you're smarter than the market and you take big bets overnight, you can be rich today and literally broke tomorrow. Period. And in this day and age with the currency volatilities, you know, uh, it's just not going to happen. Period. So that's my opinion for my trading, and it sounds like that's how Lance feels for his. Okay. Um, That's right. Exactly, Robert. All it takes is a bomb to go off in the wrong spot. You got that, brother. Okay. What are your winning and losing streaks like there? And Lance, you got your answer here, if you want to talk about that a little bit more.
Yeah, it seems like, I mean, there's always inevitably one trade that I'll have each month that I get to learn from, what mistake I made and what I did in the learning process as I continue forward. But that's really about it. I mean, usually, I mean, it's usually very limited.
Okay. And you know what? Looks like there was a redundant question in here. It wasn't written exactly the same way, so it escaped the review. I'm sorry. But basically, your average profit per trade. I know you discussed 4 to 5 ticks unless there's a lot of movement. So we won't spend our time on that one because we've already talked about that. As far as those losing trades where you have an opportunity to learn from it, is it a retracement trade usually that you went in and got too aggressive on, or is it a conservative aggressive trade where you're still learning how to trade those? What kind of trades are you usually finding that one a month, and what usually ends up being the source of your mistake?
Yeah, it's never the retracement trades. It's the conservative aggressive trades or the very aggressive trades, which I've pretty much eliminated that out of my arsenal at this point in time because I mean I'm just going to put those back and just wait until I grow my account and knowledge to take those trades.
No, I'm sorry, was
Um,
that very aggressive trades or conservative aggressive? Very
the
aggressive trades.
very
Yeah,
aggressive trades.
sure.
The conservative aggressive trades. I mean, it's you know really the only time I've taken a loss on that at this point is trying to get too aggressive and entering 2 contracts to start with when I should be just using one because I didn't have the ability to scale where I need to scale. So I mean it's you know it's always a battle of really just making sure that you have the ability and the account size to do what you need to do when you have, you got to take into account to where that next level is down below you if you're going to have enough to get your cost basis down to that point.
Okay, and we're going to talk about, what led you to believe you were wrong then when you took your exits and when you got stopped out then. We'll talk about that in another slide here coming up. So do you trade multiple instruments at the exact time? It looks like you used to, but you don't now. Can you talk a little bit more about that?
Yeah, I've only done it. Actually, I've only done it one time, and I mean, it's I really didn't care for it. So I just stay focused on the trade at hand, and if then I just look at that one, and that's it. I mean, I don't really try to get into more than just what I'm trading at the present time.
Well, and there's a host of reasons that that could be a real problem, couldn't it, gang? If you think about it, number one, you're having to split your attention between multiple instruments. That's a problem in itself, isn't it? But even more importantly, what else are you doing? You're splitting your resources, aren't you?
Hmm.
And so where, you might be able to scale in 20, 30, 40, 50 contracts on trade A. You get two trades. Now the best you can do is up to 15, 20, 30, whatever the case may be. Bottom line is you're going ahead and you're dividing and getting conquered. And so I think I've done one trade where I was in two trades at once in the live trading room. And Lance, I don't know if that was my trade that you were talking about that you were in then with in two different entries, but I can
No,
recall only one time, or that was something you did on your own. But
it
I've
was
done
when I was
one.
in my own,
Okay, gotcha. And
because
I've done one. Go ahead.
I was in an S&P trade that I was sitting in for ever, and then
Oh no.
I did a euro trade while that one was going on, and I mean it's just then finally got out of the S&P trade. So I mean it's just one of those that you're sitting in the S&P.
Oh yeah. Well, gee, where do we hear that one all the time? Yeah, there you go. Nick says just don't take S&P trades. It's easy.
Yeah, exactly.
Yeah, I tell you, there's some truth to that sometimes, isn't there? So the okay, so you learned your lesson from that, and like I said, in the interest of disclosure, I think I've only done one trade here that I can recall where I was in two different positions at one time. Um, as well. So it's like I said, it's not something you're going to be normally seeing. It just happened I had limit orders out there on multiple instruments. I let them both get hit, as I recall, and then I just worked my way out of both positions there. So not something that I go ahead and will normally do either. You're having to do too much at the same time. Focus on too many working, moving parts. You need to be a instead of a jack of all trades, need to be a master of one when you're in a trade. You need to have your focus and ask yourself, am I still in that trade at the right time for the right reasons, or were the reasons I entered that trade changing? And if you're in two different instruments, especially two different types of instruments, let's say gold and the euro, well, you got two totally different challenges that you're facing there at that time as you're trying to make that decision. Okay, so yeah, that's for me. That's a no-go. Not trying to be a hero and be in all sorts of different instruments. Most of the time, the people I see that do that are basically adrenaline junkies. They're basically going in carrying multiple positions at multiple times throughout the day to keep the adrenaline flowing. Okay, not because there's necessarily that many great positions simultaneously, and certainly not because they have the equity to do it. It's because they love the thrill of being able to go back and forth. It appeals to like their undiagnosed adult ADD. You understand what I'm saying? So not necessarily good business for me in my trading at a minimum. Okay, and it doesn't sound like for Lance either. All right, let's go ahead and talk about stop losses here. Okay, um, you know, I know that I can see right away from your very first answer there. I know these things vary on what type of trade you're doing and so on and so forth, but let's see if between these three different answers here and maybe some further discussions on some other charts here, if we can, help people kind of understand a little bit about maybe your general philosophy on stops. Is it dollar based? Is it support and resistance level based? Is it percent of account based? I think, if I recall correctly, you're much more focused on if it's just violating the support resistance levels and so on and so forth, uh, versus absolute dollar, except like that one time when you accidentally got blown out of your account, but that doesn't really count because that wasn't what your intent was to get blown out. You just forgot to raise your stop limit when your account size went up. So in general, what's your theory of stops? Is it when the market changes, absolute dollar value or percent of account, and then anything else you want to shed just in general at a high level about your theories on stop loss management.
Well, yeah, my stop loss levels are mainly just dependent on the market, really, or if it's really violating the support and resistance levels. It's you know, it's really, to have a 20 tick stop or something like that. I mean, it's just uh, especially if you're planning on or adding in more contracts. I mean, it doesn't take a whole lot for it to go against you 20 ticks. I mean, so it's for me to put a 20 tick stop or something like that is not really what I'm looking to do. But if it's really violating the support and resistance levels, and then I'd be looking to get out of a trade.
Okay, we're going to go ahead and talk about that a little bit more here as we go into the scaling section too. When people say it doesn't, doesn't take much to go 20 ticks, but that doesn't bother you as much as the support level, resistance levels actually, crumbling. We're going to talk about that more. So your stop losses. Yeah, I guess we can. I tell you what, you know what? Looks like we've been going almost an hour and a half again. I'm sorry, I guess we did come back at 2:15 Eastern time, so we've been going for about another hour and 25 minutes there. All right, yeah. Well, like I said, gang, obviously you guys are having a lot of fun because we're just, get through a lot of great information. So let's do this. Let's go ahead and let me put the clock up here. And why don't we come back at 3:43 Eastern Time. 3:43, I'll give you 2 minutes. Let's go. Be back in 2 minutes, gang. Matul? No, I'm back. I'm just waiting for the rest of the crew to come back. I said they've got till 3:43 Eastern, so I'm giving them 5 more seconds. You notice Nick says here, I can tell you've got German blood in you. That's right. This is a fine oil-driven machine here. We're not messing around. We're gonna, I've got a lot. We've had a lot to share, and I'm excited. I've been looking forward to doing this with you guys for months. So yes, I definitely have some energy. So that's great, and thanks, JJ. So we're going to go ahead and kind of pick it up right where we left off here, and so we talked again about the percent versus absolute dollar value versus the SNR levels. I think overall Lance is much more focused on is the reason for him being in the trade still there or no longer there. And catastrophic limit. we talked earlier about the actually, okay, and he's actually written about that. Learned lesson about having it set too tight. You've all heard the story earlier where Lance used to go ahead when he had a smaller account. He actually tightened up his stop loss, which was great. Hey, there's nothing wrong with that. I commend you. If you want to go ahead and have a tighter stop, what's nice is at a broker like mine, you can call them and you can sit there and say, hey, would you please go ahead and lower my stop limit? They won't raise it beyond the 60%, but you can lower it. Well, Lance went ahead and did that at one point. To his credit, that's great. The problem was it had happened, and then he went ahead and started growing his account with me, and he forgot that he left that level out there. So once he got to the point where he was starting to be able to first trade 20, 30 contracts at a clip, he had forgotten about setting that much lower limit. So after a few ticks, he was going ahead and getting himself, he accidentally got himself blown out of the trade. Lesson learned very quickly, and so he does have now the standard limit that's set for him at our brokerage firm of 60%. So yes, he does have a catastrophic limit set by the broker. He does not have his much tighter limit in place that he used to have because he forgot to set it, and that could happen again to him at any time. So he's learned from that and chosen not to have the tighter limit. Lance, is there anything more that you wanted to add to that particular one?
No, just remember to change it if you do start trading bigger.
Yeah, there's really nothing wrong with going ahead and having a lower account, is there? A smaller account, or setting it lower, your catastrophic limit. It's just that you need to then make sure you account for future growth in your account as you did. And Robert here says, I can't imagine losing 60% of an account. Well, you know what? Unfortunately, I'm here to tell you firsthand from these brokers. These brokers go ahead and experience that basically on a daily basis. These traders go ahead and hit these 60% loss limits quite frequently. And I'm not talking about all traders, but definitely there are a lot of traders that have hit their 60% limit in a day and been blown out. Unfortunately, it's all too common. JJ says, trust me, it happens. So the bottom line is that sure, okay, great, Dan. So the reality is a lot of people do go ahead and have that situation happen to them. So what happens if they've had that happen too much? Some people then choose to actually lower their loss limit, so they don't keep finding themselves in that position, because 60%, and then 60% of your 40% that's left, and then 60% of that, that happens too many times. You don't have much of an account left. But again, look what I do, gang. I just go ahead and focus on not making those kind of trades in the first place. You know what I'm saying? And so, and that's why I always, whenever I take a trade, I try to have a backup plan and a backup plan to the backup plan. And if I don't feel I have the quality backup plans necessary in the live trading room, what do? I don't take the trade, right? So, so needless to say, hopefully that exactly, I step aside. That's right, Nick. So that's my thought. I don't want it to get to that point in the first place, but Lance has learned because he forgets to go ahead and turn up the specific limit. So he's just gone back to the default limits. Okay, so that's his choice. Great. You consult your broker and/or registered financial representative what's right for you in your particular trading cases. All right. Now, Lance, here we go. Here's an important one. What would you do if you're in a trade and the speed lines are going against you, i.e. long and the speed lines have turned down under the 20 MA? Now the problem is that it only says under the 20 MA. That could be under the 20 period 5-minute MA, but the 15 could still be rising. So why don't you talk a little bit about that, because clearly it is going to depend on the chart you're trading off of, and what depends. In fact, what I'm going to do to that point, let's go ahead and actually pull up this chart right here, and these are all 15-minute charts. We already know that, but it might at some point we may have an opportunity to use one of these charts as an example. So we'll go ahead and I'll pull this up. Why don't you go ahead and start to explain how you look at that as far as if like one of the time frames is starting to roll over and what that means to you as far as the speed lines coming down under the 20.
Yeah, it's if you're entering a trade, I mean, off of say a retracement trade, or and if you're entering on a say a 15-minute chart, and I mean it's your 5 minutes are going to be turning against you. I mean, and if you don't get say for instance if you don't get the bounce that you're looking for off of that 15-minute chart, and the speed lines are still coming down on you, and the 15-minute starts coming down. I mean, you need to use that as a point of am I still in this trade for the right reasons? I mean, should I exit this trade at that point in time? And I guess that's kind of where I'm looking at the speed lines if I am using those for an entry or an exit point.
Here's a great example of that. So you're on a 5-minute chart on an entry here, and now again, of course, this is this has been pretty sloppy here. This is the Japanese yen, but that's okay. It still illustrates the point, because this is the this is a great example. Okay, the speed lines are coming down through this 5-minute 20-period moving average. Now these ticks, gang, this is only 7 or 8 ticks. Okay, it's like basically 8 ticks from the break point to here. All right, so Lance, it's come down here 8 ticks against you. Am I hearing you correctly and saying that you do what I do, which is say, all right, that's not good, not real happy with that, but right here at this area, I've got rising 15-minute support from a bias perspective still, and so I'm going to go ahead and, since the speed lines aren't down below the 20 period, and the 15 period hasn't rolled over here, on the higher time frame, then you're still willing to scale into this trade or hold the trade as it may be, and you can tell me which, to look for a possible retracement back up, okay, which this is what this did since then, okay. So basically the 5-minute chart dipped down, but the 15-minute chart remained intact. So talk with us about how you handle it. 5 minutes going against you, but everything else remains intact. Do you hold? Do you get out? Do you scale in? How do you handle that, generally speaking? I know each situation can be different, but just as a matter of principle, if the 5-minute starts to, and you took the trade off the 5-minute, with knowing that the 15, 30, hourly, and daily look great, so you took this 5-minute entry, maybe an aggressive entry, whatever the case may be, or maybe a conservative entry off the 5-minute, but everything else is still in place. Do you panic out when the 5-minute goes ahead and goes kaput, or do you look at the higher time frames and stay with it based on the higher time frames? How do you kind of do that?
Yeah, I would be. I mean, at that point, if I entered on that 5-minute trade, I would definitely be looking to add down further, and then looking to exit by the time it came back up to that 5-minute speed line.
Yeah, so in a situation like that, and I think I'd heard you say that before, basically what you do is you say, okay, not real thrilled with this 5-minute chart. This isn't real good, but I still got the higher time frames in my favor, so I'll scale in, and then when it gets back up near the neutral line where I'm expecting there to be resistance, these downtrending speed lines, and of course the 20-period moving average will be resistance, then what I'll do is I'll scale in down here, and when it pops in up to here, then I'll go ahead and I'll go flat. That, but you do that, you still stay with the scale or any sort of just initial entry. Maybe you don't scale, you stay with the initial entry when faced with the fact that the senior or the higher time frames are still intact. Is that what I'm hearing?
Yes. Yeah, you
Okay.
definitely. I would definitely stay with it. I mean, as far as and until something changes and it totally, you're in a trade for the wrong reasons, then I mean, there's, in my view, no point to really get out of that trade yet.
Okay, and also you normally take these trades off of the 15-minute or higher. So this same thing would apply then. Let's say the 15-minute chart was looking kind of ragged. Let's just pretend for a moment, gang. This is the 15-minute chart, and this is the 30-minute chart, and the hourly chart, and the daily chart, and the weekly chart. Okay, so let's just shift gears just for a moment. If the same situation was happening with the 15-minute chart, and yet you had the higher time frames in place, and you took the initial entry off the 15, then it would be the same situation. Is that correct?
Yeah, I mean, until really for me, until that hourly changes perspectives, I mean, it's not, I'm still in that trade for the right reasons.
Okay, so because if I heard you correctly earlier today, you said what you do first is focus on a really quality hourly trend. You like to focus on my indicators being in premium positions as well. So you're focusing on more conservative trades in the first place, allowing you more flexibility if there's a short-term blip in the road. Is that correct?
Right.
Okay, because I don't want to put words in your mouth, but I've been listening very carefully to what you've been saying. Plus, obviously, I've talked to you for 9 months, so I've
Yeah.
gotten a perspective on your methodology. So I'm incorporating a couple of these different things and kind of reiterating these things for our friends that you haven't gotten to experience you and where you're coming from. So okay, so. With that being said, let's go ahead and move back to the slides here. Give me just a moment. And I think what we're going to do here is, let's see, so I just want to reiterate this and make sure we have completely answered it. Really varies depending on which chart trade off, because you're normally trading off the 15. So the 5 minutes is going to be less relevant to you. You're going to really be focusing normally on the 30-minute, 60-minute, and daily charts as your guide. In particular, I heard you say the 60-minute chart was really your defining point, and that's why it's so important for you to make sure that 60 is of high enough quality in the first place before you overtake the trade. So if I'm guessing, then you're not going to be a real big fan of trades where let's see if we can even find something up here. The bias is to the upside here, but my guess is if this was the hourly chart, you're probably not going to be a real big fan of this a trade to the long side if the hourly chart's looking like a snake. Okay, this is the snaking pattern you guys are all familiar with. So if the hourly chart's looking like a snake here, and you're not going to be a real big fan of taking a sort of aggressive long side trades because of the fact that you see that the hourly chart's high risk in the first place. So you're not going to be real excited about any sort of major scaling, major backup opportunity. So you would just eliminate this as a trade in the first place versus trying to scale into a low probability. Think we might have lost Lance for a second there.
No, I got you there. It was
There
in
he
and out
is.
for a second.
Okay, great.
Yeah, definitely. I mean,
did you hear everything I had said? Just make sure.
yeah, I definitely. I mean, if you're looking at that as an hourly chart, I mean, that's something that I would even put myself into anyways, because I mean, there's nothing there to validate a a trade to the long side and expect it not just turn right back around and go the opposite way.
Okay, so here again, gang, what you're hearing from Lance is, unlike a lot of you that are still struggling with this, you go ahead, listen to what Lance does and what I do differently. I try to make sure I got a high quality backup plan before I ever take the trade in the first place. And Paris was in the background agreeing with us. So we want to make sure we have a high probability backup plan so that hourly chart, if it's sitting there snaking around, then Lance is saying, I don't feel so great about this trade, so I really don't want to get myself in a situation where I may have a pullback against me because there won't be a good backup plan. That's something that all of you need to come to terms with. What happens sometimes, we get those situations, kind of like we had this morning. And boy, what a great learning opportunity it was again this morning because, Lance, I've talked about this twice now in just the last week. You got that gorgeous uptrend on the euro, and yet it blipped down below the speed lines. Look where we're at again today, gang, as we're late in the session here. Look at that. Right back up to my speed lines. Everything I warned you about back here just happened again. So Lance is saying, look, I'm not going to short this. I don't have a good backup plan because my higher time frame is going to kick my butt. Okay? And so if things don't tick and they don't tie, he's not going to go ahead and push into that trade in the first place. Okay? You've now not just heard it from me, Rob Hoffman, professional trader, but you've also gone ahead now and heard it from somebody who's figured that out after being in my room and is in the process of growing his account. So, think about, are you in the right trade at the right time for the right reasons? Or are you making another junior trader mistake, going ahead and just focusing on taking a trade because you're bored and it feels good? Remember, these are not coins in the coin slot. This is not a trading arcade. We're not putting our quarters in the slot to go boom, 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 boom. We're putting our gold, our last little bits of gold nuggets in, looking for growth and value for the long term. We're playing for the long term, not for the thrill of the next 5 minutes until you get killed and then have to pull out another quarter until mom or dad says it's time to go home. Okay? So very serious. Those are the things that are going to separate you. So in other words, are you thinking about your backup plan? All right, is the key there. All right, let's go ahead and talk about scaling, which means I'm going to get to pull out a scaling calculator here in a moment. All right, and so I'm looking forward to that. And we're going to, so let me actually just get that going right here. And I believe this particular scaling calculator was courtesy of Paul L. Paul, this was yours, wasn't it? Well, I like to give the credit. We also had a couple of really nice other ones by a couple of our family members. In fact, I want to go ahead and just take a moment to acknowledge a couple of our students that have gone ahead. Joseph H. And let's see, Jack Z, Fraser B, of course, Paul's, who's right here, Pete H, and again, just want to make sure I mention John L, who JJ, who is one of the first people to send me one originally. So there were several great trading calculators here, and I want to thank the 5 or 6 people that went ahead and got those in. So we're going to be looking at this calculator here and talking about this here in just a few moments. Okay, so with that being said, oh, thanks, Michael P. So let's go ahead and, with that being said, as we get into this great conversation, on this first one you can see here, Lance, the question is, what size do you place an initial trade? I know you talked about that earlier, but it has been, well, several hours now. So let's go ahead and talk about your conservative trades and your more aggressive trades exactly. Let's remind people what you start with. So if you could talk a little bit about that to refresh everybody.
Yeah, on my conservative trades now, I mean, I'll usually start with 2 contracts, but the conservative aggressive trades, I mean, I'll only start with 1 contract to start with, and it's I feel really confident in the 2 contract, I mean, as far as with the retracements, but other than that, I'm fully prepared where I'm going to have to scale in.
Okay, and which is why you're keeping your bullets in the backdrop. And before we leave this slide, we're going to start looking at scaling with the calculator. At some point, this calculator, with Paul's approval, will perhaps be made available. I'll let you guys know when that takes place. I want to put all sorts of disclaimers all over it first, before I end up putting it out there for everybody. So, we'll worry about that part later. Let's just go ahead and understand the concepts and the education for today. Thanks, Paul. And so let's go ahead and answer these next two questions, and then we're going to go ahead and start working with the scaling calculator here a little bit. So, Lance, understanding then with more aggressive trades you start with 1, with more conservative trades you start with 2. What process do you use to scale in with small lot size? What's kind of your, do you go 139, or like I mentioned a thing that I use, like 1312? How do you kind of deal with your scale in entries?
Well, with the conservative trades, I mean, when I enter with one contract, I mean, I usually look to add in 3 more at another level below me, and usually at that point, I mean, I usually don't go up to 12. I mean, being a conservative trade, but I mean, I'll add about 9 more usually to try to get my cost basis closer down to the price. I think your mic's off.
That's okay. I just wanted to keep you guys in the dark for a minute and wonder what I was saying. Just kidding. Thanks, gang. I always try to turn my microphone off as a courtesy. I don't want any sort of breathing or anything like that to go ahead and interrupt Lance and everything else. So I turn my mic off when he speaks. So what I was saying here was, let me just erase this and go back. What I was saying was that basically, like in this case right here, this is 118.40, and 15 ticks below is the major support. So like an example like this, Lance, first of all, would you take your initial entry at the fast speed line, the slow speed line, or neither in this case, because perhaps 15 ticks doesn't meet your blood? What would you do in a situation like this? Here you're sitting up there at 118.45. Do you take the trade? Do you take the initial one contract entry? I think you said for conservative aggressive trades, it's a fast speed line, the slow speed line. How do you kind of generally find yourself taking those trades? Oh, Lance, are you there?
Oh, you hear me now?
There we go.
Okay.
Good. Now it's your turn.
Okay. The first thing I would do is, to make sure as far as any kind of events or news that's out that would be, um, having any kind of effect on the market to get any real volatile swings. But then as far as entering, if it was, if all the news events were passed and everything was okay, I mean, I would consider entering at the fast speed line. I mean, as far as one contract. But now
Okay,
if I
so
had
this is you now being more aggressive because
more
you've
aggressive,
earned the right. You acknowledge that's a conservative aggressive trade, but because of the contract size you've built up to, you would have never done that. Well, you did do that when you first met me, and then you lost money because you weren't prepared for it. Then you went ahead and started building yourself up with the more conservative retracement trades, and now you realize you've learned enough about these that now you're starting to participate in these.
yeah, I mean, and as far as with just a I mean, I would never even entertain even entering that trade until it got down to the 20 period moving average. If I just had one contract, I mean, wouldn't even think about it.
Did everybody hear that? That's Lance's opinion, and he said he wouldn't even think about it. Okay? How many of you have thought about it and actually done it? So, you know, something for you to chew on, something for you to think about as it relates to your risk trading plans. Okay. Sorry, Lance. Go ahead and feel free to continue then. So let's say you are current, Lance. The 20 period moving average is right down here, Jeffrey K. This black line right down here. Well, now it's green because I've covered it up. There. So this line right here, Jeffrey. All right. So you do an initial entry down here, and let's run this, yes, for as much as possible, but that's, my opinion, my interpretation of it, and I certainly go ahead and give those as much as possible. Um, and the where would your scaling point then be on a trade like this? I intentionally showed this one because for a couple reasons. Okay, number one, because of its aggressive attributes after a market was already failing. See, the way I look at this trade is it already was so weak it started to go past the 5-minute, the slow speed line here. So to me, this is a sign this market's starting to weaken. Plus, then you can see, and this is a 15-minute chart, you got a negative divergence. So to me, this looks like a chart they actually might want to roll over. So taking an initial entry up here on the speed line would be a no-go. I definitely would consider the speed line trade at this point. Okay, let me go ahead and put that up there. At this point, because the market hasn't proved to me it's really weakening. So at the 5 or the 3 or the 5 period, the speed lines here, basically I'm interested. Now here in this case, it did pull back, all right, but the fact that it pulled back that much shows that, hey, this is starting to weaken a little bit, okay? So then when it gets up to here, I personally would not be interested in taking this trade here until such time as it did something like this. Now, if it pulled back like this, I would totally take the initial entry at a 118.25, hands down. Totally love to take that. Nice clean break, hard break there. And then as it went down, I'd be getting more and more excited about that entry. That's where you guys hear me sit there and say, oh, this is great, gang. Oh, this is great. I'm going to go and add in more. That's where you see me get excited. But just so you know, in the real world, I wouldn't want to take this trade right here because you can see the negative divergence. You also see that we had this bar right here, and that's important. That's a telltale bar there for me. This bar right, let's get that off there. Let's go, there we go. It goes ahead, this bar shows that there's so much weakness that it actually came through the slow speed lines. That's kind of that's a warning sign. That's something, hey, I really need to be careful of that. That could lead to further prices down below. Now it took a while, but it did ultimately go ahead and lead to lower prices, of which you also had this very nice divergence. This is why, remember, one of the key reasons I have the histogram on the chart is to spot divergences, right? Okay, so just something to go and keep in mind there. Now, so basically you said that you would you do your initial entry at the fast speed line. Now, would you add in again, Lance, I'm sorry, at the slow speed line, or would you wait till it goes to the rising 20 period? These are your you know, methodologies. This is your way you use my work, so I think some people would be interested in hearing where would you put your second entry on something like this? At the 20 or at the slow speed line, you know, or some other place?
I would wait until I got to the 20. I mean, as far as
That's what I figured. You're still at that point, so you're doing initial entries up at the slowest, the fast, but you're not doing multiple entries up there. So you're not doing like let's say one contract at the slow speed line, sorry, fast speed line, 3 contracts at the slow speed line, and then 9 or whatever down at the 20. You're doing more like one either here or here, and then the next scale in down below. Is that right?
yeah.
Okay, just making sure I understand how you're doing it, because you guys will see I'll do it a little bit more aggressively than that, which is fine. Everybody has to be in their comfort levels. What I do is I usually will do my first entry at the fast speed line. Okay, this is just one way that I do it. But see, even within a more conservative, aggressive entry, Lance is choosing to be more conservative, which is great. Okay, because he is still in that arc. He is still in that middle ground where you have the conservative, aggressive, and very aggressive. And what he's doing is he is moving on to the conservative aggressive point here, but still being a little bit more conservative in his entries and scale-ins in that process. Whereas me, of course, I'm full-blown conservative aggressive and very aggressive. So what I'll do is go ahead and enter a little bit differently. So me, I'll enter, and you will see this in the trading room, I'll do an initial entry at a fast speed line, and then I'll do another entry at a slow speed line. Okay, here's a really good example of that. The fast speed line, and then I'll do a second. If the two are only 2 ticks or 3 ticks apart, I won't do that. And I've commented on that in the room before. If there's only 2 or 3 ticks of difference between the slow and the fast, okay, between these two, it's not worth the scale in. Okay, if there's only 2 or 3 ticks of difference, but if there's 5 or 6 or more ticks, then I'll do an initial entry. So let's say 1 contract at the fast speed line, 3 contracts at the slow speed line, and then I'll go ahead and I'll do my next entry closer down to the rising 20-period moving average, and that will be where I'd be more likely to enter up to like 12 contracts, depending on what the distance is from here to here. Okay, and we'll show that on like the speed line here. Okay, let's see here, Sammy. Let's see. Considering I'm trying to see a scan, Sammy. See if there's a question in there. Okay, this if you could maybe put your question marks and stuff like that in the right places so that I can read that, if you would please for me, because as I'm reading that over and over again, I'm not still seeing where the question exactly is within that. I apologize. So for me, like I said, I'm going to go ahead and look at this a little bit differently and start the scaling in process. The initial entry at fast speed line, the secondary entry if there's 5-6 ticks of distance there at the slow speed line, and then be looking at the 20-period moving average as another scale-in point. Okay. And Lance, the question for you: do you only have 3 scale-in points, or do you potentially have more? How does that work for you?
Well, I mean, if I'm taking, for instance, in that conservative aggressive trade like that, and I see if the price action is just kind of rapidly dropping, but it doesn't make it to that 5-minute support. I mean, I will add, if that price action kind of supports it, I mean, I'll try to add in more at that point rather than waiting for it to get all the way down to the 5. It just kind of depends on the price action, really.
Yeah, I know there's so many variables within that. There's distance, there's the amount of support, there's, that's the problem. Everybody always wants a finite answer, but there's thousands of scenarios potentially. Was there an initial entry at the slow? Was there a secondary entry at the fast? Was there an initial entry at the fast, and then the secondary at the slow? Is the tertiary, what's the distance to the rising 5-minute 20-period moving average? And then what's the distance to the 20-period rising 20-period moving average? So, effectively there could be a fourth one, for instance. But that's, and is that what you see, that based on the amount of, the amount of support down below you will dictate how far you'll go? And again, that hourly chart, is that really what this is all about for you? How strong is that hourly chart in the background? I mean, trying to get a sense for you, because my trades have just worked out all year, and so everybody's looking, everybody wants the answer of where to get out, when, and how, and so on and so forth, which is very dangerous because they're trying to box one size fits all, and that's of course a really big mistake because one size doesn't fit all, and so, but just conceptually, generally speaking, for you and your trades, how many levels deep do you normally find? Let's say 90% of your trades, as an example, do 90% of your trades work out within 1 scale-in, within 2 scale-ins, or what number does it take to get 90% of your trades in your guesstimation to work the way you intended them to work?
On the conservative aggressive trades, I mean, it's usually within the second to the third scaling for sure. I mean, usually after that, I mean, there's most time it either works or it doesn't at that point. I mean,
And,
it's
and just to be clear, the scale-in, not, and that includes initial entry. So a third scale-in would imply 4 actual entry points. Is that correct? Or is it 3 actual entry points?
three actually
Three. That's what I was thinking, because the way I've heard you talk before, I think you're only at 3. So that's your initial entry plus 2 scale-ins for a
right.
total of 3 entries, but 2 scale-ins. So that'd be the equivalent of like what I do: 1 fast speed line, 3 at the slow speed line, and then like in my case 12 at the you know, 20 period moving average. So you're saying within 2 scale-ins, usually your trade works, and by then you know it's working or it's not.
Yeah, and a lot of times, I mean, a lot of times I won't even enter the trade until the slow speed line. I mean, it really just kind of depends on what the price looks like, and I
Well,
mean,
and that's a good point. See, to me, the slow speed line is a more conservative entry in the speed line continuation trades. You can either enter at the fast speed line, which of course is the more aggressive version of the speed line continuation trade, or the slow speed line, which is the more conservative. And that's something I wanted to drive home to people today, that even within the conservative aggressive trade, there's more conservative ways to attack that entry. The most aggressive way is taking an entry right there by the fast speed line. The more conservative method of the two, would be to enter it at the slow speed line, because 2 reasons, gang. 2 reasons. Number one, well, I guess the biggest reason is right here. Your distance is now, in this case, like 5 ticks, 6 ticks less. So it's just that much less ground that's got to be covered to a more meaningful support level. Okay, and second of all, then like in my case, I'm willing to be more aggressive. 1 contract here, 3 contracts here. Well, now I've got 4 contracts up there instead of 1 contract, which is very easy to bring down very quickly. And we're going to go ahead and show that. In fact, let's just do that right now. This is approximately $1.2718, and the support level is right down there at $1.27. So 18 ticks. That's a healthy amount of ground to cover. Let's go ahead and pull over our handy dandy calculator. Okay. Again, courtesy of Paul, but we had lots of great people that gave us some really great calculators there. So $1.2718. Okay, this is a great tool for learning and understanding scaling. So I do my initial entry at $1.2718. Can everybody see this okay? Is this coming up all right on the screen? Excellent, because I don't want to take the whole screen, because I want to be able to kind of, show the different parts. Excellent. So $1.2718, I do my initial entry. How many? I usually want to get down within about 3 ticks of the next support level, gang. How many contracts is it going to take me to get down to within 3 ticks? So in other words, basically get me down about 15 ticks lower here. How many do you think? Everybody type their answer. Don't overthink it. Just tell me what you think. 1 contract, 10 contracts, 13, 15? How many contracts will it take to get me down? That we know the next support level down below 127.18 is 127. So how many contracts is it going to take me to get down there within 3 ticks? So basically down to 127.03. All right. Well, I'm seeing a lot of answers. Let me go ahead and start with the lowest number I see, which is 3 contracts. So I'm going to add 3 contracts in here. Guess what, gang? For those of you that typed in 10 contracts, it turns out that I can get within 5 ticks actually at 3 contracts. That's a lot less scary, isn't it? once people realize, the amount of contracts it takes, you can cover 18 ticks and get it within 5 ticks of your support level, okay, pretty quickly. Let's go up to the next highest number I saw, which was 5 contracts. There it is, gang. There it is. So bottom line is, within 5 contracts, I can cover 18 ticks and get me down to within 3 ticks of my support. Why is that important? Because that means with 6 contracts, people don't realize that. They're like, oh my God. Exactly. It reduces your fear. Knowing in advance what it takes to scale can really, if it meets your risk parameters, your registered financial representative, what you talk with your broker, if it meets all of those criteria, knowing what the distances are and how few or how many contracts it takes can really take the fear out of scaling if you know what you're doing. Okay? So here you can see only 5 contracts will get you down within 3 ticks. So basically, this market could drop from way up here in around the $27.25, $27.40 area, went all the way up to there, turns around, comes down here. I got round numbers support and moving average support right down there in the $1.27 area. Okay, so am I going to expect at least a 3-tick bounce or more off of that area on this rising 15-minute chart? You better believe I am. Sure I am. So for me to put 5 contracts in there, I'm going to go ahead and be expecting then an opportunity to either A, go ahead and scratch the trade, or B, actually make money on it. But either way, it's going to go ahead and, give me the, there you go, exactly, aha moment for a couple of you. So the point is to understand this and to have this ability to run some scenarios, all right? Now, let's go ahead and change this a little bit. No, it's not right now, Chris. Let's go ahead and run the scenarios a little bit differently. That's not so threatening, is it? A whole bunch of you are like, oh, wow, that's cool. You didn't realize. You're like, oh, my God, some of you are putting 10, 15 plus contracts out here. I mean, actually, so it's just a lot of you thought it takes a lot more, but it doesn't, off of your initial entry. Now, let's change the scenario, though. Let's change the scenario. This time, so this is why I want you to understand how much difference this can make. This time, we're going to do 1 contract at 127.25, the fast speed line. Everybody with me? We're going to go ahead and do 1 contract at 127.25. Oops. All right. Now, this time, it didn't work where I wanted it to work. Okay? So now, then basically, you've got the 4-tick level, or the 5-tick level, the speed lines. It pulled back there from the 127.25 area down to around 127.19. So we'll go ahead then. The next 3 contracts, because one of the things I like to use is like a 1, 3, and 3 and 3 method. So let's go ahead and do this. At 119, I'm going to add 3 more contracts. Now, that gets my cost basis down here to around the 127.21 level. But, now, guess what, gang? This time, though, I've now got 4 contracts out there. Now, how many contracts is it going to take to get down within 3 ticks of the 127 level? How many do you think? I got 4 contracts in at a cost basis now of 127.21. How many is it going to take to get me down here within 3 ticks of 127? Okay, I'm seeing all sorts of numbers here. Let's go ahead and start with the first one. which is exactly what I want to highlight. One person said 3. Nope. That only gets you within 12 ticks. How about 4 contracts? Nope. That only gets you within 10 ticks. Okay. 6? Nope. Getting warmer, but no. 8? Nope. 10? Warmer, but no. 12? Nope. 14? Nope. 16? Getting warm. 18? Bummer. Nope. 20? There it is. Now, if I'm going to do 1 and 4 at such high levels, and then I need to cover 18 ticks below, now I'm going to need 20 contracts at those levels. Okay? So you need to go ahead. Every person needs to understand. See the difference here? If you did, and this is why I'm saying to you, and this is what Lance got, and that many of you need to still get. Okay? Lance understood it's a lot different to add 1 contract in, okay, within proximity of my rising support versus going ahead and adding 1 in and then adding another 3 in and then going ahead and sitting there trying to go ahead and make it work down at the 127 level. So here, 1 contract can very easily be brought down. It only took 5 contracts to go ahead and bring it right down there. But if you got too cocky and you got too aggressive too early, you may run out of bullets. Now, Lance wouldn't have run out of bullets in this case. He still would have had his bullets. He could have gone ahead and done that. But he's saying, Rob, I don't want to. I'm still going ahead and making that jump from conservative to conservative aggressive trader. And he's doing a great job with it, but he's still being a little bit more conservative. So you heard him say that he'll actually look at a conservative aggressive trade a little bit more conservatively, and he'll actually take an initial entry at like the slow speed line and gauge how much distance he has to that rising 20 period moving average. Is this making sense? Does everybody understand this? So understanding your distances and what that means to you with your scaling is huge, because 1 contract that has to cover 18 ticks means your backup is 5 contracts versus going ahead and getting cute with it and trying to go and add too many too quickly as a small contract trader. So this needs to go ahead, and this means, you can start to understand your limitations, asking yourself how many contracts you can trade financially, and more importantly, how many contracts you can trade psychologically. Okay? 5 contracts brings you right down there. But I've seen people literally, like me, you guys see, I could put on a 500 or 1,000 contract trade, and I'll be talking to you the same way that I'm talking to you right now. You wouldn't even know I'm in, a big contract trade. But I've literally seen people with 2 contracts on, 2 contracts, and they get clammy, they get like white, and they start sweating, and they get to the point where they can barely breathe and they can't talk at all. I've seen it firsthand right before my eyes. Okay? And Paul says, I feel it is critical to understand the impact on cost basis for the small contract trader. This is what really separates large from small, using the exact same methods we learn here. Okay? So here you've gone ahead and that's really the case. Lance, what you're saying is you're applying my methods here. You just go ahead and sit there and then you've gone and applied this now. You've applied my work. It's how come and how you're using my work successfully. First, you focused on more conservative entries. Let's back up the fort for a minute. You focused on more conservative entries to build your account. Then you went ahead and you started going and taking more aggressive trades once you built your account after understanding the impacts of what each kind of scale-in will do to you. And even now, as you've said, you've gone ahead and focused on taking more conservative aggressive trades. You're very judicious in your scaling so that in the end it takes you a handful of contracts to move 18 ticks of ground versus going in and getting silly like a lot of people do. They get a little size under their belt. Suddenly they want to go ahead and take 5, 6 contracts up at really tight ranges. Then they got to bring all that down, and now suddenly it's going to take 25 contracts or whatever. And they're not prepared for this, but they certainly wouldn't have had a problem with 5 contracts to bring it down if they had been patient and they'd focus on where the key support and resistance levels are. And I think that what we're demonstrating, what you shared here, is that you're kind of taking, as Paul's saying, some of the aggressive out of the conservative aggressive trade by focusing on that initial entry and being more judicious rather than throwing a whole bunch of bullets and a whole bunch of dirt on the wall earlier. You're going ahead and taking very selective initial entries and then focusing on where that key support is down below so that you can enter more like this, more confidently and comfortably. That's worked for you than more aggressively and having to sweat bullets and get 20 contracts in there. Even though you could afford to do 20 contracts, you've earned that right with being with me, but you're focusing a little bit more scientifically on those initial entries. Would that be an accurate summation of where you're at?
Yeah, because I mean, when I first tried to start doing the more conservative aggressive trades, I mean, I didn't really pay. I paid attention to the scaling, but I didn't really realize, because I was starting with 2 contracts, and I didn't really realize how much it really took to get your cost basis down to that 5-minute chart until you actually have to do it. And of course now, I mean, that's all. I mean, I'll only start with 1 now at this point. I mean, so it's I learned that lesson because, like I said, that's the only loss I've taken in the last 2 months was when I did that on a conservative aggressive trade.
And so now, if you started with 2 on the conservative aggressive trade, you now need to go up to 10. Now you got 12 contracts instead of 6, twice as much. So here again, you're hearing Lance analyze and adjust his risk. So this is allowing him to take more aggressive entries, giving him more opportunities, but then he's still adjusting his risk accordingly. Okay. So this is, huge opportunities. Okay. If people understand, and some people, the problem with scaling in the first place is some people don't even know how to scale. People will they'll have 10 contracts today. Here's what a lot of people do, and I've seen this. Some of you in this room are guilty of this. You have 10 contracts to your name. You'll go ahead and you'll put 6 contracts in at that speed line. So let's just go ahead and mimic that. You'll take 6 of your contracts up there and put them up there at the slow speed line. Then you'll throw another 3 contracts in at like the fast speed line. Okay, whoops, I meant this to be a 6. Now guess what? When you guys go ahead and get down there to that rising support, you've got your 1 contract left to your name at the even area. What is that 1 contract going to do? Right now your cost basis is at 127.23. You put 6 in here, 3 in here. Now you got 1 contract left. That 1 contract moved it to only down 2 ticks. Basically, nothing. Okay? That's how a lot of people scale. They determine they've got X number of bullets, they throw a whole bunch of them in at the top, and then have nothing at the bottom. Okay? So it's kind of a reverse pyramid, effectively. Now, I can't tell you guys where and how you need to scale, but I'll tell you right now, for Rob Hoffman, this kind of scaling won't work. Where I go in really heavy, okay, for me, and then going down to 1 here. So like, what would that be for me? Equivalent of like 1,000 contracts up here, and then like, well, I guess 1 contract down here, okay? Um, that's just not going to work, okay? So the reality is you need to think about where how many bullets you have, and then go ahead and put that in relation to the distances. The distances, okay? That's really important. And so using a tool, along the lines of this can help you practice what you're doing. And again, is this the holy grail? No. But you've seen Rob Hoffman not make a losing trade for almost 9 months now, utilizing some of these techniques. One of the things that I try to do, remember, is go ahead and wait for that good entry, that feverish activity, so that usually most of my trades are going to work out within 20 ticks. Well, why is that important to me? Because I like this, for me personally, Rob Hoffman, I like, this kind of scale. Let's go ahead and, since we've been talking about the 127 area, just, for giggles here, let's go ahead and do 127. Oops, that's not going to work. 127.30. Okay. And not sure what I did there. I think I made a boo-boo. Boy, I'm really getting the decimal in here wrong. If only we could get the decimal correct. There we go. All right, now we're back to good. So I was thinking of the yen because we were looking at the yen earlier and such. So having a little mental snap there. So what I like to do is go ahead and do it the opposite way. 127.30, 1 contract to start, then 10 ticks later, do a 3. So it's basically a 1, 3, and 3 type scenario. So right here, now you see that by doing, and this is 1, 3, and 10. Keep that in mind. One contract initially, 3 times the number of contracts on the second entry, and then every 10 ticks more, 3 times the total number of contracts. So 1 plus 1 here, we move 10 ticks down, add 3 more in. You see that gets me within 3 ticks of the current support. Now, what happens if it drops down another 10 ticks? All right, now I want to take 1 plus 3 times 3. So that's 4 times 3. Well, guess what? 12 gets me within plus 3. So now I can drop 20 ticks there and go ahead and get within 3 ticks. So if I've gone ahead and done a good job of analyzing where I'm going to drop within 20 ticks, this strategy usually goes ahead and will clean that up pretty fast, which is why, how many contracts do you normally see me trade up to? Well, as we already know, a lot of my trades just work out right away, right? We saw that Friday, for instance. I took 6 1-contract trades for $550. They just boom, 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 right? I took like 6-tick, 8-tick, 10-tick profits on those trades. $550 later, everybody's, having a field day with my trading there. Um, so the bottom line is that I wanted to go ahead and kind of share with you. This is my strategy. Now, how does this work, gang? Who can tell me what 10 ticks down below at $1.27? So it's a 30 tick pullback. How many contracts am I going to put in down there? Who can tell me? Oh, yeah, you guys are all over it. Beautiful. Nice job, Brian. Everybody who answered 48, you did it right. 1 plus 3 plus 12 is 16. 16 times 3 is 48, and I'll bet you 48 contracts will get me to 127.03. Ta-da! There you go. Okay? So I could drop 30 ticks against my price. Okay? Pretty neat, huh? Well, 10 ticks is 2.5 points there on the S&Ps, Murad. Okay? So the bottom line is here then, and so Murad, you want to do it whatever is comfortable for you. So you want to try this kind of thing, like in the S&P, see how that goes and works, see what level works for you. But basically here, like the 112, so 2.5, 2.5 points. 10 ticks is 2.5 points. So 2.5 points is about the 109.50 level. If I go in at 112, add 3. Okay, now this doesn't round up to the quarter, but you can see that would be within right about 3 ticks. See it? This doesn't round properly. Should round up or round it there, which would be 3 ticks, 1, 2, 3, to about 10, 110.25. So 10 ticks is 2.5 points on the S&Ps. Okay. All right. Now the next example. Here's the short. Okay. So now here's the short. It's going to be the same thing, gang. What happens if it goes up 10 ticks against me as the example that I gave you? Just talking about the strategy that I kind of like to use. Okay, so that's all we're talking about here. One of these strategies that I like to use. I'm not saying you should use it. I'm saying learn from this, grow with it, and see if any of these things work for you. Okay, Robert K., I'm not going and telling you anything. Let me be clear. This has to go ahead and meet your risk trading plan. So this is something you're going to want to experiment with. But when you guys always wonder how come my trades work out so great with a minimal amount of scaling, most of my trades end within 20 contracts or less, and many of them end within 1 to 10 contracts. Well, now you can see why. Because it doesn't take much. If I'm accurate within 20 ticks, I can get done a lot quicker. Okay, and I really got to be off on my trade to go ahead and be doing bigger size. Okay, so good. I'm glad you like that. Now let me go ahead and just show the exact opposite. Yeah, the question was about short side. It's the same thing, gang. If I did one contract short at 127.30. What's going to happen? How many am I going to put in there at 127.40 using this example that I talked about? Oh, you guys are too easy. You're right, 3. There it is, within a couple of ticks. Okay. All right, what happens if it goes up there to the 50 level? That's right. There it is, within the 3 ticks. All right, what happens if it goes to the 60 level? That's right. within 3 ticks. So what this is doing, gang, it's allowing you to understand what your limitations are, okay, in relation to your contract size, and more importantly, where the key support and resistance levels are. So as we saw, for a person that can comfortably trade 6 contracts, okay, for a person that can comfortably trade 6 contracts here, then, do an initial entry at a slow speed line, knowing that the backup is about approximately 18 ticks away if it holds the rising 15-minute, 20-period moving average. Then they could do one here. If it works right away, like this trade did, great. If it doesn't, and it comes down to the support, then if they're comfortable, they could put their 5 contracts in there. And if it bounces up even 3 ticks, they could choose to scratch, or they could take a profit if it pops back up to the 127.06 level. You take 3 ticks. 127.09 level, you could take 5 ticks. Okay, so basically, these are different options then for you um, to go ahead and look at for your risk trading plans. I'm not going to give you the exact answer. You do see, I've given you some examples of what works for me, what I like to do. But part of that depends. Are you trading 1 contract, 3? And again, this whole issue of scaling isn't really an issue until you've done what Lance has done. And like I said, I'm not giving individual trading advice to anybody here. I'm just giving general trading ideas. Everybody needs to consult their registered financial representative and advisor. But everybody always wonders, wow, Rob, how do you make this happen? How do you do this? I'm watching you, but I'm still trying to learn. And so hopefully what you're learning today will go ahead and allow you to Robert K., this is somebody else's work, so I wouldn't really want to do that. We'll go ahead and we'll see about maybe getting it out there for people, either the formula or the chart publicly. But the point is that well, okay, why would you do that, Jack? How did you miss that? Did you walk away, go to the bathroom, or what happened to cause you to miss that level? Okay, so then go ahead and play with that. Okay, what you need to go ahead and do is you'll have to experiment with that. If you did 1 contract here, let's take the rest of these off. Now you skipped a whole level for some reason. You're saying because you blinked. All right, let's go ahead and see what it takes. Now we already kind of ran this drill. What is it going to take to get down within 3 ticks? Nope, not that. 6 ticks. To cover double the space will take double what the initial entry would have been, assuming 10 additional ticks. Okay, if you go 10 ticks beyond, it's going to be double. So if normally it'd be 1 and 3, if you go double the space because you missed a tick, or you missed a whole 10 ticks, it would actually be 6 here. See what I'm saying? To get you within that 3. But again, check these on your own formulas. Check these on your own sheets. That's why, like I said, that's why I haven't put this out. I haven't put a disclaimer on this. These are ideas for people to go ahead and work with, not absolutes. You need to go ahead and, like I said, this has worked for me. You guys have been watching me do this in the live trading room. Haven't had a losing trade in almost 9 months, so obviously for me, I like it. Yeah, this is for informational purposes only. There you go, JJ. So that's why I haven't put this out publicly for you guys to download yet, because I want to make sure it's okay with the people who put those out there for us to look at, and also I want to put actual disclaimers on there, because people like to blame other people for their own mistakes, and I'm not going to get blamed for anybody else. But with that being said, so I hope that was kind of you know, instrumental. The key is, and you've heard Lance talk about this now today, he'll do at the conservative aggressive entries, he just does one contract and then he saves his bullets. Well, thank you. Thank you very much. I appreciate it. I'm glad you really like that. Um, and great. It looks like a lot of you are really happy to kind of see that and put. And now maybe you understand from you know, Lance's perspective how he used to just focus on certain type of trade, the retracement trades, but now he used that to build up his account, in part to go ahead then and help him be able to trade these more aggressive trades. But even then, he's going ahead and focusing on the initial entry being more conservative, so that you saw it only takes a handful of contracts, 5 contracts, to cover 18 ticks to get him down within that 3-tick level. And so that whole idea looks like a lot of you, eye-opening, good stuff, awesome info, changing my idea about scaling, most helpful, excellent, I needed that. Rob, thank you, that's an eye-opener. Worth the 7 hours. I hope it wasn't 7 hours. Was it really? No, can't be. Well, I guess technically physical time, but with the break, it's got to be about 6 hours, I think, of time there, approximately. And so I hope that, thank you very much for all those compliments. But you know what? Remember, it's not just me that's here today. It's our friend Lance. And Lance has been a good friend of you, to all of you. He's gone ahead. He is a trader just like each and every one of you. He went ahead and he talked about his journey. So we want to make sure that we say a special thank you to Lance. Of course, the trend trading video you heard Lance talk about, that's a favorite of his, as he is working on his scaling ideas and his entry ideas. And of course, we talked then about these trades a little bit. I want to make sure you guys heard about those enough between either me and Lance. I want to make sure we covered those, a couple of those ideas. And then now what you can do is take your simulators and practice a couple of those speed line continuation trades, trend continuation trades, retracement trades, and go ahead and see what they mean to you on a simulator. And of course, like using tools like this calculator, for instance, to help you really understand the impact of this kind of trading. And this, like I said, Lance has figured it out and continues to have his own new types of growing pains that I help him with and help all of you with. And Lance is about 150 thank yous here. So everybody wanted to thank you, but and like I said, I do appreciate you taking the time to sit here and let people, Lance, hear from you as a real trader going through it, because people think I've lost touch with this, even though, as you know, that's not true, because I've helped you and I've helped many people here. I know what it's like to go through these growth and learning curves very intimately, but at the same time, so in the end, seeing is believing. It kind of helps a person like you to go ahead and express your thoughts and in your growth and in your path. So I really appreciate you taking the time to let people hear directly from you how you've gone through all of this journey that we've been talking about today. All the different things, your background, the instruments you trade, the times you trade, your perspectives on account setups and management, discipline, trader growth, your setups, entries, exits, stops, scaling. Okay, I want to really thank you for going ahead and sharing that with our gang today. So I'd like for you actually to kind of have the final word here and be able to say whatever you want to say to the gang as we get ready to close out. I think it's only appropriate. So thank you from me to you, Lance, and I'm going to let you say goodbye to our friends and family here.
Well, I really appreciate the opportunity to be here, and it's great to be able to help in any way that I can. You've helped me so much, and also just to help anyone that's going through these growth pains, that they can avoid any bad situations, is worth the time, just so somebody doesn't have to go through the same things if they'll just listen and be patient. And that's really about it. I really thank you for letting me be here and being a part of this.
Well, thank you, and of course, as a long-term member of my family now, I know you're on the annual thing, so you're going to be around, and I don't think you're going anywhere even after a year anyway. So, I really do appreciate your time today, Lance. Like I said, you didn't have to do this. There's lots of people that have been here a lot longer than you, but they're too nervous to speak on the microphone, or they kind of their money issues they keep very personal and intimate. So they do want to get specific. You're willing to share your time and go ahead and share, some very intimate details about yourself, up to and inclusive of showing us your picture of Paris, and we thank you for doing that, and thank her for letting you have some fun with us today as well. So a lot of people saying thank you, and for me as well, thanks, gang. I appreciate it. So tomorrow morning, let's go ahead and knock them dead. And I'm going to look forward to seeing each and every one of you. Like I said, the room will be open here in a couple hours for the overnight session. And I will look forward to seeing you, of course, personally tomorrow morning at 8:15 Eastern. And thanks a lot for taking the time to be here all day with us. And Lance, again, thanks to you. So good night to all of you. Take care, and I'm looking forward to seeing you in the morning. Let's do it all over again. Thanks, everybody. Bye-bye.